swing charts will be pointing up and I'll be buying, but that to me is a very low probability scenario. There's more risk to me to the downside. And look, one of the things here that I think is going to provide a huge amount of resistance in this market is that nice big gap. All right, so that nice big massive gap down there, you know, you'd really have to see that gap get closed before you could get really confident about what this market's doing. Now, similar sort of scenario, if we go and take a look at our overseas markets, the S&P 500, you know, we can see that it's actually holding the same top, which was the 11th of January. It's had that congestion. We were sort of looking at about the 19th there. It's broken away. And one of the things, remember, you know, you probably, you know, have it sort of recorded in your brain, waking up each night screaming, you know, from dreams of ultimate Gann coaching. But you can remember I was pretty vocal when I said if it breaks through the 1121 point, 1586.50 I think is the top, yeah, and then I'll move it, and 665.70 is the low. So that is at 1126. It doesn't make sense, I don't think. Let me check my numbers. Yep, that's right. Maybe the top's wrong. Yeah, the top's wrong. 1586.50. No, there we go. Top's right. So yeah, 1126. Sorry, I kept thinking 1121, but it's 1126.1. So that's where the one comes in. So I think, you know, you guys were pretty confident or pretty strong on the fact that I said if it gets back underneath that 50%, it's going to get walloped. I'm comfortable to say that that's officially a walloping. And you know, the market broke down there. There was even a little sort of scenario there. See how it's broken through. You know, once again, I don't know how many of you are trading the S&P 500. The fact that it broke through that swing bottom and also closed on its low there, that was actually a short to close the signal. All right, so if you're hoping for an entry that was just a lower swing top, it really wasn't that easy. The fact that it had busted through that swing bottom there and underneath that 1126 bit, that was enough to go short the close, in my humble opinion. Next day market continued to tank, little inside day, down day, still a down day even though you had an open close reversal, big outside day where the market tried hard, but as you can see, real subtle little double top here, okay, over a small period, but market holding there, subtle double top, and closed pretty much in the low third of its range again, so still looking rather weak. And you know, the market's continued down there. We've got a little inside day, so hard range to trade if you were just waiting for a lower top. You could have, I guess, used the top on the outside day, but which would have you in and just behind at the moment, I guess. But you know, we'll see what comes from there. Now, I will caution everybody to suggest that, you know, what you're going to start to hear a lot of in the media is that this is just a pullback. If it starts to get going, there's nothing serious about it. And it really, in a technical sense, you could argue it's only just under the 12.5% point. But from my mind, you know, that 50% level is something that you could definitely see this market doing in a you know, not necessarily a huge amount of time. If it's you know, starts to get any of this sort of stuff going, you know, like it was back there, you could find that we get going. Now, one thing that I want to share with you from a fundamental perspective, which, you know, I don't think anyone's going to, you know, be challenged by, is that something that, and actually the idea came to me from talking to people who are coming new into trading but have obviously been investors, and there's a lot of people who didn't do anything in 07 and 08 and regretted it, and I've obviously said, oh, we got out of jail 2009. If the markets, I think, because of the way people's psychology is if the market does start to get even more sold down, I think you'll find people will be quicker to sell this time than what they were last time. I think you'll find that second wave of panic. You know, everyone will be like, is this 07, 08 again? And so what you'll find is a lot of people will dump stock. So you could get a fairly decent acceleration into a down move if that's correct. But like all things, could go up, and if that does, well then, you know, you trade it accordingly. But I'm just trying to think of the psychology of the investor out there who didn't do anything in 07 and 08, who's holding a lot of shares and then sees, you know, the markets capitulate again. I think they'll be a little bit quicker to you know, to toss them out, and you know, there'll be the perennial bulls that'll be, you know, buying because it's cheap, and, you know, my grandkids will be able to, you know, retire and never have a job, but I'll have to keep working 90 hours a week as my portfolio. I'll keep buying on the way down. I work so I can buy shares cheaper than what I bought them for last week, and just hope that they recover in the time that I'm alive to enjoy them. So there's some views, I guess, on our, you know, major index markets, I guess, that are worthwhile noting. Interesting to note as well, I won't do anything too much tonight on commodities, but obviously oil and gold are interesting. The US dollar has really undergone a little bit of strength. I think a lot of people are finally seeing how potentially fundamentally undervalued the US dollar was, and I think the return to safety, bonds in the US dollar perceived as safety, China's definitely pulling back with the amount of credit that it's allowing, so therefore the US dollar starts to become a bit more attractive. That will be bearish to commodity pricing, so including gold. So if the US dollar continues to remain strong and get stronger, you'll expect to flow on in not only oil, but your agricultural products, gold, the metals, and all of those sorts of things as well. So keep an eye on that. All right, so can I throw it out to you guys just, at this point, just draw a line in the sand based upon that? We're going to take a look at the Aussie and Newcrest in just a second, but based upon just that view on what we've talked about on the indexes, do you feel somewhat equipped to be able to, I know they're not markets that we've picked on specifically, but I know a lot of you are trading the indexes, etc. I'd be interested to know who is a bull, who is a bear, whether whether everything's going to be good in a week and I'm going to look silly, or not that I'm claiming it as a forecast, but that's just my analysis tells me that, I think a short-term rally in the next week or so will definitely be followed by some more selling. So, all right, so Ashley and Linda, they tipped their hats, all right. So I've got two friends. Bear tools are out, fantastic. I like that from Richard. I'm short and primed to be shorter. I like that. I might use that. Bear hat and coat on, fantastic, guys. All right, well, not for any reason of ego. I don't necessarily want to be right from the, I don't like seeing, people's money get whittled away and all of those sorts of things. But it's a case of, I can't save everybody, and I just don't. I want you guys as a group to, if we catch up in 12 months from now, to say, yeah, look, we're really on top of that, and we didn't get buried, or we didn't, we managed to live through it and make a few bob along the way. So hopefully, Goldilocks, here I go. All right. So I think everybody's of, in a similar sort of view. Well, unless the silent bulls, there's a few that didn't respond, but I'll assume that either the keys aren't working on their keyboard, or they want to be silent bulls. All right. So what I want to do is take a quick look at Newcrest Mining and the Aussie dollar. What we'll do first is take a look at the Aussie, and what I'm going to do is Elizabeth's a bear long term. That's okay. I'm going to take a look at the Aussie dollar and show you that little intraday chart. So let me jump into my platform. And I'm just jumping in here, so hopefully you can see, just using the Options Express real-time platform. This is the, I'll zoom up here. This was the announcement at 2:30 today, Sydney time, where they announced that they were keeping rates on hold. So that little red line was the previous day's close. So it closed yesterday at 88.7 US cents, okay? And that's a 30-minute bar chart. Now, if I actually drill this down, I can take it down to being a 1-minute chart, and it'll just reload that data. And what you'll see is that, I'm just going to zoom in here. This is just phenomenal. This is the sort of stuff that currencies do when they get a bit silly, or markets in general, is that that's a 1-minute bar chart. Okay, so as you can see, that as soon as that announcement was hit, which was right on 21:30, which is obviously the time in New York or Chicago or wherever, probably Chicago, that's where currencies are traded. In 1 minute, it opened at, so where did it open? 8886, and then load at 8790. So that's about, I'm not bright enough to do that. 8886 and 8875. 8886 5. It's working out how many ticks there were in between. Make sure I get the numbers right here. 8790. Probably more than that. 8886 8790. So it's about 96 ticks. All right. So if you go back and do your yeah, thanks, Graham. I just didn't look right. It looked bigger. So about about a whole cent's movement in 1 minute on that market. And as you can see, since then it's pretty much gone sideways. But that's pretty much what the market had obviously priced in as a 25 basis. Yeah, it's on the screen, is it? There you go. See, I like this electronic stuff. There it is too. Thanks, Graham. I'm learning something new every day. This trading thing's, I reckon I've got a future. So yeah, it's moved about 1 cent in a minute, which I find is just, just massive. So that was of interest to note. So let me just jump out of here and we'll jump back into profit source. But that's what happens when you price the have I still got you? Yep, I've still got you. Sorry, I thought I'd lost you for a second there. When you get in the wrong way, when you price in interest rate movements or whatever, and they don't always come together. So let's take a look at the Aussie. When we last got together, we were in a scenario where we're on about the 19th. So we talked about that being a top. Obviously, we can squared out with little double top, 19 days down, 19 days up. Obviously, all of those things have been discussed in a fair amount of depth. Little 50% run up. obviously the market started to unfold from there, and you know, big sell-off on that particular day there, cleared out all of those lows, and then continued to keep going. So the first lower top, or the first ABC, would have actually got you in, and you know, obviously profitable. So it reached down to that 75% point before it actually bounced back up to touch that 50. And obviously that's yesterday's bar, so that doesn't take into consideration what would have been the sell-off again today. So you know, it's back trading. If I check no, it's fallen over. That was what was the problem. I'm just going to open up my platform again. Yeah, isn't it right, Wayne? It just goes to show, you know. Look, I thought it was too. So you know, I'm not going to claim, you know, some great pre-science and say, yeah, I didn't think they were going to, you know, I thought they'd hold. I thought they were going to raise them as well. But apparently, it'll come out in the. I'm just logging back in. It'll come out in the minutes from the meeting, where I think because the banks all went higher than the previous rate rise, they've decided to let them know that they're driving the bus and not the banks. But you know, we'll see how long that lasts for. But you know, that being said, you know, not a bad little trade. Market's trading obviously back down towards these levels. Certainly not suggesting that it's the best ABC trade. You're going to find great difficulty holding on that day there, particularly if it's bounced from 75 back up to 50. I guess if you were using the currency style, you'd still be in. You'd still be in the trade. You'd be behind the 50% with a view of getting to 100. But that, you know, we were pretty tight on the fact that being a top. So if you'd actually got short as it cleared out those bottoms or whatever, you're talking a good sort of 200-300 ticks there. And that alone, you know, just reminding myself, what am I doing there? Going to our future specs, $10 a tick, you know, a couple of hundred ticks there. There's $2,000 a contract. You know, thanks for playing. So, you know, certainly that run I think was one that probably, you know, the Aussie dollar's been eluding us for a bit of a setup. But I think we know that from what our studies of the Aussie dollar tells us, is that we need to be patient for our setups. But when they do come along, I think it's worthwhile, you know, getting on top of them. And they've certainly given a nice little run here. Here's one of the things I guess that David really stressed, you know, particularly things like through the master forecasting course. If I just put a one-day swing overlay on that chart, you'll see that had you got short off the so okay, Linda's saying the day it first hit the 50%, it retraced to take me out. Okay, sure. Is that on just the standard ABC trade, Linda, or is that on the run on the way down? So if it's on the ABC trade, okay, great. That's, well, not great, but thank you. I guess getting back to what we know about the Aussie dollar is that it does help for us to be able to, if we can get a view that was a strong top, getting away, you know, short the openers on the what's the date there? Short the openers on the 20th, maybe as it broke out through those lows, and then just trailing stops behind swing tops. So at this stage, had we got short somewhere around this area up to the top here, trailing, you know, just behind swing tops. David used to, obviously with the Swiss franc, because currencies can move so much through the session, like Linda's found, obviously with that ABC trade, you know, it's touched 50%, and it's probably, you know, touched that 50%, and then it's, you know, probably come back enough through the day. I'd have to say that it's getting to the point where, you know, you've got to be a bit braver, particularly in currency markets and like the Aussie dollar, as far as placing stops, because, you know, going just behind 50s and stuff like that is probably going to see you stopped out more often than not. So I'm just having a read of a post here. Okay, thanks, Darren. I appreciate that. Good stuff. All right, so just reading about some of Darren's interesting times in the Aussie dollar, just with stops and things like that. But I'd say in a run like that, if we could have, you know, got in somewhere close to this top and then just trailed stops behind swing tops in this case, and then maybe added to your position as that ABC came along, I think you'll find it's all happy days. One thing I'd have to say is that I think this low here, which is what at about, you know, 86, 87 cents, that's very much in the reckoning, I think, in the near future. And I guess I'll come back, and I don't want to make this a currency fundamentals lesson, but one of the things that we're seeing at the moment is we're seeing the Aussie dollar is seen as a speculative currency. It always has been, mainly because of our higher interest rates than, say, the United States. It's been a good place to buy Aussie dollars and invest in our banking system here and receive a higher rate of interest. Since commodities, or since the US dollars got a little bit stronger, and since commodities have come off, obviously when commodities become weaker in price, the Aussie dollar becomes less critical for many of the players in the commodity environment, and so therefore they tend to tip out of the Aussie dollar and move back into other markets. So if we are going to see a continuation or a continued weakness in commodities, we're likely to see a continued weakness in the Aussie dollar, purely because there's, as I said, a lot of speculative money in there rather than risk aversion or flight to safety money. It's generally speculative money, and so what you'll probably find is you'll see that that continue on. And I do think that potential for a little double bottom there does exist. So when we put together some stuff, it'll be now in a couple of weeks when we do the Aussie dollar forecast. We may see the market pass there, and we'll hopefully come up with a little bit of a date to watch. But certainly been what I thought was a pretty tradable run. Certainly a lot easier than this move here, because we know that we didn't get a higher bottom through that run there, but at least we did get a short trade through there. And as you can see, the market got a bit congested. Knowing how to trail stops behind swing tops and swing bottoms would have held you in good stead there, particularly if, as we said, got set close to that top. All right, so that's enough for the Aussie at this stage. Let's take a squizzy at Newcrest. Now, we were on the 19th when we were last together, and there was lots of cases for the bull camp, and obviously there was some that were sort of saying, yep, that's a bull, and we had these gaps that we hadn't closed yet. Keep in mind though, and I'll keep coming back, and what I consider stressing important points is that this market hadn't closed that gap. As we saw that $37 area, we know that we traded out of that run into that $37 point. A lot of people did all right out of that, and obviously that big gap that existed, market came back to test it. And looking at it from the Gann retracement perspective, it got back underneath that 50% where we were looking, all right. And I remember saying it looked technically weak, and I sort of remember saying, oh well, we'll see. Some were sort of the view it was bulls. I can't remember if it was tonight's group or tomorrow night's group, but there was some serious bulls in the class, which was fine. But what we found since our time together is obviously we had a nice few gaps on the way down, and the market had given you a way to get short, I guess, in many ways. So obviously in the last few sessions there was a legitimate ABC short trade which made 75%. So I'd be interested to know whether or not that was something you guys were happy to be on, or whether you sort of ignored it or whatever. We're now into a situation where we're sitting very much on that multiple bottoms, and I know a lot of people sort of seeing that $31 area. Sorry, 31 odd dollars. A number of bottoms here. The big key for me going forward in this market will be where we are come that sort of late January, early February date. So I think we're very much based upon the work of I remember Richard, you'd done some work. And we had a good chat about it that night, where we're sort of looking at that February, relationship, and being time by degrees and all of those sorts of things. I think if the market can get into this area here and close this gap, I think you'll definitely see that low there at 28.47 in danger. And then obviously you've got a fair amount of congestion there. So if we just pull apart this particular range where we've seen 08 low up to 09 high. That 50% point getting back down around about those levels, I think would be definitely one to watch, that $28 odd mark, if I, tune that up accordingly. But at the moment, I'm a little bit neutral on this, because, we know that late January and into early February, we've got the 2nd of Feb or the 1st of Feb as being a bottom, has given good reliable turns. Now that sort of stretches out to sometimes, the 2nd, 3rd or 4th of February. So, the conundrum that we face is that, is this going to be what could be I'm just going to draw some lines on the chart. So are we going to see some sort of, little recovery up into maybe that seasonal date, and then we get another lower top going lower? That's a probable case, because obviously we haven't closed that gap. Or are we going to see gold absolutely get melted on tonight, and, maybe we're going to get underneath that level, and then what we might find is it comes back and, gives us a, let's say next few days it does that, comes back and then gives us another lower top on that gap. And so therefore we could call that an ABC short, and then it's time to go short maybe into that 50% area. So yeah, look, Graham, I tend to agree. I think I think you've picked the sections there in a pretty logical way. So Graham said a small rally, then a third leg. So what we've seen here, this is pure eggs course from Gann. I remember the work that Tim did in September of last year. It's ringing in my ears, where we've seen a big extension, and as he said, around, and they're my numbers. All right, so extension past that 100% point. So we're sort of sitting on that 100, maybe a little rally up, and then another third section to go. But it's a bit hard to be holding on a long-term bullish view on that, particularly if the equity market goes. Gold's starting to look a little bit weak, and how well did that double top come into play now? So you're sort of arguing about that double top. We know that we had some reasons why we had balancing time running into that top. So that was, go back and watch the recordings. But remember, that was that early December top, that was one that we had balanced time and all of those sorts of things. We had some things working for it, and it's funny, I actually found some time frames. So I'm not going to share them all with you tonight, because I'm hoping you guys are going to go out and do some work and find them. But one of the time frames, I'll give you this one that I'm finding is working quite well. I won't tell you where I got it from just yet. I'll show you come next week. But you guys can use this in your work. It's a 405-day time frame. Okay, so as you can see here, I've got a top to what is a pretty good bottom. We can go from bottom to top there at 405 days, and you might be saying, all right, well that's working pretty well, obviously in the current environment, but I can tell you it doesn't come from the current environment. It's been working in the market, previously. So, if I just drop that on there, so you've got, from top to top, you then had from top to bottom, you then had from bottom to top. So the question lies, if I plonk on here in early February, what do I get? Well, we get a potential for a little run up and then a third leg down, like Graham was mentioning, and sort of what Lois was talking about there. So one thing I'd like you guys to do is, I'll just jump out of profit source and come back to you guys. So that we found that 764-day time frame, which has given you some pretty good work to play around with. Once again, I'm quite strong on that time frame. I think it's one of the better ones to be using in News Corp. I've now made a new market for us to follow. Scrap everything we learned on Newcrest. We're now doing News Corp. Okay, just to for the final week. That 405-day time frame would be one that I'd encourage you guys to try and work into your forecast, if that makes sense for the year ahead. So all of those things being equal, I think we're doing quite well. I don't know about you guys, but I'm feeling significantly more comfortable with both of these markets, and they were two markets that I didn't know a lot about before. Our journey together. So as far as the heartbeat of this market, I'm feeling a whole lot more comfortable with where I think it's going, and all of those sorts of things. I hope you're in the same boat too. So so look, rather than pulling apart much more on Newcrest there, I think we've got a bit of an idea. I don't want to sort of share too much of the pseudo forecast. I think you'd be smart to watching early February, which we've talked about earlier, and then the potential for another run down. So let me throw it back to you guys with regards to Newcrest. Questions, comments, or queries, anything you'd like me to take a look at, anything you want to add to the discussion. Because then what I want to get in now is just have a quick chat about the process of forecasting, how we're going to look at our tools, and then actually start that process for you guys to get you off to a running start. And then that'll be us for tonight. Like, it's 8 o'clock now, so I'm not suggesting that's a 10-minute discussion, but we might get away, for about an hour 45 tonight as opposed to 2.5 hours. So before what will be a mammoth last couple of weeks, I fancy they won't be short sessions. So back onto you guys, because obviously I'm interested, because we've had a 2-week break, or it's been 2 weeks since we got together. Was anybody able to get short on Newcrest through that period? Was it a trade you were able to to do something with? Were you sort of tell me what your thoughts were? Were you watching, not watching? Traded the SPY instead? The only acceptable excuse is that you traded oil instead. All right, and that would get you a legitimate late pass or non-detention. But we've had a week away, and I'm keen to get your thoughts as to what you thought was happening in that market during that period, and how you interpreted it and what you did with it. Because I fancy everybody's sitting there now going, that makes absolutely perfect sense. You looked at oil, does that count? All right, that's a half a mark. All right, that probably doesn't quite. No, that doesn't absolve you completely. But the fact that we've had a week away, I kind of be expecting you guys to be throwing questions, thick and fast. And you traded Rio and BHP short, fantastic. All right, Elizabeth, you get a note from the teacher saying you're all okay. So bought some Newcrest puts, fantastic, Ashley. Hopefully that's seen you add a couple of dollars to the account. Okay, yeah, sure, Darren, that's fine. So he's talking about where the bottoms were on Newcrest, and maybe that might have held him out. Okay, that's fine. Graham said keep missing the train. That's okay. Eventually you get the timetable right, and you'll be waiting as it comes along. That's fine. So they're all fine as those comments. It doesn't have to be a case of yes, I made it $1 billion, but I just want to know what your process has been. Is whether it's we had a week off and I didn't look at it, or whether you were kind of keeping in the game. So sorry, Wayne, I've got yours. All right, so Mark got burnt. Sorry about that, Mark. I'll ring up the exchange and see what I can do. All right, I'll let them know that you're one of my guys, and that's not meant to be how it's meant to be. I don't know how much success I'll have, but you never know. Been following the mini S&P, but after waiting, the major was out of town. Like, yeah, okay, when it dropped, that's okay, no problem, Wayne. At least you can sort of in the trenches. That's fine. Yep, Debbie got stopped out on the Aussie dollar. Yep, Graham's on the platform. Good. Stephen was in NZ for holidays. That's all right. Look, holidays, that's also an acceptable excuse. Not going, okay, so Key's saying not going to short when it had fallen for 3 days. Okay, this is the sort of stuff, I'll get to the, Blake and Linda and all that sort of stuff. I'm going to get to you all, and Richard and Neil. I'll come to yours in a second. Key, I want to sort of focus on what you've said. What you're going to start to see is over the coming week, month, year, you're going to start to see a lot of interesting things in markets. And what I mean by that is you're going to get a lot of commentary, you're going to get a lot of news, you're going to get a lot of media. You're going to get a lot of people that tell you it can't go lower. You're going to get a lot of people tell you it can't go higher. You're going to get a lot of people do all of those things. I always go back to, I accepted it had fallen for 3 days and whether or not it was, it looked a little bit overdone. But I think this is now where we're coming back to understand the quality of our setups. That top that's on Newcrest we know is pretty strong. The fact that it had come back and retraced about 50% against that gap at $37, it extended down and then gave you a lower top. I'd have to say that even if you took a trade on those with 50 CFDs or 100 CFDs, you're going to learn so much by just getting in there. So, no one likes a losing trade. I've never met anyone who came up and told me how much they enjoyed it. But what I've got to say is that as we're starting to see these things, don't ever feel, and I know that the words in my ears that are ringing now are Tim's because, he says, Gann says it's never too high that you shouldn't buy the market and never too low that you should sell it. So if everything's looking right, particularly with your time frame stuff, the fact that it might have moved 2 or 3 days and you might be thinking, oh, it's due for a correction, you've got to sit with your plan there and you've got to implement your plan. And the thing in that situation is you could have started small and then added to your position. So all I'm trying to say to you, and just using Key's comments as an example, is that you're going to find there'll be lots of reasons to not trade in the next 6 months. All right, there'll be a lot of reasons where you can sit there and go, do you know what, I think it's gone too far or whatever, only to find that it will go further. So just be careful with sort of coming up with all the reasons not to trade. And it's just more of a case of getting into rhythm with the market and then feeling like you can jump on it. So that's just a bit of food for thought for everybody. So Blake's giving, I'm just reading your comment here now. Okay, no problem, Blake. I'm with you there. So Linda's been doing more work on Aussie dollar than Newcrest. That's fine. Neil had family commitments, so you get a leave pass too, Neil. All right, so Richard's in PDN. That's fine. Fantastic. Okay, so Debbie's saying you went short the mini Dow, but so you're hoping it'll continue to fall. All right, well, we'll hope with you. Okay, so Linda's saying, okay, so it's finding it very hard to know whether a strong top or bottom is in place to support or discount a trade. Oh yeah, I know exactly the feeling there, because you know what, I still have those challenges myself. I still go, is that the real thing? Is that not? So all I can suggest you, going back kind of what I said about what I said to Key's comments there, is that if you are if there's enough there to get you interested, there's certainly enough there to at least have a small position in, and you can always open it up as things go on. It's getting to know these markets, I understand, and you guys are still finding your feet on actually getting your trading smarts. But in certain circumstances, in certain situations, you've just got to be comfortable to follow the what's in front of you and ignore all the noise that's out there. So I'm trying to give you a better answer to that one, Linda, which is there's no real rating or weighting system that you can use. It is just a bit of experience, and I know no one wants to hear that, but it's just a pure case. So worst case scenario at this stage, even if you don't take it as a real trade, you've got to paper trade it. Even if you're going to take it as a real trade, take it as a small trade. And then over time, eventually the confidence will come to know when you should or shouldn't be in. And you don't always get it right, but you should start to get it a bit more right than not. So, but look, thank you to everybody for your comments and sharing. That's all valuable stuff to me. It teaches me a lot about the things that I've been through. It reminds me of what it felt like to when you guys make comments like that. I think at times where I felt the same thing or continue to feel the same thing. So don't ever. That's why I asked the question. It's not that I'm trying to bear your inner trading soul and find all your secrets of whether you've been right or wrong or made money or lost money, but it's about, if I ask the right questions or if you guys give me the right comments, they help me formulate better answers to your questions. Because Noel and I had a really good discussion, just to digress for 2 seconds about the trading tactics class we were in over the weekend. And it's amazing. We had a massive group of new guys, which is always common at the start of the new year, which is great. But the thing is that trying to remember back where they were and not, why don't they understand what an A to B range is, and why don't they just know that that's where your stop goes at C-1 and how to trail stops and all that. So it's always a refreshing reminder for us that, you've got to remember what it's like to start out. And so the questions and things that you've said there are all, I'd have to reaffirm for you, common traits and fears of developing traders. Should I be in? Shouldn't I be in? having your focus taken away, and sometimes it's unavoidable with things in life. So there's no issues there. I'm the first person to admit that or acknowledge that the things that get in the way, particularly family. You love them a lot, but some days they do cause you to pull your hair out. Hence, I have less hair now than I did certainly at the start of last year. But the reality is that you're all asking good questions. Is probably what I want to say, or making the right comments, which is that, you know, how do I firm this up? Or but everything you're getting here is a learning thing. It's an outcome that's coming your way. Just try and get a lesson from it. I always try and ask myself, what's the market trying to teach me here? You know, Darren, some of your comments I think were valuable. That you know, with what you've been finding, and all of that stuff there's a great lesson in there. Just you know, even if you write down a paragraph of what you've learned from it, I think it holds you in good stead. But Linda, I'm going to try and come up with a better answer than what I've just been able to fumble. So knowing whether a strong top or bottom yet and how to discount a trade, that's going to be my challenge over the next week, to come up with a better answer for that. But I just want to say thanks to everybody for sharing their views or their, you know, experiences or what they've been doing, because yeah, absolutely. Well, Lois, I'm going to give us an order of tools, but not which ones are most important. All right. And my order of tools, you'll find when I show you, is nothing particularly space age or scientific. Well, it is a bit scientific, but it's not the secret that everybody's been looking for. I'm absolutely going to give you a run through of which tools to be using in what order and those sorts of things, but it's mainly from a big picture perspective, going from a big picture. And I found that I put this together so I didn't get lost in putting together a forecast. But the question is that I get from everybody, and it's the $1 million question. It's like saying to me in an ABC trade, which is the most important filter? A to B expanding or B to C contracting? And I'm like, well, which market on which day? All right, so for BHP, that might be important. For Rio Tinto, it's not. For Telstra, it doesn't matter. It's like the thermometer. All right, I can tell you that in the majority of cases, unless you're trading time by degrees, when it comes to an ABC trade, the thermometer is potentially the most useless indicator that's out there. It's a good little form reading thing, but as far as from the system testing that we've done, it's not a particularly strong correlation being plus or minus. It's good when you're trading time by degrees, and that's what David's preparing you for. So all I'm going to do is give you a list of what I use to put together a forecast and how to help you firm up a forecast, but then trading is a different story. All right, so Debbie's saying, after having a bit of a break, I'm tending to forget the basics and go back to my old habits. How have you handled this? It's called a big stick and a drawer, where if you break bad habits, you've got to put your hands in the drawer and slam the drawer, and eventually you remember. I guess it's a good question, and I'm going to give you a non-trading analogy or a non-trading solution or example. Many of you know in my prior life to you know, doing what I do now, is that I used to fly planes, and when I was learning to fly, sometimes through having to do study and also having to, you know, earn a few dollars so I could afford to go flying, I would have big breaks between my practical flying components. And it was interesting because my instructor actually liked that, because she said I always came back and I flew better, because I had managed to sort of unlearn, you know, bad habits, and I was far less complicating the situation. So when you come back after a break to trading, it's really about doing the little things well. And this is where having a systematic approach and being able to write things down and just having a checklist. If I was you and you're coming back after a break, I'd definitely put everything through a checklist to say, have I missed something? Because that's easy to do. But getting back into bad habits, you know, you've got to identify what the bad habits are, write them down, and then put them on the wall and say, am I currently exhibiting bad habits? And if that's the case, you know, you can get onto them pretty quickly. I will say this, though, there is actually an upside to coming back and having a break from trading and coming back, because sometimes it does very much clear your head. It all depends how long the break is. I wouldn't say 2 years is a good break. I know that's not what you're suggesting, Debbie, but sometimes even a few days away can be refreshing. All right, well, let's get stuck into this other bit. So once again, thank you for all your good questions. Keep them coming. I'm not cutting them off. I just thought we'd move on. But yeah, everybody's a bit different, and that's my huge challenge. All right, so I'm going to bring up my PowerPoint presentation again. All right, so what we're going to do here is have a wee chat about, not what we've already talked about, constructing a forecast. Okay, so the $1 million question, and here's an interesting thing. It's what forces us to want to be right is two things: ego and financials. And combining finance and ego is generally one of the most dangerous recipes or cocktails you're going to find on the planet. So what you've got to do is you've got to set up a forecast, an ego. That's what I've done already, and then I learned forecasting. You need to set up a forecast with the view that, you know, it's really just giving you a footprint in the market where you're going to look for something to happen, and you know, you're not going to fall in love with it. You're not going to try and suggest that it, you don't sort of write it on put it on the notice board at work and tell everybody, because, you know, often you'll get it wrong initially. So what you want to think about when constructing a forecast is you've got to have a method. And the method will change over time, but it's got to be something that you could explain back to me if I asked you what's your method. If you just say, I open up a chart and start from there, you don't have a method. And that's what I'm trying to give you tonight, is a method to tackle it. Important to recognize here, there's no right or wrong. Okay, so what I'm about to show you and share with you has really got nothing to do with a patented success. It's just about how I developed through trial and error what to include or not include. All right, so what I found the biggest challenge in putting together a forecast was getting all the information in the right order. So I would have all of this really, really good information, but because of how I had put it together, or because of how I'd recorded it in particular, I didn't understand that one thing correlated to another, or I would miss a correlation. I'd forget that, for example, I'd be looking at a 322-day count on oil, and I'd be looking at a 161-day count on oil, and I'd be thinking they're two totally different things. When, getting a calculator out was quick to let me know that twice 161 is 322. So you kind of sometimes feel that you've made 25 really important discoveries, but if you actually do the maths and you see what ones relate to another, once you understand the base part of what we're doing, you'll find that you've probably already worked out sort of 6 or 7 good things, and then these are just 25 parts that make that up. All right, how to avoid getting lost is another big part of this challenge, and that's part of the reason why I want to give you this method. Just so you don't feel that you're getting lost and that you have something to move to next if you get stuck. I'll come back to camera. One thing I've said to people is, if you get into a forecast and you get into a process and you get lost and you feel like you're sort of stuck in the mud, the best thing to do is go back to the beginning, because what you'll actually do is you'll do the start of it a whole lot better. It's like most things, you tend to get very good at doing the first 15 or 20% of it because you have to do it 20 times more, and then it's the stuff towards the end that actually becomes more difficult. But if you ever get lost and you feel like you're in the washing machine, you stop, you basically put all your work to one side, and then you start again in the same process that I'm about to give you, and that will help you continue to refine the process and also the information that you're getting. But if you're finding that you're getting too much information, we really want to funnel this down from a very top-down approach into a date to work with. So, and that's absolutely what I'm trying to sort of relate there, Lois, is you get so much information you don't know what to do with it. So for me, it's very much a case of, I do have an answer to that question, how to avoid getting lost, all right? So as far as the tools and the techniques are concerned, I always commence my work with master time cycles. Now, we've talked about this from a perspective, and here's the reason, because you've got to rate your tools in terms of how big a picture are they. Now, when we're talking master time cycles, we're talking 10-year, 20-year, 30-year, 60-year, 40, 50, 100, 150, 500, if you can get the data. That's the sort of time cycle that we're looking at. And I guess if I just jump out of that, just giving you that one little ticket to start with, if you were to jump back into profit source, and I'll show you very quickly, I'll be looking at, I'll just open up a new chart on Newcrest Mining. We know for a fact that the Aussie dollar falls in the first quarter of this decade, or this year in the decade. We know that we should be looking for that. But I want to know, we've started 2010, simply what happened 10 years ago. So I need to know what the 10-year cycle is telling me. So that means I'm going to go back to 1990. That way. 2000, I can add up. So there's our 2000. So the sort of things I start to do really simply, just zoom that in a little bit clearer. I'm actually going to include that top. Sometimes I go a little bit further either side just to give me an idea of the year. So what I tend to do, just to make it easier, is I go into get this rectangle tool. I start at the start of 2000, which is, well, that's the end of 99. I'm going to include that anyway. I put a box around it, okay, and I go all the way to the end of December. All right, and I'm going to ask myself, all right, well, is that a bullish or a bearish year? Okay, so straight away, and this is what you guys should be doing, is that straight away, all right, there's my arrow going from the start of the year to the end of the year. Well, we'd argue that it was slightly bearish. There was a big bear fall, and then a slight recovery. There was a period of another sideways, or another bearish phase through that sort of third quarter, and then finally we had a strong run towards the end of the year, which was followed off by another sell-off in the first quarter of 2001. So what you'd argue here is that the market was predominantly bearish throughout this year in the market, but you'd argue here very much a trader's market. There was definitely bullish runs that you could have done well out of and bearish runs you could have done well out of. Now, if I'm going to pull apart the areas where I could watch for interesting runs, well, that's the low of the year, and that's the high of the year. Well, isn't that interesting? We've got a January high into an April low. Okay, we then also saw a January high into a late January, early February bottom, followed by a small rally into middle of February, sideways into March before we had a sell-off. So I don't know about you, but this just gets my brain thinking. All right, well, this initial drop here we'll start it here on the start of January. All right, so I'm going to measure that initial range down. I'm actually going to take that ABC pressure points tool. I'm actually going to run it out to where we are in the current market. If I don't move it, there we go. That's very silly of me. So I'm trying to think, in comparison to the run that we've just had on Newcrest Mining, is this something of interest to me? I'm going to use that top horizontal line. Yeah, exactly. That April date's certainly something that we've been talking about in it. Oh, and I've done it again. I will get this right in a second. So as you can see, it's a bit fiddly. All right, so we've seen it obviously move considerably further than 200%, but that we could be using that in many ways as a bit of a first range out, and I could probably plonk it down on the last lower top there, and we're running at about 150%. I could even throw it on the top of that swing top there, which would be point C, or that high, that outside day there, and as you can see, we've run 100%. I'm not surprised that the market is potentially making a little bounce out of there. It's on 100% of that rundown, if we're using that in a first range out sense. And what we're seeing here is that we saw the market run down into a late January low, early February, you could argue, first high bottom. It rallied up. And here's where I'm just getting a bit of a roadmap. It rallied up approximately 50% before it tanked again, okay? So we know to be watching for a little rally that might come up about 50% of that range before it went again. Now, you could argue you just need to know the yearly top and the yearly bottom, but I'd also, if I'm wanting to put together a forecast for this year, that little top there would make sense to know about, and I would also pick on those bottoms there. So what I'm looking at here is a January top, February bottom, February top into an eventual April low, followed by what is a late June top, and obviously a November low in the market. All right, so that's only 1 year. Now, you've also got to look at 15 years. You'd be looking at 5 years. But I'm going to stick this to the 20-year cycle here, so I'm going to go back to 1990. All right, so 1990 as a year. We can see again that it's, just using the rectangle. Now, why I do this is it enables me just to focus the eye on the information that is relevant. So I'm going to zoom in through that box. The market was pretty much a flat year, if you want to argue from start to finish. End of it, yeah. So even if I lift that up there, because that's probably where January started, I'll drag that back. So for, in my mind's eye, that's pretty much a neutral year. If you're an investor and it had gone from, what do we got here? Opened at 429 and then closed the year at it opened at 429 and closed the year at 447. You made 20 cents. I don't think you'd call that a great bullish year. What we do know, though, is that it was a trader's year because we saw, obviously, markets making some pretty extremes. So we know that we can obviously make some trading outcomes from it. So keeping moving forward, mastered time cycles. Start from, okay, there is a top on the 31st of January. All right, so therefore, we've got a bottom and a top on that date, 10 years and 20 years apart. So no wonder we're looking for a little bit of a bounce out of where we are right now. We then also see a April bottom. So January top, April bottom, a little bit of February, a little bit later in the month in between, followed into a seasonal date in March, sell off into early April, okay? Or sorry, yeah, mid-April, I should say. We're also seeing what is a August top. So that's different. We had a July top 10 years prior, or 10 years into the future, and then we're seeing a December bottom, okay? So it was interesting. We were seeing a August top, December bottom, but in 1990 we were seeing a July top and a November bottom. Now, doing the math between the two, any way you cut it, is that you're looking at about 120 degrees. So being about, August, September, October, November, December, 4 months. July, August, September, October, November is about 4 months. So, popping out to you guys, in putting together that work, and I'm going to tie this in, so just stick with me because I know lots of stuff and you might be thinking, yeah, we're onto everything already now, we've got it going. Well, we don't. What we've looked at is we've looked at 2 decades, we've got a roadmap, okay? What I'm looking at there is that I've got a confirmed January and an April thing, okay? So that's 2 things going in my head. I've got a January and an April thing. I've got 50% retracements from February lows into March, February tops, sell off into April lows. I then get an event throughout the year where I get a top that's a big spike top and then a big spike bottom that both happen to be 120 degrees apart. So if we happen to get a top in the middle of the year that was in either July or August, go 120 degrees from there and that'll give you what is likely going to be the bottom. All right. So now I don't have to worry so much, is it July, is it August? I can wait for the market now to tell me what it's wanting to do. And if I can bring together that's something that's working, then I know approximately 120 degrees, I've got something to work with. Okay. Now that's all come from just mastered time cycles. Now, we could sit back and say, well, we've done all of our work, haven't we got a forecast? Fantastic. Everything's looking good. I could say April bottom, and everybody relax. Okay. And we're about to get a turn now. It should run into middle of February, maybe even into March, sell off again into April, if it was only so easy. What I'm going to do is just bring back up that PowerPoint. So I always start my discussions, as I said, with, and I'm going to bring up a little whiteboard here, is that what I'm trying to achieve here is I'm trying to get something that looks like a bit of a funnel. I know that doesn't quite look like a funnel, but really what I'm trying to do is funnel in the information. So I'm just going to put master time cycles up here, because that's a very large tool. Now, seems like triangles. Yeah, that'll do. Triangle, funnel, whatever you'd like. As I said, we'll draw a line up there. We can be a triangle. We want to end up down here with an X, and the X marks the spot, be it a date and a price. Okay. Now, if I come back to camera, and I'll just, if you start plugging in 30-day counts at the top of the funnel or the triangle, trying to push it down, what happens is it gets clogged. It's like a pipe. If you try and put really, really, really big, small, and all the sort of different pieces, what will happen is it will get blocked. So at the widest part of the pipe, what you want to do is put in the biggest pieces, okay? Because they can easily flow through the pipe. So with a master time cycle, what sort of error or what sort of potential error are we prepared to accept? Anywhere up to a few months, all right? I'm quite happy if I get a roadmap over 10, 15, 20 years. Like if you were getting a month either side on a 10-year cycle, you know, you're doing pretty well. So you're quite happy to allow your error in this regard to be quite wide at the wide part of the pipe. If you try and start putting all your really sharp tools at the top there, you're gonna get lost because you're not prepared to accept too much error here. Or sorry, you're prepared to accept too much error, and you'll find that everything just lines up or nothing lines up. So what I'm saying to you is that as you get further down this funnel or this pipe, or a triangle as we're calling it now, what you're going to say is I'm going to put all the sort of sharper tools, all right, maybe a swing chart, those sorts of things, all my sort of sharper tools. Is that some good writing? All my sharper tools towards the bottom here, and then obviously up the top here I want all of the blunter instruments that are based upon very, very wide windows as opposed to very, very narrow windows. So what we started with is a master time cycle approach. Now what we'd start to do is introduce large time frames. Okay, so one of the large time frames, just flicking across to my spreadsheet here, I've got large time frames that go out as far as 3,746 days on Newcrest mining. That's a major cycle. Now, I'd start to break those into halves and quarters, and I'd start to plonk them on and see whether or not I'm getting any resonance with that master time cycle approach. So I'm going to start to balance, I'm going to start to use interim time frames. So what I'm doing here is saying bottom to bottom, add it to another top or another bottom. I'm going to balance time. And here's where I start to introduce date-based tools as well. So I'm squaring time and price, but I'm not looking at it from a strength and weakness. I'm going to start to look at squares, highs and lows, squaring highs and lows and squaring ranges to give me pressure dates. Now, we did that the last time we got together. So hopefully you guys are using a spreadsheet or something like that where you can put all of those things in. Now, if you started to get a lot of April stuff, like let's say you started to plonk in April as a, I'll jump out and I'll show you what I mean. I'll just pause this. So if you started to get April based upon the master time cycle as being something to watch, you could say, all right, what I tend to do is go early April. All right, so this is trial and error. I'm not in love with April yet, but it's just something that I'm testing. So I might put a vertical line in early April, yeah? Now I lock that line. So what I start to do now is start to anchor a whole thing's running back. So let's say I'm going to run back my, I said to you, the 405-day time frame. Now, that's probably not big enough, but would that be one to take a look at? Oh, isn't that interesting? If I run off that little spike top there, I get the 1st of April as being an area to watch 405 days. Now, obviously, I'm going to want to see multiples of that. So if I go back a couple of multiples of 405 days, well, that's close enough for me is a top. All right, if I go back sort of 3 multiples, all right, would I, okay, well, I get a small top there, but it's not a fantastic one. And I'd sort of keep rolling back in terms of multiples here. Okay, so, all right, early April, hit there, bit of a miss there. All right, well, there's a bottom. So straight away, what I've got, as you can see, you know, you can probably see why I gave you that time frame as one to work with, because it's not one, not a bad one to be watching. So what I'd say to you is that around about early April, and what if we could sort of say, all right, we know, you know, could pull back into mid-February, maybe into that 25% point, and then sell off down to $28, you know, on the, you know, on the 2nd of April or something along those lines. Now you're starting to, but that's jumping the gun a little bit. I've done a little bit of work, and you know, that's, as I said, could be pretty close to something we could be watching. Now, what you want to do as well is that you could go back and use your time cycle analysis tool. As I said, I've got a time frame that's 3746, so 3,746 days. Now you might say, where on earth does that come from? You guys can go and do the math and find that for you. It's obviously a major cycle. So what I could start to do is just work back from 3,746 days backwards and just say, all right, well, did I end up coming up with anything in the market? And surprise, surprise, we actually come back with the top that actually started all of that 10 years ago. All right, so there's another time frame that I'd be going back and playing with. Now, of course, 50% would also of that time frame would be worthwhile. So what I'm really doing here is I'm layering my approach. I've got a little line in the sand that I'm working back from, and I'm really just using this as a bit of a zero-date approach. So we've talked about putting on some big time frames, and I'm talking large here. So when I make the point here large, we're not using 30-day time frames. That will come later when we're looking to lock it in. Now, I'd also start to go, all right, well, if I ran a square of 144 from the all-time low and the birth of the contract, does it also, just not so much looking for strength or weakness, but does it give me anything in early April to watch? So what we're looking for is multiples of, say, 144, 168, 52 off major turns. Does it line up with anything in the early part of April? So Love's just saying, can I use the lowest swing highs as a matchup for the count? Absolutely. All you're looking for is, did the market turn that many days from your reference date? And if it's a physical bottom as opposed to a true bottom as opposed to a physical bottom, top or bottom, if the market moves significantly from there, I'm happy to call it a hit. But of course, I don't rate it as highly if it's just a small turn. Now, obviously, boxes can become important at this place, so we're looking for big cycles. But if I throw it out to you guys, if you're doing this work well, so what I'm saying here is, if you're doing the time frames, interim and balancing time well, do you think you've got the time stuff from boxes covered? Because guess what? The box that you're going to draw is actually going to be an interim time frame, or it's going to be a balancing time frame. So what I want to point out is that these points of big, large time frames and big, large boxes, you're kind of doing the same work twice, okay? So don't feel that, you know, oh, hang on a sec, I've got a 1,450-day time frame that matched out, and my box that has a 1,450-day reference count also matched out as well. You haven't you haven't discovered two things. You've just had two tools confirm the one piece of information, okay? The reason I say that is I used to get really excited. I'd have a box that was exactly the same time frame as an interim time frame, but I wouldn't know it, and I thought that I had literally invented trading, and I thought I was clever. And then you'd think, what a dickhead, you've just actually done the same thing a different way. Now, is everybody happy at this stage with that little order of techniques? So we're looking big ranges, big numbers, okay? So we're trying to come up with things potentially at this stage for an April event, okay, on Newcrest mining. And so it's just a case now of saying, all right, is everybody happy that those tools make sense where they sit? All right. Darren said he's happy. Wayne's good. Linda's great. Ashley's happy. Good. All right. Lois is happy. Fantastic. Debbie. Just let me scroll down a bit to catch up with everybody. What are the best boxes to use? Well, we don't know that. That's what we've got to go and test. Okay. So, you know, big cycles, small cycles, the whole lot. Lynn's good. Richard's good. Elizabeth's good. Yep. Graham's happy as a pig in mud. Fantastic. Dave's great as well. All right. So let me keep moving. So now that we've got that list, I'm going to give you the next little part of the puzzle, which is now what I start to do is go, all right, well, what does time by degrees tell me? Now, based upon the birth of the contract, seasonal dates. Now, early April is not a seasonal date, but would you get excited if it was, for example, if I suddenly, you know, realign the planets and make early April the midpoint between an equinox and a solstice? You know, you'd think it was fantastic. But what we're doing now is starting to say, all right, what do we know about this market? Birth of the contract. we should have a number of dates if you're doing your dates correctly, and I'll probably give you a copy of. No, I won't tell you that. No, actually, you're going to have to work them out, and if you happen to get a copy from me, you'll be very happy that you can check your work against mine. What we'll do is, birth of the contract, major highs, major lows, like David gives out, and for time by degrees dates on any market, seasonal dates, major highs and major lows. So running out how many degrees from major tops or major bottoms. So let me just jump back into profit tools. I'm not suggesting that this is I don't want this to be the forecast that you guys do in the sense of early April. Like, I'm sort of giving you that as a freebie. I want you guys to either, really give me 20 reasons why early April's good, or give me another date to watch. But if we were really starting to get comfortable that early April, with all of our other stuff working for us, was something to focus on, I'd definitely be saying, all right, well, why don't I run back, from early April and see where we are? Well, we're about 60 degrees at the moment. So I don't know about you. What would make a lot of sense to me is if we saw a bounce from here, like we're potentially expecting, and we saw it run up 50%, because we saw that was part of the roadmap, and it ran up 50%, and it came back and it ran up 50% into the 16th of February before we got another leg down, that would just really get me red hot. So there you go, 16th of February would be another date to be watching. Now, 90 degrees isn't isn't the sort of hit we're after. It's about 84 degrees there. Now, you might say, oh, does that get you excited? It's about 86 degrees. 120 degrees, well, 120 degrees, well, there's 122 to that top, so I'm kind of happy to call that 120. So you got 60 and you got about 120 as being potential turn. So, you got something going for it. Well, 180 degrees brings you back to that bottom there. So I don't know about you, we're starting to, get a few little triggers here. 240's the top, 270's not much, 360's not the physical top, but the market did sell off from there. I don't know, 450, there you go. 540, a little bit less. 630, not much there. 720, not much there. But I can tell you that there's enough symmetry there based upon just running purely backwards from my 0 date. And I'd also need to go and take a look at birth of the contract time by degrees as well. So you guys should be able to tell me, does the birth of the contract time by degrees give you anything in April to be watching? All right, so let's keep getting back to the list of tools here. All right, so what we've got here is, now we could start to say, all right, well, if we've got a little bit of a date to firm up, now we could start to play around with some price work. So we could start to do some resistance cards. Obviously, that would constitute highs, lows, ranges, those sorts of things, off multiple tops and multiple bottoms, just to give you some price work that might be worthwhile playing around with. This is really, at this stage, just to give you an idea. I don't get too in love with anything here because price, I really couldn't care less if I get the price wrong, as long as I get the date right, because price will look after itself. I start to look at things like Gann angles, all right? So I start running for support and resistance. So what I'm going to do is try and run through my date and also what my approximate price is, and I'm going to try and see if a Gann angle lines up somewhere along those lines. Obviously, speed angles, be it big or small picture, can start to be a guide here. I've put in here the square of 9 if that's in your toolbox, okay? So if you know what you're doing with that, I'd start to check prices and dates on the square of 9 if you know how to do that. If you're not sure how to do that, believe me, whilst it can be very encouraging, I'll tell you that it's not going to make or break it. If you've got all of this stuff working for you, this will just be confirmation. But I've got a forecast for later in the year on oil, and it lines up fantastically on the square of 9, so that just makes me feel a whole lot more confident about it. All right, so what have I done there? All right, so what I've said there, let me just come back to camera. There's some techniques. As you can see, that's pretty much everything that we've got in our toolbox to get us to the point where we've got, if I just put a whiteboard on there again, get my little pen out here. I'll actually draw with the pen for a change. What we're hoping to achieve here is to be in a situation now where we've got market trading through here, and at the moment we've got a vertical line, that's the date range, and look, it might be a few days, so it's like a square or a box, like it's not a specific date, and you might have, well, I have this price, and this price is 3 potential places that I could be looking for it. But obviously you've got a view of where you might expect that to hit. So you might say that's that's my number 1 choice there. And so what I'm waiting for is this market to be a low right in on that point there. So the question mark that now comes, and this is obviously, we're relatively close to April, so I wanted to include this. You can't, what you can start to do is do your normal 0 date. So if you say 90 degrees back, 120 degrees back, and this is long-term stuff, 180 degrees back, stuff that's a year out. If we're doing April on Newcrest mining, we're talking 2 months out. Still pretty, makes you feel pretty clever, but it's not what you'd consider a long-dated forecast. as it's rolling into your date, you're going to start to tick the boxes and say, does it line up? Does it make sense? But what I wanted to include here was, I guess, when you start to get a view that you've got your date and you've got your price, what you're going to start to do is worrying about what you're going to do to trade in and out of it, okay? So when you start being confident that you're looking in the right spot, the next phase moves away from being what you'd consider a forecasting phase and more of a trading phase, okay? So what I suggest to you there is you're starting to look at your swing charts. You're going to start to look at your ranges, daily, weekly, and monthly. That's what D, W, and M stands for there. So daily swing charts, weekly swing charts, monthly swing charts. What's the trend telling you? Now, I can see 3 months out before a forecast date, I've been red hot on it being a low, and then it spins around, the trend goes up, and it becomes a top. Here's where I start to involve the process of what's the first range out. Now, that can also be useful to establish the price that you're looking for, but I tend to use that more once I've got an area to be looking for. Is the first range out rolling me into that area? One of the ones I also look at is when I'm getting very close to coming into a turn. I'm talking within a few days of my date. I want to see that top or bottom terminating at 50%. Now, 50% of what? Generally speaking, all the good turns that I've been able to pick have the last major run in or the last major run out has been at 50%. So what I mean by that is, I'll come out of here, jump into profit source. I'll show you an example of the one that I meant, or the one that I'm thinking of. If you're looking at just oil for 2 seconds, surprisingly. When I called this low in December, a long way out, one of the things I was watching was when it ran into that point there, what I wanted that range to be was a percentage of a previous range. So using the ABC pressure points tool, I was definitely watching the fact that it did run equal ranges, so it had done 100% in that case, okay? Now that's just one range there, okay? But if I make it a little bit of a weekly range here, you'll see that I have to sort of pick on what's going to be my swing top and swing bottom here. And I'll come out of there now. No, I won't, because it's moved. I think, yeah, you saw what I was doing there. I'm going to pick on this on the daily chart. I called that a swing top, and I called that there a swing bottom. And the last little range dipped down, and it dipped down at exactly 50%. So the fact that it had done a terminating 100% of those two ranges had repeated, but then the major range, which was on the weekly chart, had gone and given me from there to there, and then end up being 50% when added to that last run down. So this is just something that this is probably not ultimate Gann course stuff, this is just personal experience, is that I look for that last run in to a major top or bottom to be 50% of a previous swing. If it's a weekly swing, that's okay. If it's a daily swing, that's okay. If it's a monthly swing, that's okay. I'll give you some other insight as to where this works on the bigger picture. Let's just make this a weekly chart. You guys in the platinum, or you're probably all platinums, I think from memory, you'll see this coming to your inbox quite soon. Is it that little run up there, that little 50% range? Obviously, there's your bull market 07 to 08, 09 low, or 2008 low into where we are right now, sitting right on that 50% point, and looking for the last little moves to terminate. So if you could even say maybe the 50% point. All right, so if I'm going to use that maybe there as the first range out, adding that to the current run up, well, it ran a little bit further than, well, it got close to 75%. But if you look at that, the first swing, or the last sort of swing, is from that low there to there. So I'm going to pick that up and add it to there. And there you have it, is the 50% rule working again. So it's actually working on two different time frames, that really big bull market cycle, and then looking at the first range out, it's run out 50% of that first range out. Now, it would look obvious to place it on the 14th, but if you actually place it on the 21st, that's where the 50% lines up. All right, so let's just make sure that I haven't lost everybody there with that 50% bit. That's some good stuff that I don't often teach, guys, so you guys get that as a little bit of a bonus. That's some stuff that I hold in the drawer, only because it's not often time to be able to teach that. But the last terminating range, I know that I've got a major top or a major bottom when it runs 50%. Now, it's not always a logical which 50, it doesn't always say 50% of the last run up, But what it does is you've got to look for the range, be it the first range out, be it whatever, and you've got to play around with it. But often I know I'm on the, it's, you know, I guess that kind of answers one of your questions from before, Linda. How do you know whether you're strong or weak on a top? If it's run 50% of a range that, you know, and you have to play around with it, as I said, and get a bit of experience, that gives me a huge amount of confidence, all right? But watch that back on the recording, repeat it on those charts on oil, and you'll be well rewarded if you learn how to take that into consideration. All right. So now what I'm talking about is we've got our little forecast together. We're talking about how we might actually trade it. And so what I'm talking about now is trading in and out of it. So I would happily trade into a 50% of that little last run up, all those sorts of things, and then I'd be on red alert to go back out the other way. So you've got there also some of the all markets, Darren. That stuff will work pretty much everywhere. Works everywhere I look, so it's not just oil. But it works red hot on oil. I won't, you know, let's not shy away from that. A couple of my colleagues, their markets that they follow as well, that works pretty well on theirs as well, because we've had a number of good chats on it. So some of the stuff that we all have a bit of a chat about over, you know, a quiet cup of coffee. All right, so what I'm finishing up with here is that obviously when it comes time to see your forecast date come in with your price, you've obviously got to have the right pattern in the market, and you've got to have position of the market. Now, they go all the way back to chapter 1 of the Ultimate Gann course, which you guys probably, you know, like all of us when we first opened it, for me it was a video series. I kind of flicked through it and went, oh yeah, I've heard all that stuff before. But I'll tell you that if you don't have pattern and you don't have position, you're going to struggle to be able to bring together that forecast. You probably don't have too much. And what I try and do at this point is I try and start to bring in the work that we did on time trend analysis. So what I'm talking about with time trend analysis there is running a swing chart in time and saying, are the ranges in time shrinking? Let's say I'm looking for a top. I'd want to see, you know, 50 days up, 40 days up, 30 days up, 20 days into my top. And then I might have seen, you know, 5 days down, 10 days down, 15 days. And now if I get a 20-day run out of my top, I know that my time trend analysis chart has also confirmed to me that the swing chart in time has also turned, or the trend is broken. So that's one that you can use. I'll place a little note with the time trend analysis one. You could maybe do that a little bit earlier in the piece. It's always wise to keep that up to date on a market, but I tend to do that. I'm always keeping it up to date on the ones that I'm watching, but obviously I tend to bring it in right towards the end and to say, okay, if everything else holds true, then you should be able to gain a similar sort of correlation through that time trend analysis. So that's why I've sort of put it in there a little bit later in the game. All right, so how does that list, does the list seem approachable, I guess is my million-dollar question. Okay, so does the list seem like it's something that you can break down into bits and pieces, and, you know, and look, there's probably a couple of, I was trying to think if I've missed any of the techniques, and I'm trying to think, I'm just going to have a look in Profit Source and think if I've missed any of the drawing tools. Pretty much no, they're all there. I'll talk about boxes, yeah, so they're all there, which is fine. So I haven't missed any tools, but that's pretty much just a definitive list for you guys to have in a working order. And you guys can make your own list and just basically bang it through. And you'll agree with me, it's certainly not anything particularly scientific. Well, it's not super intelligent stuff, but it's only through the practice of having done it so many times. And the greatest thing for me was having to start teaching Gann masteries, because I had a lot going for me at this before I did that, but the process of actually recording it and explaining it was always challenging. I had it up here, but I couldn't relate it to others. So over the years, it's something that obviously I've had to bring together with my teaching. So it definitely gives you more of a structure to follow. So, yep. David, you made a great point. We'll need to work through it to find it out. So absolutely. Now, if you came back to me and said, I wanted to move this one here and this one here because that suits me better, no problems whatsoever. Okay, I'm happy for that. So it's not the perfect system. Albert's saying, yep, covers a fair bit. It certainly does. Key saying gives you pathway. So looking, look, Linda, I'm really thinking, yeah, like David says, you get 8 good trades, you know, anywhere up to 8 good trades a year, which is, you know, 4 turning points trading in and out. So when you're forecasting, you don't want to be forecasting every daily swing top and swing bottom. You really want the big picture stuff. And as you can see, that's where the beauty of David and the complexity of David is that when you start with the starter pack, you're looking at constant trades and constant swing charts. But when you could get the forecasting bit as well as David, you could see why he would sit back, he'd hammer, you know, the turning points in the market, and he would trade, be in the positions longer, trail stops a lot wider, because he had all of the cycle stuff going for him. If you could trade in and out of 4 dates each year, you'd think you were pretty clever. Neil said, similar to Noel in the Adelaide Gann Mastery. Well, I'm glad Noel's learning. I'm glad he's picked up all the good things I taught him. So it's a bit of vice versa. the funnel is definitely my approach. I'll trademark that. Noel's got his own, and I'm sure they're very similar. So as you can see, there's no particular wisdom in it. It's just all how we develop our own process. Okay, Wayne said, what about those coloured degree charts that you've not been using? That's a good point. I will make a note of that, and we'll have a bit of a chat about it. Yeah, definitely some reinforcement, Neil. The name eludes me. The degree vibration wall charts are actually very, very important, and I will actually, I've got an idea for that, so thank you for reminding me of that. Wayne, you also told me about the article in Your Trading Edge. I think you told me, was it yourself who mentioned it? Was it in the January-February edition, or was it in the November-December? Because I've only got the November-December, so I actually haven't seen the January-February yet, so I haven't forgotten your question. I just haven't got my hand on. Yeah, January, February. I haven't got my copy yet. I might have to go to the shop and buy one. I'll see if I can get some pocket money from my wife tonight, and we'll head out. But yeah, I can't get. I only just got a copy of the November, December one, so I haven't seen January, February yet. So when I do, I'll definitely comment. Graham said, are we still going to do a trading plan lesson? Well, we'll probably do that in the Q&A extra session, Graham, if that makes sense. And then I'll send out a little bit of a you guys are still going to have to send in your versions of your trading plan, so that hasn't changed. And then I'll put something together and it'll go back out. But we won't do a separate lesson on it, but we can probably make that a big part of our Q&A and bits and pieces together, if that's okay. Otherwise, we'll have lots of different pieces. Look, Graham, Darren, that'd be great if you can. So I could be waiting a while, but yeah, that'd be good. And I'll have a look at. Someone's just offered me to send me a PDF of the YTE article, so I'll have a look at it and I'll come back to you guys. I also want to do in that Q&A. I said I do a little bit on the square and nine and stuff, so I haven't forgotten about that as well. But as you can see, you know, there's still a fair bit to cover, and time is always something that's creeping against us. So, looking at the clock, it's right on 9 o'clock. So, what I'm going to do is suggest to you guys what I'm really looking for come next week is that when I start to break down that market, I don't expect you guys to have the pace or the nous to be able to say, yeah, that's great, now do this, now do this, now do this. I'll set you back from how I would put together a market, and I'll answer that 2 seconds, Linda. What I'll do is I'll take you through my process of how I would bring together one and give you an idea of how it's going to work. The thing I want you guys to do is to just feel comfortable with the tools that I'm picking on, and more importantly, where I'm getting them from in the market. Because if I have to sit there and say, oh, look, I will tell you I'm getting this time frame from here to here, but if you've actually gone and measured it yourself, it becomes so much more real rather than you going, was that the all-time high or the one before or whatever. So what I'm hoping is that you guys can go through that checklist like I've asked you to do, or like I've given to you tonight, and even if you only get, you know, X% done, it just means when we do it together, it will be a whole lot more approachable because you're saying, I've already done that. Yep, I remember doing that. Yep, that makes sense. Rather than the other way around, which is me saying, I'm doing this, doing this, doing this, doing this. And then you guys go, yeah, I've got to go back and check that. So it's a little bit trying to do it in advance just so it makes more relevance when we actually do it together. So next week, we're going to do Newcrest mining. Okay, so that will be our challenge for next Tuesday. The following Tuesday, we will do the Aussie dollar. So once we go through the process of knocking off Newcrest, you guys will have to do it all again for the following week for the Aussie dollar. Then we'll talk about where we're going to fit in that extra bonus session and do trading plans and bits and pieces. Okay, so that is the plan of attack for the remainder of our time together. So, Linda, you've said, is there merit in backtesting forecast and backtest trading in and out? Absolutely, absolutely. All right, so it's hard to backtest forecasts because you go, well, of course, I could forecast the 19th of December low again last year, and what I'd say is it's probably just better to backtest trading in and out of major turns just to get yourself geared up. But if you can find a way to not cheat and actually legitimately say, yes, I could have forecasted that top and then backtest trading in and out of it, I'm all for it. But I know what human beings are like. And yeah, it's very hard not to, you stole my thunder. It's very hard not to cheat. You better believe it. Because I can tell you, I can go back over a chart and I can tell you every forecast, every top or bottom I would have forecast. And then you can add up how many I actually did and you'll find that the numbers don't always add up. So you can always find reasons in hindsight. And that's fine to learn in hindsight. Remember, David says, let your hindsight become your foresight. All right. All right, everybody. Well, tonight I really enjoyed. That's, we're getting to what I consider the fun bit, which is the good stuff, which is being able to sort of tackle all this on. What I really want you to understand is that there's got to have structure. You've got to have a way. The way and the method will change. It won't stay the same forever. But if I can give you just a stepping stone that gives you, some big steps or big rocks to step across the water, give you some confidence, we'll come up with some dates. Look, no prizes for picking early April. All right. So if everyone comes in and says, Newcrest mining early April, I'm a genius. I will say you're pretty smart, but I'd say most of us would be comfortable. Try and give me a bit of a roadmap for the rest of the year. I'd be interested if you guys can give me a second date, something else to be watching. But just to clarify what the work we've done, I wouldn't be surprised if we get a bounce out late January, early February, maybe up into about middle of February, all right, up to about the 50% point, followed by a strong sell-off into early April. Okay, so you heard it here first. All right, so be on top of that. So even if we muck up all the other forecasting bits and pieces, that'll be a way to make a cracker if it comes together. No worries, Neil. Unfortunately, we're getting to the where the rubber meets the road. So the challenging bits, and I hate to tell you, it actually gets, session 15 is going to be even more challenging. That's the one you guys have to do on your own. So, it's just me hopefully putting you in the right direction. Thanks, Lois. No problem. Thanks, Jose. Good to hear from you. Thanks, Wayne. Thanks, Mark. Thanks, Key. Oh, Key, don't be scared. Because guess what? You can always just sit on the sideline and you don't have to pull the trigger. Graham says your head hurts. All right. Linda's looking. Okay, well, there's a positive statement. Linda's looking forward to the work. All right. Everyone wants to know your number, Linda, so you can do the work for them. No worries, Elizabeth. Thanks, Richard. Thank you. But I'll catch you guys all next Tuesday for what will be we'll probably just we'll do a quick market update and then straight into it. We won't be dilly dallying next week because there'll be a lot to cover. Okay. So all right, everybody. Thanks, Darren. Appreciate that. And I actually did some cleaning up in the holidays, Darren, and I've got that stuff that I've been promising you forever and 47 years. So we just need to make the time where I can get it to you. So I'll be in touch regarding that. Thanks, Debbie. Want to make it concrete like we all do. Thanks, Albert. Lynn. Okay, so terrific. Lots to go on with for the coming weeks trading. Look, everybody, it's definitely there's going to be lots to do in the market coming forward. So get geared up, get your thinking cap on because the next few weeks it's going to be if you snooze, you lose. So try and sharpen up and get. I think there'll be some good times ahead if we're on the right side of it. So good luck to everybody, and have a great week in the market and or whatever you plan on doing. And as I said, look forward to catching up with you on Tuesday. If there's anything that you're wanting to discuss prior. Or send me, I'll put a post on the discussion board so you can get a hold of me. It won't be my email, but it'll be an email that you can send to that will actually come to me. But what I think is important is that if you guys get stuck on anything and you need some help, hit the discussion boards because I'll keep an eye on them every day. All right, and I'll come back to you as soon as you post a question. I'll make sure I get it answered. Okay, so within realms of reason. If you post at 2 o'clock in the morning, I'll answer if I'm up. But if I'm not, you can expect a leisurely response the following morning. But yeah, let's use the boards this week as a way to, and you guys can probably talk to yourself about what's going on if you feel comfortable. So let's make sure we get active in that environment. Make sure you get the work done. The only people, if you don't get any work done this week, I can't make you do it, and I accept that there's some people who've got busy lives, all that sort of stuff, but you'll find so much greater benefit from next Tuesday night if you get in and do some work this week, okay? So I can only encourage you to do that, guys. All right, thanks, Stephen. I'm looking forward to it as well. All right, everybody, well, if that's it, I'll call stumps, and I look forward to catching you through the week. So, all right, Darren, I'll send you some time if I can. I'll make some extra hours in the day. Just do what you can, mate, but you'll be fine. All right, everybody. We'll take it easy. Thanks for tonight, and I'll catch you in through the week on the boards, etc. And I'll catch you next Tuesday in the flesh. All right. Thanks, everybody. Okay, that seems to be recording fine. So officially a good evening and a welcome to Tuesday night's Ultimate Gann coaching on the Thursday night session. As I've just explained to everybody who's live in the class tonight, I do apologise for those who obviously had to shift or couldn't be here tonight live and obviously be watching this as a recording. As I said, things came up very late minute on Tuesday afternoon that just required, unfortunately, me to be in a couple of places at once, and this was the one that unfortunately missed out, so to speak, of the two places I couldn't be. So I was, always, as I've said, I appreciate your guys' patience in that. It's certainly been the Ultimate Gann coaching, 12 sessions over 2 years. It's probably felt like Chinese water torture at some stages, but we're getting close. We're getting to the, as Graham had up on the chat box a little while ago, it's forecasting time. So we're getting to the business end, I guess, of what we're here to do. So what I'm going to do is just get up my PowerPoint presentation, which doesn't have, I think it has 2 slides or 3. So most of our work tonight is obviously going to be driving directly from the software. Obviously, to remind you of things like our financial services license obligations. So Safety in the Market holds what's called an Australian Financial Services License. As an authorised representative of those details that are on the top of the screen there, a company called Investment Educators Australia. Obviously, they provide, or that license provides us the ability to discuss with you matters of a financial nature, but we're obviously talking with a specific intent to talk about general items only, not to be construed as direct financial advice. We've not taken into consideration any of your personal financial objectives or goals, and so therefore we encourage you to seek a licensed financial provider or licensed financial advisor to be able to provide any information you would need. with regards to what we're going to talk about, so as we've often mentioned, we're going to, in tonight's session, I guess more so than any, is that we're really going to delve into current market. We're going to, in many ways, as I said to some of the guys from last night's session, we're going to do things that people will tell you, generally speaking, are not possible. And that is the process of obviously talking about where markets will turn potentially in the future. So we're going to take a look at some forecasted turns within the markets going forward. So obviously, I hold a qualification that enables me to act under this license as what's called an authorised representative. So I've done all the appropriate qualifications and exams, etc. But that being said, we all know the drill, and we're getting close to having to, to not recite that once a week. But as I said, if there's ever any questions about that, I'm always happy to take you through any of your questions or comments or concerns. All right, so tonight's session, as we've sort of been building over the last, we'll call it 10 sessions, but someone that would actually be able to give me, I'm sure someone can remember when we started. I must admit, I've kind of forgotten when we actually kicked off the Ultimate Gann coaching program. As I said, I think certainly a lot younger man, and I don't think I had, my first child hadn't arrived at that stage. It seems that long ago, but it's certainly been a journey that we've, obviously investigated together. And this is really, I guess, what we're going to talk about tonight, is bringing together that sort of practical style or practical way of, of bringing together a forecast whereby we're going to take a look at some of the things that, are going on in our markets of choice. Now, obviously, we know tonight's work is going to be very heavily geared around the Newcrest mining market. Obviously, next week's session, we're going to take a strong focus on the Australian dollar. So, tonight's really about being able to just pull apart, the work that we brought together for Newcrest mining, and to really come up with a couple of dates to take a look at. Now, I mentioned to obviously many of you that in last week's session, and last week's session was pretty well received, mainly from the fact that what we were going to sit down and do was tackle it from a what's the process perspective. Forget what is the nitty gritty as far as the numbers were concerned. What is the process that we might be looking to follow? And obviously I offered up a suggestion of one process. There's certainly not a particular, there's certainly no individual way to do it. You can certainly do it a number of different ways, but from my perspective, it was really just a case of being able to offer up a potential for us to look at some ways to bring together a practical forecast. So that was the intent of last week's session, and we sort of talked about that process of what we need to bring together to start at a very big level, as far as being able to bring together information that relates to, for example, master time cycles, birth of the contract, those sorts of things, and then slowly start to step it down into some of the smaller ranges, whereby or smaller tool sets, where sometimes we can get a little bit lost in the process. So last week, as I said, we tried to sort of nut out what would be regarded as a process to follow. So tonight's sort of session, what I want to do is obviously get to the forecasting bit as quickly as possible. What I will tell you though is, okay, thanks Wayne. So 30th of September, geez, there you go. So we're the best part of, we're nearly 6 months into, by 30th of March, it'll be 6 months. So we'll probably be done by about 5 months, which is probably going to be a record. But anyway, so I guess the challenge for us is obviously to get into this forecast tonight. But the problem lies in the fact as well, where I'd asked you last week to really take a look at some of the information, so therefore it would become a lot more relevant to you. Obviously, I've pulled this market apart to the best of my ability, and certainly I feel a lot more in touch with it, certainly more than I did at the 30th of September last year. So I've learned a huge amount about this market as well. So it's been a great challenge for all of us to get together and get our heads around it. But to keep with our usual process, what I want to make sure we do is to focus, obviously, just on a quick review on what the markets are doing. So we'll take a look very broadly just at the SPY. We'll take a look at probably the S&P 500, and probably just in tonight's instance, just to take a look at gold as well, because obviously it's a major driver in what we're talking about for Newcrest mining. We'll take a look at obviously Newcrest mining and the Australian dollar, just take a quick little look at the position of those markets, and sort of casting your minds back to the view of where we were at the end of September, sort of looking at little basic things like what's the position of the market, can we expect something to be occurring. So we'll take a quick look at those. We'll bring together this Newcrest mining forecast. Now, I guess what I came to realise after putting everyone through their paces last night and taking you through it is that there's really a lot of different ways you could do this, and what I'm trying to always come back to is it's really not so much about the dates, it's really about the process. So what I want to try and do is sort of validate the ways and the steps that I got to the information that I'm looking at. A lot of you guys have put in a serious amount of work, which has been fantastic. So for everybody who sent stuff through and submitted some information and had a crack, I certainly hats off to you guys. Some people are very organised with how they detail their numbers and spreadsheets and those sorts of things, and I'm sort of keeping some rudimentary ones there as well. Obviously, it's not going to be a case of handing out all of the workings for, how we brought this together. I guess, some things you guys are going to still have to do for yourself. Like, it's a case of I could write you a 20-page document that says these are all the things I'm looking for, but that process still won't become cemented unless you actually go through and identify the timeframes, identify what's working, and take yourself through the process. So it's a bit of a two-step thing, which is what's really the most important thing out of our time tonight is probably not so much the dates we're going to come up with, but obviously more about the process and validating or invalidating parts to the puzzle. I'll also be able to give you a good idea as to what I think as far as tool sets are working in this market and what's not working. I can tell you the two areas that I'm watching, and obviously, the drum roll, please. If I see everybody log off after I give out the dates, I'll know that it's just the dates you're after. But look, I think most of us are comfortable that an early April type event would certainly line up. So somewhere around that 10th to 12th of April would be an area that I'm looking for. We've got some weekends impacting it. And obviously getting out towards the end of this year, the next major turn I'm looking for is early December. Now, obviously, there was some conjecture last night when I sort of handed out those dates in the sense of there's other dates to watch for. Now, I know a lot of people have looked at some work in July and also some work in August. And from my perspective, I could have actually given you probably two alternate roadmaps as far as what we might be looking for. And one of the interesting things last night was obviously to get to the likes of July and August, obviously we've got to get through April first. And as I sort of made mention, we had quite a good, robust discussion about why I weighted, say, the timeframes I'm looking at as far as dates, April and December, over and above, say, July and August. And I guess what I'm looking at here is I'm looking at what I believe is going to give a better tradable turn. Now, what I'm suggesting here is that I'm not discounting the work that some of you guys in the Tuesday night class have done that have given us potential changes in trend for July and August. But the thing that I'm suggesting is that based upon the work that I know and the experience that I have, the two areas I've looked at as far as the dates are concerned, I think they're going to give us a better or a bigger potential for trading turns. Okay, so it may end up being that maybe we might get a yearly top or a yearly bottom in July or in August, but we probably might get a better tradable run out of December or April, something along those lines. So, of course, with all things, and I will sort of throw the caveat out there, if we're talking about potentially an April bottom, and then having a good chat with some people last night, they said, but what about July? And look, if we see an April bottom in the market, and then the market spikes up, and then it breaks through April and keeps heading lower, then of course I'm going to start to think about potentially the other months in the year that have got some strong harmonies. But as you see me bring together the information that I'm going to share with you tonight, you'll probably start to see some of the things as to the reasons why I've chosen those dates. Now, that's not to say that you won't get other turns throughout the year, but in this sort of world of forecasting, you've really got to start to think about, well, what are you really trying to forecast? You can't hope to forecast every monthly top or bottom. You probably could, actually, if you really wanted to get into the nitty-gritty, and you're really going to have to do a huge amount of work. Like David was obviously capable of doing that. But when we're starting to put together these sorts of forecasts, to the level that most of us are at, I think it's probably important that we sort of sit back and say, all right, well, let's try and nail a couple of major areas to watch in the market, and then we'll watch the market unfold potentially between those dates. So you'll see that all sort of come together. Now, as I said, it's going to be very difficult. I kind of thought that I'd have more than enough time to take everybody through all the time frames I'm looking at and all those sorts of things. I found that wasn't the case, only because there are so many. So if I talk about how they're derived and how well they're working, so in some cases we'll move at a bit of pace, and I'll share that information so you can go and validate it. In other areas, what I'll do is obviously slow down and obviously work through certain things that I found to be nuances or subtleties in this market to keep you I guess abreast of what's important and what you should be looking at, the little subtle things. And I guess most importantly along the way as well is I'll be interested to get your comments and queries, okay? So feedback in the sense of yes, no, maybe, I like that, I don't like that, that made sense, I did that, I didn't think about doing that, because, there's a lot of information to take in, and that's the challenge. If we look at what we do at Gann Mastery, we kind of do this sort of work would be done, over the best part of half a day with breaks in between and all of those sorts of things. We're going to try and push it into, best part of a couple of hours, and, so therefore, I've got to look at it. What's more important is the less so much about the dates and more about the learning process. So that's kind of how I've chosen to structure it. That being said, your questions in many ways will also drive the direction that it takes and those sorts of things. So I want you to be comfortable to jump in at any stage and certainly stick your cider hand up and say, look, I'm not comfortable with that, or I disagree, or why did you choose one over the other? Because when it comes to some of these things, they are judgment calls based upon experience. They're based upon my intuitive way of looking at markets, and I'm comfortable to say, and as I said this last night, I could be absolutely wrong. And the stuff that you guys have put together could actually, you know, in some cases, some of the work that people have submitted agrees with some of the work that I'm looking at. And in some cases, there's some other dates that could end up rivaling or being more important. But the beautiful thing about what we are in the world of trading is that we can actually make decisions, and we can you know, stick with them until otherwise proven that they are no longer valid, and then we can move to the next thing. So that being said, there's a couple of, I guess, I'm always trying to go to, if there was a 100-day time frame that was supporting a particular turn, or there was a 1,000-day time frame that was supporting a particular turn, I'm always going to go to what I consider to be the bigger picture reference. And so that in many ways has probably given me the reasons why I've chosen one over the other. But all of this will become apparent. I guess I'm probably, you know, putting the cart before the horse, so to speak, before we jump in and do this. But I'm just trying to prepare you mentally for the process that we're going to go through, and the questions that will be automatic, which is, why is this over this, and I found that and not that, and, you know, why are we picking those turns instead of these turns? And so some of those things don't always have a clear-cut answer. I'll do my best to explain my reasons and my rationale, but you've also got to be prepared to jump in and say, I didn't agree with that, or I don't see your reasons or your rationale. And in some cases, you know, I'll do my best to explain the reasons or the rationale behind it. So that's going to be our process for tonight. And obviously, I'm very cognizant of the fact that tonight is very heavy with numbers, and obviously a lot of the guys made a comment last night. They obviously appreciate the ability to watch this information back, and you will need to do that, because it's going to be different to some of the work that we've done previously, where we're combining all of the sessions that we've done to bring together, you know, the information to come up with a practical forecast. You know, we're doing all of those lessons that have taken us, you know, 6 months to get here. We're going to try and jam them all into one night, so expect to have a little bit of a brain full. I would suggest maybe having a piece of paper and a pen next to you. Now, not having ever sat on the other side of one of these in a proper sense. Obviously, I've sat in some of the sessions with the other guys, but probably not from the learning sense you're taking. You know, people have told me that they get that benefit from just having a piece of paper and a pen next to them. Probably you might even have another computer, or you've got to, you know, I fancy looking down the list here. I know that some of my more technology-minded individual friends here tonight would probably have Excel spreadsheets up behind, and Word documents, and you know, lots of different things to be able to make notes along the way. So whatever your process is to record that information, go for it. I did have a request last night, and I'm just sitting on my piece of paper here from last night. And obviously, anything I organise for those guys, I'll do for you as well. But one of the, I guess, questions I got was whether we could potentially extend the life of the recordings for these particular sessions. And I haven't got in touch with the office just yet about that, but my plan is to be able to probably extend the time that you guys can review this, just because there'll be a lot of information in here, and you know, a month or so may not be enough to digest it all. So that's a work in progress as well, and I'll keep you up to date on that. So yeah, thought you'd be happy. Yeah, no one's actually ever said, no one said to me that they didn't like that idea. So I'm glad you agree, Debbie. Most people think more access is better. I will make one point though, is I sort of said to people last night, what did they think their optimum time would be? And some people turned around and started sort of saying 12 months, 2 years, 5 years. It's a very fine balancing act. What I believe is this, is that if you know that you've got 12 months to access something, you probably don't do anything with it for 9 months, and then you start trying to cram everything into 3 months. So that the challenge lies is having a balance, having enough time to actually go through it with confidence, but also having a short enough window that it actually puts a bit of a fire underneath your backside and drive you forward to actually get it done. So Wayne, you kind of hit it on the head. I'm sort of thinking a 3-month thing would be good, but I've got to talk to the people who organise all of this wonderful technology, and before I go promising anything as far as timeframes, I think it's worthwhile talking to them first. But my ideal thing is sort of 3 months. As far as that's concerned. So that's what I'm aiming for, but as I said, no promises, but I had that discussion last night, so I thought I'd get it out there now, because it was a question that we end up having a fair discussion with at the end of our process, when everyone was a bit sort of head full and probably didn't make a lot of sense. So I thought do it up front, and that would be good. So all right, Elizabeth, we'll see how we go. But yeah, remember, everything's always a balance. You've got to have, there's got to be a bit of risk and reward. So the reward is maybe we'll have access a little bit longer, but the risk is it's not going to be forever. So, you know, Des, I think, gets exactly where I'm coming from, is that you've got to have a little bit of a fire underneath you. Otherwise, I could point you, I don't know if my camera will work, but I probably shouldn't, because my office is pretty filthy. But I have a bookcase there of lots of things that I haven't yet studied. And the reason why I haven't yet studied them is because they're sitting in my bookcase and they're not going anywhere. And if the house burns down, I can always buy another copy. So there's always that two-edged sword when it comes to learning. So anyway, I digress. So let me pause this camera. Let me just come out of this PowerPoint presentation. Now I'm just going to jump into Profit Source. As I said, we're going to do a very quick update. This will be 10 minutes maximum. I've said that before, I know, but that's my intention at this stage anyway. I just want to scoot through what the markets are doing, have a quick chat, because obviously knowing what the share price index is doing is very relevant to what we know on Newcrest Mining. The same with our gold market and those sorts of things. So let's start out with the share price index. So interesting time. So thank you, Wayne, for reminding us when we got together. So we sort of got together around here at the end of September, and what we've seen is a pretty sideways market, and really the couple of decent trading runs. Obviously, the first run south, the second run south, and obviously that good Christmas trading rally in between. But if we take a look at the sort of probably a swing chart, I was finding last night just the harmony and the symmetry within numbers. So if I just jump back in, just the repetition of ranges, etc. It was so interesting to watch here. You've got sort of 64 being half of 128, 63 points, 68, 108, 109, 168. There's a number that we'd be pretty comfortable with. 89/90. You've got all of these sort of symmetrical. There's another 84-point range over there. Half of 168. All of these sorts of ranges and the numbers keep sort of repeating. There's a 67. So we've got a clear downtrend. In a broad sense. Technically, we're in an uncertain trend. On the weekly chart, though, we've really only just broken underneath, that weekly swing bottom. So in a bigger sense, we really haven't had a massive pullback. And my charts aren't scaling automatically properly. I just wanted to quickly take you to what I'm seeing on this market is that we're right in a situation here where, the market is, come back in and really trying to test that gap. So this is on the day chart only. So if we measure the major sort of milestones in this market so far, we've sort of got these couple of gaps, and you have to agree that that gap there seems an eon away. It'd be very hard to sort of get really bullish this market until that sort of gap was covered in some degree, and all the people who are claiming a return to record highs and all those sorts of things, there's a bit of work that needs to be done there. I did note of interest last night. All right, Albert saying my voice is repeating. Okay. How's everyone else traveling? Okay with you, Wayne? Okay, thank you. Debbie's fine, all right, okay. Albert, it might just be, thanks everybody, it might just be with you at the moment. So, yeah, Albert, you might want to check, you're actually logged in twice, Albert, which might have something to do with that. So you've actually got two logins or two windows open. So if you shut one, you'll probably find that you'll stream the data a whole lot more efficiently. So maybe shut one of those down, and like you have done, fantastic, and away we go. All right, back into profit source. So looking at this little sort of section at the moment, we were, I guess, when we were last together, was sort of the, so there's Thursday, Wednesday, Tuesday, there we go. So we're kind of looking at, the potential. We're watching early February on Newcrest. We sort of have that seasonal date influence coming in, 5th of February. You might have been arguing here, all right, well, there's the 3rd of Feb, 4th of Feb. Maybe we're going to get that's all right, Albert, a higher bottom, and then obviously we've got that big sell-off on the market. So you might be thinking, all right, well, there's the 5th of Feb. That could be your actual bottom. There's your seasonal date, technically. You did get a little key reversal, actually, the next day. And it really tried to tackle that gap, and it really hasn't had a lot of success. It sold off from there. You've had another crack at that gap, and then obviously we're in this situation. We had a little inside day today. I will note, just looking at the position of this market, just standard little, simple symmetrics of looking at retracements just in this little tight range. For me, we'll get this set up exactly just to make sure we're on top of it. The 46.21, low of 44.28. That 4525 level as a 50% point, as you can see, we had, one crack at it, couldn't close above, another crack, couldn't close above today. And we're really holding in the middle of that gap. So for me, that's really going to be a key point in the coming weeks. You've got the 5th of February there. You've got the low there being the 9th. That's starting to stretch the friendship, if we're going to call that the seasonal date low, which is, too many days out in my book. So I was comfortable to be thinking that might have been the low, market moving out from there, but obviously it's since pushed away. The volume obviously was a little bit thinner today. And so for me, what I'm seeing in this market, just a sentiment indicator, is every time the buyers come back into this market, they're just not being able to gain much traction at all. They're certainly being able to move the market in the direction, but the market's certainly not holding those directions. But that being said, if we can close this gap here in the next day or two, and maybe we get a solid push out, and we had the market moved up higher today because we had Ken Henry said the crisis is over and we haven't lost as many jobs and all of those sorts of great fundamental ignoring or fundamental distractions sort of probably held our market up a little bit today. But, you know, if the market gets walloped 250 points tonight on the Dow, I don't think it really matters what Ken Henry says. This market will go lower. So, you know, time will tell. But all I'm suggesting to you is that, you know, that is a low there on the 9th of February. You know, don't fall in love with that as being the low in the market. Really hard for me to start seeing serious sort of, particularly trading the SPY, being seriously bullish until we can close that gap. It really, you know, maybe what would make me quite happy is if you got a little higher bottom that closed that gap and away we went above that 50%. But that's really just sort of one little insight into this market. And, you know, we've pretty much got a pretty firm downtrend in place. Now, if we go back, and that was the point I wanted to make, is that if we go back and look at the swing chart, which is just a one-day swing chart. Sorry, Dave. Okay. Dave's telling me it's sitting right on the one-by-one traders from the 13th. From the bear market low. Fantastic. I won't actually go and check that, Dave. I'll take your word for it. But it's we'll just keep to the small picture. But yeah, it could be finding a little bit of support there. As you can see, we've got today and over the last couple of days 109 points. You know, it's obviously expanding to the upside, contracting to the downside. Until we can close that gap, it's going to be a bit difficult. But I'd really want to see this market start to do, you know, in excess of 128 points to the upside, and that's actually going to start to tell me that we're expanding. So that could be one way. You know, if we get another, what's that going to be, 19 points higher than the candlesticks. There you go. I don't think that feature's ever been used in my software. If we get another 20 points off that high of that day, that's 45.37, 45.57. Yeah, if you get another 20-odd points above that top, now what that's going to mean is that this range is expanding. That means that we're going to actually have closed that gap. So just to, you know, explain what I mean by that is that I'm watching these ranges here, and what would be a real key indicator for me, looking all the way down in this move, you know, 353, we can kind of ignore that swing up because we know that was a Christmas rally. 50, 84, 67, that 239 is a bit of an aberration as well. 80, 100, 115. You know, 65, 111. They're all kind of numbers, 107, that are very sort of sitting. That's probably 128 is probably the high side of that number. So if we could get another 20 points up, that would mean that we are getting an expanding range. Now, we've already got the first expanding range. I get that. But I'm sort of looking in context of this one here, which is being, you know, that's probably the benchmark of the upswing so far. If we could get 130 points, that means we're going to close the gap, and that would make me a little bit more confident to start getting long this market. And the fact that Dave said that it's sitting right on the one-by-one traders, well, then maybe that is going to be a little place for this to bounce from. But I'm not confident that any sort of bounce out of here is going to produce much other than a, you know, opportunity for maybe another lower swing top. So if we take a look at this, you know, situation here, you know, just looking purely to 50% retracement coming back the other way. You know, and this isn't a forecast on the SPY, I know, but it's always, you know, worthwhile having some dates in our head to be watching on this market. You know, 30 days down. You know, if we were going to look for a 15-day movement to the upside, we're going to be looking about, you know, 23rd of February. All right. So if very quickly, if I just put a vertical line on there, you know, what would be very nice if you could get a 50% retracement in time and price on the 23rd of this month, we could find that you know, a little 50% retracement. You know, can't close that gap as we talked about. You know. I haven't actually checked this, so I'm going to do it for my own curiosity. If I just ran some degrees back from that top, well, we're going to get 45 back to, you know, our major top, 135, 180 is not much. So you got a little bit of time by degrees harmony there, but I'm certainly not suggesting that that's a major turn in the market by any means. But might be a short-term top anyway, or an area that we could watch. Interesting. We're sort of getting some harmony back there to that May. All right. I'm satisfied with my curiosity, so I'll move on. But I really can't see, you know, if we are going to run out to an area like that, it really might just present another opportunity. Now, one of the things that, this is very important that I want to spend a little bit of time on, as I said, is that if I come back to camera and I'll hopefully jog your memories. Remember in our first session back in September of last year, one of the things we were looking at, and one of the first chapters or two of the Ultimate Gann course, David actually started to talk about the position of the market, and he started to talk about how to rate strength and weakness and all of those sorts of things. It was one of those very basic barometers that he used, and one of those very basic barometers that he used was obviously, you know, similar to what Livermore used in his trading, was that he would look for a market to overbalance in time. Now, you might recall we hadn't seen a market do more than 3 days down or 4 days down on a daily chart. So when we're counting down, and what we're looking for is that first opportunity where it had 4 days down, we could say that the market is overbalanced in time. So if we take a look at the current position of the market, and we look at the at this swing down, we'd have to agree that it's actually the biggest sort of sell-off or run down that we've seen in since the this so-called bull market recovery, which some people like to suggest is occurring. As some of you pointed out, Ken Henry and all the guys over at the Reserve Bank, are very good at telling us these things. And I guess everyone's got a job to do, and from an economic perspective, potentially, we've had some sort of recovery, but we're certainly out of the global financial crisis of the seizure of the credit markets and those sorts of things. But that doesn't mean that economies are smiling along and running very, very fast and ready to boom again. So we know that we've had about 26 days down in that run. If we go and take a look at that sort of sell-off through there, I think it was even less in terms of time. Here we go. So it was only 21 days down. So what we're doing is really we're just looking at the sell-offs in terms of time as far as any pullbacks are concerned. We went through that prolonged sideways period. We then made that last little sort of rally into the last little sort of Christmas rally into that top. If we go and take a look at where we're positioned currently, if we pull on that, we're at about 29 days down at the moment. So what we can say here is even if that's going to be a short-term bottom, if I was doing a time trend analysis chart, you'd argue that in context of this move, we're actually starting to do, we're expanding ranges in time to the downside. So that's part of the reason why I see this little sell-off here, and really when we're talking about this as a sell-off, you can't get much further than the fact that it really is a minuscule pullback in terms of what this market's done. We're only sitting on about that 25% of that pullback. We're sitting on, about 37.5% or 38.2, which is a good fib number of that range there. If we sort of even pull on that one there, about 66%. So we're not talking about a massive sell-off in terms of how much money this market's given back. It's only about a quarter of that upside move. But the fact that it's overbalancing to the downside, that's part of the reason why I'm thinking that this is more of the roadmap that we're probably likely to follow, followed by potentially another one down into there. Now, obviously, don't look at the end of those lines and think that's a forecast, but that it may not be a straight line down. There could be a few wiggles, but I'll be very carefully watching that those numbers there to see what they tell me. But that's kind of the quick little view that I can give you, on the share price index, and that obviously helps us line up with something like Newcrest Mining when we have a chat about that later. Now, I talked about that we'd mentioned the S&P 500 as well. It's starting to get into similar territory. If we take a look at it on a swing chart, we're in a situation where we've got a slightly clearer pattern here because we've got a clear downtrend on the daily chart, lower tops, lower bottoms. We're starting to see expanding downside ranges. We've got a slight expansion to the upside here. So once again, that could be shaping up to give us an overbalancing price long trade. But at this stage, trend is clearly down. Obviously, it hasn't given back, the same sort of, it's given back similar sort of returns than what we've seen on our local market here. So if I measure the percentage retracement, we're actually about 20%. So it actually hasn't slid as far. Now you got to remember what might have, I guess if I pop out of here, and it is an economic question. What's probably caused our market to slide a little bit further than say the US in what we've seen so far in 2010. Anyone sort of hazard a guess as to what if we've fallen 25% of our March to January top, they've fallen 20%. Why would we maybe be falling a little bit further than what the US markets have done so far? Keeping in mind that potentially our RBA view on interest rates and those sorts of things, probably it certainly would be one contributing factor, but certainly not what I'd consider to be the driving reason. Resource driven, absolutely, Graham. You got to remember what's been hammered so much in 2010. It's been resource pricing. Now we're still seen as an American dollar recovery. Yeah, absolutely. I see a fair amount of shift of money coming back into the US. I think people have finally realised that the US, whilst it's a basket case, it's the best basket case, if that makes sense. People are starting to worry a little bit about what's going on in China. Okay, you can say the Australian economy's been doing well and all those sorts of things, but we're so heavily, it's really wobbling. And the people I know that have been there on the ground there, and little bits and pieces that I'm hearing back from people who have been there recently, is that it's, you've got this big curtain as far as information's concerned, and people just stick their heads up over the top and says everything's good. There's no other view other than that everything is fine. And if you go there and actually do a little bit of on the ground stuff, you'll find that there's a little bit of dissension in the ranks, so to speak. But all I'll point out is that we're perceived as a higher risk-based economy because we are heavily geared to resources. If China stops producing, or if the United States can't continue any sort of recovery, it won't consume. That means China won't manufacture to the same extent, and then that means we suffer here as well. So, you know, we'll probably be a little bit more insulated in terms of economics as far as maybe inflation and interest rates and those sorts of things. But the reality is that we're perceived as a higher risk economy based upon our resource exposure. So that's probably where people are repositioning a little bit, maybe out of the Australian economy back into the US economy, particularly the US dollar. So we've seen the Aussie dollar as one of our markets come off, and it was great to meet a few people over the last week or two who've done really well out of the Aussie dollar. I met some guys in Perth and in Brisbane at the trading tactics class that I have been at recently, and they've done quite well out of that. So we've seen our Aussie dollar come away. So there's certainly some pressure on our economy. So that is probably just maybe why we're getting a little bit of decoupling from one to the other. All right, so back into profit source. So we know the S&P's kind of hasn't fallen as far, but look, it's still confirmed in a downtrend. We haven't really taken out those 50% points where Gann says when a market comes back, touches those 50% points of those, you know, bear market high or bull market high to low, you know, they generally represent a sale or a short sale, as he would like to say. I guess one of the things I'm closely watching just on this little pullback here is just what's the context of how far. So I'm sort of trying to see, all right, well, we've come back about 100%. I'll make sure that we're spot on there. All right, so yeah, not bad with this profit source thing. So we're sitting right on that 100% point. So the fact that, as Dave pointed out, we're sitting on a 1 by 1. I've got no issues whatsoever with there being a little bit of a bounce out of here. Interestingly enough, though, you know, when you take a look at the area where we have a huge amount of resistance currently, all right, top. If it gets back to that 50% point, that's obviously going to produce a potential for, you know, a quadruple top, etc. So I've got no problem whatsoever if this market bounces out. I would even expect it to show some, you know, return to life. These have obviously been some interesting sort of sell-offs. Market will start to get everyone back in positive. It's cheap. You know, it's all good. There'll be some economic news that makes everybody feel better. There should be some sort of little recovery. But as I keep thinking that there's a very good opportunity to see those lower, or seeing those rallies as opportunities to continue to short sell. So time will tell there. All right, let's take a quick look at gold, and then we'll get into Newcrest and the Aussie dollar. So what we have here is a situation where, you know, we've got pretty much some sections starting to unfold. Yeah, look, absolutely, Annie. That would be a you know, I forget the exact quote, obviously not being the walking encyclopedia that Tim is, but that being said, you know, having a number of attempts, and if it breaks through, then obviously they're all positive signs. But yeah, look, you know, have that in the back of your mind, but you've got to weigh it up with the other evidence that you've got at the time. You know, as we know with some of Gann's cliches and rules, you know, he says one place, yeah, on the 4th attempt, if it breaks through, it's strong, and I can find you another place where he says, well, on the 5th attempt, it's strong, and the 2nd attempt, it's strong. So, like all things, we've got to keep it in you know, reality to what we're looking at. So, yeah, if it breaks through, we can see that as a positive. All right, so if we take a look at gold, we know that we've got a pretty strong top in play. That's now, you know, remember when everyone was calling, you know, $2 million an ounce for gold? You know, we're starting to get back now towards that, you know, sort of $1,000 an ounce level, potentially a little bit of a double bottom in play if this market continues to go. I think we can comfortably now use this as a first range out guide. Okay, so if I'm expecting this market to, you know, to head lower, we're sitting right on that 75% point. You know, I think we'll definitely get an opportunity to see a white screen. You know, gold at around those prices, I really wouldn't be bothered by. Okay, so if we're really starting to think about where we're seeing this market, I guess on a very micro picture, maybe we could argue that we're in a first little section there. This is a second section. Maybe it's going to stop there. I'd like it to probably maybe run down there as a second section. Maybe on some, you know, see some sort of recovery. You know, some little bounce, and maybe into maybe a March seasonal date, and then maybe a sell off into, you know, early April. That would really be, you know, a perfect sort of little proposition for us with our Newcrest mining stuff. But you know, that being said, time will tell. But you know, 3 clear sections into early April would give you a really good idea whether you're looking for a top or a bottom. As I said, we could see this little movement here push out a little bit. In what I mean by that is that, you know, that could be a little interim bottom. Maybe we're going to see a bit of sideways before we get a sell-off. Here's where I guess being patient, and I'll talk about this later now that we've sort of got potentially, or once I validate, you know, in your mind, potentially some dates to watch. You've really got to sit back now and then say, all right, let's not tweak it too much. Let's wait and see what the market will do. you got to remember as well, we know that middle of March has always been a pretty strong place for gold, and so taking a look at what's occurring around about middle of March will give you an idea of whether we could be looking at tops or bottoms in April. But as you can see, come back, tackled that 50%, and for me, it's certainly wobbling a little bit with regards to where it's trying to get to. We know we had that really big sell-off the other night. We haven't even come back to 50% of that range yet, so it'd have to come back and test that and see where it's off to. Now, what's been driving, I guess, this big fall in the gold price is obviously been the strength in the US dollar. So we've seen obviously quite a strong recovery in the US dollar. This is obviously the dollar index. It's really nothing in comparison to how far it's fallen. Okay, so if we go, if you go back to even 5 years ago, or sorry, 2001, so we're talking, what, 10 years ago now? I'll get the maths right in a second. We've pretty much nearly halved in value in relationship to the US dollar to the other currencies. So really I'd be watching, as a guide for gold, is to watch the recovery in the US dollar. And, Noel's done some great work for you guys in the Platinum program. For you guys who've got access to the MFC forum, the Master Forecasting Course forum, one of our really good trader, Stain, a guy I know pretty well, he's done a lot of really good work on the US dollar, so in line with some of Noel's stuff. So certainly some good discussions going on there. Maybe that could be an area to watch, and maybe a recovery even into sort of the end of the year on the US dollar. So while ever the US dollar continues to get stronger, we can expect the gold market to weaken. Now, what would cause people, what's causing people to potentially return to the US dollar? I don't want to make, I'm going to make this a 2-minute discussion, then we'll get stuck in. But my 10-minute window is, I'm looking at the time here thinking, yeah, it's about 10 minutes, and obviously I apologise, it's not. But what would be making people return to the US dollar as a intermarket analysis? Okay, well, Elizabeth's saying the euro's weakness. Yeah, that's one thing, but they're kind of interrelated. So one tends to drive the other, and vice versa. If the euro weakens, people obviously will go to the US dollar, and vice versa. The euro, in my mind, is pretty much hurting, and it's going to continue. I heard a really good one. I've got to digress for a second. You've all heard of the GFC, the global. We come up with the best acronyms in this industry. You've got the BRIC countries, which is Brazil, Russia, India, and China. And I heard another one recently. Did anyone hear about the PIGS? Portugal, Ireland, Greece, and Spain. They're the PIGS. Okay, so they're the 4 countries in Europe that are apparently basket cases. There's 18% unemployment in Spain, and Greece is about to default on its sovereign debt, and apparently Ireland's not much better. And so the PIGS. So keep a good eye for the PIGS and the BRICS and the GFC. So there you go, 3 acronyms. You should teach your kids those before you go to bed each night. But look, as I said earlier, as much as the US is perceived as not being healthy, it's the best of the bad lot. So what starts to happen is people start to return their risk aversion away from emerging markets. A bit more confidence in the US, yeah, Mark, but I think what you're seeing is a decreased confidence in some of the other currencies rather than a return to confidence in the US. I think people are just starting to say, look, the US, as bad as it is, they lost, more jobs than they thought, and they, had a few in the shed that they didn't count, and all those sorts of things. They're still not out of the woods, but they're certainly travelling a whole lot better than like some of those European countries. So I think we're going to see a continued return to strength in the US dollar, which will automatically mean some pressure on commodities, okay, of which gold is obviously one of those. So keep that in the back of our head, and that could be a guide to helping us with our Newcrest stuff this year. All right, so let's take a look at the Newcrest market, and let's, very simply, we'll take a look at what's happened in the last day or two, well, since we last got together. Obviously, we're going to do a lot of work on it tonight, so we won't spend too much time. We're in a situation where, interestingly enough, the low in this market is actually the seasonal date, which is the 5th. We know we've got a lot of birth of contract information. We've got a lot of data that relates to dates that exist early in the month. If I find my information. So if I'm talking about the framework, sorry you guys can't see, you've got birth of contract 4th of June, all-time low 3rd of December, all-time high 6th of March, so 4th, 3rd, 6th of the month. We're certainly comfortable to know that we get a lot of turns in the early part of the month, and obviously some of the work that was sent through, it might have been from yourself, Graham, I think, or I've had a bit sent through, and I will respond to them. I just thought we'd get through the work first, is that, looking at where they're positioned on an ephemeris, they're all sort of, between about 12 and 15 degrees within the month. So all of those dates sort of, anytime you're seeing a turn in those sort of early parts of the month, you've got early January into early February, you've got a little 30-degree run down. So you've got, 3rd of December, 7th of January, 5th of February, you're seeing, 30, 60 degrees, everything's lining up. So that probably, for my mind, is got a little bit of merit to being a little base in the near term. So it's, in line with potentially a little bit of a recovery in gold. We might see obviously the markets and potentially recovering the equity markets. We've run about 100%. I'm not suggesting that this would be the long trade of the year, and maybe it's going to be a difficult one to get a hold of. Obviously, you've had 2 big outside days there. You're going to expect some volatility to continue. I think if you're going to trade the long side of this market, you are going to be trading what is against the major trend. So be very clear with stops and be nice and tight and have a clear method as to how you're going to manage that. And we're starting to really potentially see, let's say that is the low interim at the moment. Let's say we then get a little, we've had obviously a little recovery. Let's say we've had a sell-off here. Oops, gone too far, but that'll do. Some sort of recovery. And I've got a couple of dates in March that I'd like you guys to watch, be it wherever they are, followed by, what could be a little sell-off into those April dates. So we'll take a look at that. But all I'm saying is that, you're getting a little bit of consolidation around about the 5th of February. You're getting a little 100% of the range. That, to me, would make a smart place to obviously close out any shorts and just wait and see what this market produces. Now, I guess I just wanted to touch on the fact that obviously we talked about getting short out of January here. We talked about going short into our early February date. Now, obviously, we're looking at early February. That would have made us feel pretty clever when we saw the market sort of low there, covering your shorts through there. I talked about stopping and reversing, and that's where we were. You'd think you were pretty clever being long on that day. Next day down, you'd be saying, oh, that's okay. That's only the potential for a higher bottom. And then obviously the next day it sort of gapped down. It would have taken you out underneath that low. That's probably where you would have had stops on the long side. And then obviously the rude thing's been able to sort of jump out from there. But it's really been rats and mice stuff since then. I guess what I'm trying to say is by trading this short into your pressure date, which was early February, that would have given you a whole lot more confidence in coming back out the other side and potentially breaking even or taking a little bit of a loss rather than just trading out the other side. Now, one of the huge challenges that you're going to face as you develop is first and foremost, you're probably going to try and trade out of your pressure dates, and that's obviously how we guide you in the early stages. But obviously, I think for the work that we're going to do is that also try, the best you can to trade into your date as well, and that just gives you the David used to say money for the sideboard to really sort of do some work on the other side. And as you said, we haven't got that right as far as a turn in early February. If the 5th of February is a low, you could probably still claim that seasonal date. We were sort of looking at the early part of February, a day or two late. The forecasting says we were probably right, but the trading actually says, well, we had these challenges holding through this period here and probably couldn't have held long through there. So all I want to do is acknowledge that, because that's where the trading and the forecasting bit is definitely a different sort of discussion. All right, so we'll come back and expand on that in a whole lot more detail. Interesting to note that the Aussie dollar has obviously rallied a little bit, but we've seen about a 9-cent move off the top that many of you guys were comfortable to be short from. We remember that we had the 1 by 1 off the top, squaring out that top. It's run down exactly 100%. So hopefully you guys, if you were watching that pressure point, you probably would have been able to get out pretty close to the low or very thereabouts. Trailing stops pretty tight. Once again, this market's recovering, but really it's quite a weak little bounce in terms of what's going on. There's a lot of down days in there. Maybe it'll come back and test 50s, those sorts of things. But I still think once again we're in line for a short position rather than a long position. Keeping in mind that if the US dollar does continue to maintain some strength, that's going to be a bearish influence for our Australian dollar. All right. Hopefully that's got you primed up, got your trading brains on, so to speak, got your thinking caps on, as I said. But what I want to do now is just make sure you're all happy with that little synopsis. Okay, as I said, my 10-minute synopsis, which has brought us to 8 o'clock. Is everybody happy with how that sits? Agree, disagree? Yep, all makes sense. Great, because if there's questions, let's get them out now. Otherwise, I want to push into the next bit. Right, yeah. So good stuff. So everyone's sort of probably keen and waiting, okay, for the next summit experience. All right. So I guess I wanted to start off by talking about the process, not in the detail that we did last week, but just really starting to get your head geared around what we're trying to achieve here. Because as I said, we're not going to be able to take you through every single click, every single item, every single button. Interesting. Would anybody like to offer up? Because I know some of you guys have sent me some very complicated spreadsheets, which particularly Linda, your stuff was great. I'd come and get an Excel lesson from you any day of the week. But I'd be interested to know how many hours, and it's not a competition. If you spent 10 minutes, that's fine. But a lot of you spent a fair amount of time, I think, putting the work together. So I'd just be interested in how many hours of work you guys, if you're prepared to feel confident to offer up how many hours of work you did, just in bringing together what you thought was a fair amount of work or an acceptable sort of analysis of Newcrest. So Wayne said about 5 hours. Okay. Graham said not enough. Well, I could always ask, never, there's always, you could always do more is probably the discussion. So maybe a couple of hours. Yeah, Linda, I'm not surprised you said about 10 hours. If I showed everybody your spreadsheets, they'd all be emailing you separately wanting to know exactly how you did it. They'd all want copies. I tell you, there's a good little business there, Linda. Sell them on the side. No, don't do that. You'll get in trouble. I shouldn't say those things, okay? You guys can work that all out between yourself. Key sort of, yeah, Debbie said lots, probably about 10 to 12 from Darren. Look, I'd probably say I've spent maybe a good 6 to 8 just in this week alone, just pulling apart bits and pieces. Now, keep in mind that probably I'm a little bit quicker with regards to, doing things. So, maybe 6 to 8 of my hours might be double yours. I don't know. It's hard to say. What I want to get clear in our heads is going back. So thank you for sharing all that information, by the way, because that kind of gives me a bit of a reference point. Oh, that's terrible, Elizabeth. Well, first and foremost, don't worry about, having to do any analysis on Newcrest. Obviously, there's other things in life that take precedence over that. And I can, this week's sort of perfect example of why we couldn't do Tuesday night. So look, make sure you get onto the tech guys and get your profit source up. Let us know what we can do to help is probably the best way I'm going to sort of describe that. But I hope that resolves itself as quickly as you can. And obviously, thoughts are with you in that difficult time. So what I wanted to do is come back to what it is we actually want to achieve. Okay, so having a plan of attack and sure, we can talk about the funnel method and the tools and the analysis and all of those sorts of things. Probably what I like to do is think about it in a very basic sense, which is David says to us in the Ultimate Gann course, there's 5 things that we need to construct a classic Gann setup, which is really what we're after here. We're looking for major tops and bottoms. We're not we'd be happy for, monthly swing tops and monthly swing bottoms. We'd be even happier for yearly tops. At the end of the day, what we want to do is be able to forecast a turn that's going to give us a trade. Because, getting it right from an ego perspective is always very nice, but it's not necessarily encouraging to, the bottom line. So what I want to point out is that we know that the 5 things that David says to look for is we need time, price, pattern, position, and volatility. So can we forecast time? Yes, we can. Can we forecast prices? Yes. But am I as worried about price as I am by time? No. I'm going to show you the method that I use where once I've got my dates lined up as far as where I'm thinking the market's going to lock in, I'll actually run a series of price pressure and I'll just wait for the market to trade into any one of those little zones and know that they are relevant in terms of price. For my mind, I've never felt, and maybe this is, where I need to continue my development, but I've never felt that wound up about the need to know the exact price. Now, we know David called, obviously, the 1855 top to the point, and, that's kind of like once in a career type stuff to get the date and the price. Obviously called the Gulf War low and he called it to the minute, but I think that was more of a time-based call rather than a price-based call. So, if I take David's lead, I guess probably timing is what I've been sort of drummed into me as being the most important bits and pieces. And if you can get the price to the point, well, I think you sort of not retire on that, but you don't get a thirst for that, having the need to get the price as well. So I'm only throwing that out there, not as because trying to get a backdoor out of here, but it's just not something I've been able to do on a consistent basis to get to the exact cent on a market. And nor do I need to be able to when you're looking for the other things to come in. So can we forecast time? Yes, and that's the most important. Can we forecast price? We can have a series of those, be them tops or bottoms. We'll wait for the market to tell us. We need pattern, we need position, and we need volatility. Now, those 3, unfortunately, we can't forecast. You can't forecast island reversals on which days. Well, you can forecast days that markets will turn, but you don't always get the pattern. You can't forecast key reversals, hook reversals, all of those sorts of things. So pattern is one of those ones you have to wait to trade and have to wait to see it forming. The position of the market, well, obviously, you're going to note that around the time that the market's coming into form or coming into your potential turning date. So in other words, you've got to be on red alert. Do I have the right position for a top or a bottom? And obviously volatility. Well, you can't forecast volatility either. So in that regard, the last 3 have to be keeping you guys on red alert when you're getting close. The first 2 is the work that we're really going to focus on tonight. But what I'm trying to say is that we get the first 2 bits done, and then what you've got to do is just sort of go into standby mode a little bit. You obviously still continue to analyze and take the trades accordingly. But once I firm up an area that I'm looking for, what I don't try and do is keep trying to tweak those dates as I'm running into it. What I'll try and do is give you guys some areas to watch, and we're just going to have to wait and see what the market does. As we get into around those dates, a week out, we start to go on red alert, we start to get very close to that market, maybe we're going to intraday chart it, all of those sorts of things. We're waiting for a signal that might line up with our view as to where this market should be. So we're going to look for pattern, position, and volatility. But what I tend to find is that a lot of people get the forecasting bit right, but they don't get their head right as to when they need to go into those last 3. And the other thing as well is that I've always found this is that if I didn't have it, and I had a good chat to the guys last night about this, like we're looking, what now? We're at February, I don't even know what day it is. Can you tell I haven't been doing much work? Yeah, the 11th, thanks. Thanks, Elizabeth. I haven't been travelling all that much, and days just sort of blur into one and another. So we're in about February the 11th, okay? So I'm looking around about this date in April, so call it the 10th to the 12th. Now, I'd like to think that we're about, February, March, April, we're about 60 days out. We're about, call it 2 months out from our date. The interesting thing for me is that that's about the sort of time window that I like to be organised. So probably about a month out is probably about the least amount of time I like. Now, the reason I mean that is that I want to be organised with my dates. I want to be on top of the ones that I'm watching. Even if I've got half a dozen dates for this year, I'd want to be sort of a month or two in front of all of them so I can watch what this market's doing. Then what I do is I just sit back and leave them, and I'm not trying to tweak, let's say, the most current date in April. If I'm comfortable with that, I'm not going to try and add new things to that. I'm just going to watch this market trade into, about the 10th to 12th of April. Now, the date I've got in December, well, that one is fluid, all right? That one I haven't locked in mentally yet. Technically I have, but mentally I'm still waiting to see if the market produces new information. The reason I make this point, and I'd be interested if you guys have had this experience with bringing together a date in the market, as you get closer, you try and add things to either enhance it or to validate it or to continue it. And in doing so, what you can often do, I don't know if anyone's ever talked themselves out of a forecast. Let's say you had a forecast date a month or two out, and as you got closer into there, you found more reasons to potentially not be looking at it, or more reasons why it was another date. And what tends to happen is your eyes go to the next date, and then you don't obviously do what you need to be doing and the trading side of those dates. So anyone ever talk themselves out of a forecast date and then found that they were right? So Wayne said that, yep. Wayne's Linda, yep. So as you can see, I've hopefully read your mind. So, all right, so, sorry, I'm just turning off my phone. Yeah, do it all the time, then you miss the trade. So yeah, all you guys are sort of saying, yeah, this is something I've experienced. So, this is part of the reason why I'm trying to get your mindset around it. It's a 5-minute discussion that, probably we could afford not to have, in the sense of we've got a lot to talk about, but it's so critical to bring this together and to actually make it real. So keep your eyes on the prize, have it set up. Once it's there, you've got to commit to your own analysis, and then you've got to back it, okay? And if it comes in and it doesn't give you a signal, the market doesn't turn, there's no way to get in, and there can often be a way where you get the top or the bottom, but you can't trade it, then you turn around and you say, well, look, my analysis was correct, but then the trading side of it didn't produce a way to go forward, or I was committed to an April date and nothing happened in April. Okay, so what's maybe my next date? July, August, December, all of those things. Where's the new information? But try and do that review after your date as opposed to the day before, because I've seen plenty of times where, yeah, you get distracted, you miss the point, you bring in some final piece of information that's really minor in comparison to what you've brought together already, and it's enough to knock you off course. So I don't want that to happen. So what I'm going to try and do is we're going to lock in tonight for Newcrest Mining what we're interested in, and I want you guys to try and stay the course and not try and push and pull it too much, unless I tell you that you need to, all right? And I'll be definitely on top of all of this as it comes into early or into April. All right, so that being said, hopefully that's given you a mindset that can approach this. Now what we're going to do is actually get stuck in. I'm going to pause this camera, and we're going to get stuck in and actually talk about what it is to bring together a forecast on Newcrest Mining. So let me bring up a fresh chart. So we'll just start out with Newcrest Mining. Now, as you know, my favorite way to get a construct, and we've done a lot of this work already, but one of my favorite ways to bring together market information is to obviously take a look at master time cycles. Now, a lot of you guys in the work that you had done sent in some great work on master time cycles. Now, first and foremost, we know that Gann says to focus on multiples of 10, so 10-year cycles are 120 months. So starting out the gate, I'm not going to spend a huge amount of time, but obviously it's a big part of why we think what we're seeing is unfolding. If we take a look at 2000, we've seen obviously what is predominantly, I'll zoom in even more. So what we've seen is predominantly a bearish year. Okay, so it started out in on the seasonal date, 4th of January, the market sold off, ran into a late January, early February sort of event, of which it's then recovered into around about the seasonal middle of February. As it then ran down, obviously it's lowered around about the 9th of March, 10th of March, so the market's made a really steep dive into there. It's then sort of made a small recovery into the seasonal date, followed by a 11th of April low. Okay, so if you're going to want to call tops or bottoms in this market, I think calling the January top was worthwhile, but guess what? We can't go back and play that game. Obviously, the April low sticks out to me as being important. Now, looking at some of the other major events in this market, now, sure, that July top, you'd say that's a really big, June top. There's also sort of middle of August there. There's also a good top there. But if I'm looking at probably what produced the next really major, sharp turn in the market, early November, once again the 10th of November. So we're seeing a lot of bottoms coming in around the 10th to the 12th. But then we've got the 5th of December there. So tops there being the 5th of December. And so, obviously we then saw a market have a pretty serious run down there. So from my perspective, there was obviously a number of areas we could have noted. For me, the December one's important. Obviously the April one is also important. If you could nail those 2 points for the year, that was the highest price in 2000. So if you could nail, oops, tell you a lie. Yes, it was just, all right. So the highest price in 2000, and that's the low. So if you could call the low and the high, in that year, you'd be happy. So for me, April and December stand out as being the major turns. Now, keep in mind that trading into December might be a more profitable adventure than trading out of it. So as you can see, really steep run into there. So that's just one of our decades, though. That's 10 years. So we've got a couple to factor in. Now, if we go and take a look at what happened in 1990, okay, so keeping a broad window here, this is the 20-year cycle. Obviously, we've got a market that's jumping around a fair amount again. We can see here the end of January, we saw a pretty strong sell-off. We saw the market fall into middle of February, rally up until the middle of March. So middle of March is producing not what's necessarily yearly tops or bottoms, but is certainly producing a smart area to watch, and then a final run into the 12th of April. So once again, 12th of April, that date sort of stands out to me on a master time cycle as being important. Now, you could also say, well, what about this date here on the roadmap? Okay, so you've got this big spike top here on the 14th. Okay, so once again, that sort of 14th of the month, 10th, 11th, 12th. Once again, I'm quite happy with all of those dates. So that sticks out as being an interesting date to watch in August, very close to our seasonal date, which I know, Darren, you did some work on. And then obviously we're running down in here into our December date. So we've got about December the 10th in terms of, that early part. So you've sort of got the 5th of December, 10th of December. So we're a little bit out, not quite as tight as we are on the April date there. But in looking at the share price index, for me, the 20-year roadmap is definitely following, and even bigger ones than that. Now, we can't go back 30 years on the on Newcrest because we don't have the data there. Very quickly, we could go back and take a look if you want it. Now, this isn't the most accurate guide, only because we can't lock in and say that gold is exactly going to do what, or Newcrest is going to do exactly what gold's done. But if I wanted to go back to 1980. This would be just give us another barometer if I wanted to go back to my 30-year cycle. Go away, there we go. So if I went back to 1980, so you can see, yeah, absolutely, loves. They're all sort of hanging in and around there. So in 1980, we saw a top in January, a turn in the middle of the seasonal date in March. We've seen a low come in about the 27th of March. Spot me 3 or 4 days, there's your early April. And obviously then the market's run out, and we've also seen a strong turn in the first couple of days in. Now, it's not the major top for the year, so that happened to be the seasonal date. But as you can see, had you missed that first little bit, had you gone short from that point onwards, there was still a fair amount left in the run. So there's a little bit of early December going along in there as well, but that's not a direct correlation, so I don't want you to kind of put your house on that, so to speak. Now, turning around and taking a look at the 5-year roadmaps. Okay, so that was obviously something that many of you had done as well. So you went back and had a look at 2005, and this is where we can start to get a little bit of not conflict, but we can start to see things a little bit differently. So in the middle of 2005, you'll see that we've got a very different year in terms of picture. We can see here that the March seasonal date is obviously quite strong, but in the context of this run, obviously very strong top. I've got no problem with that, but it really was a top in what was, pretty much a secular bull market at that stage. The market was pretty clearly heading to higher prices. So we're not maybe talking ends of runs here. We're talking maybe just a tradable turn. Early April, once again, we sort of saw some April stuff going on there. Here's where June once again came in. End of June was the area we were watching. Early July. So as you can see, that has some weight. But I guess what we're seeing here is major top versus a sort of secondary top. So whilst I think that July area was worthwhile watching, and even into August, I do think that it's more going to be a secondary turn. It could still be a very good turn to trade. So July and August would definitely be places to be watching, but suggesting that I think the areas that we're watching could be on the 10 and 20 year could be a little bit more powerful for us. Now we've sort of got early December here is not really giving us all that much. We've got the end of the month there in November. Early in the month we've got a high swing bottom, but not really what you'd consider a major hit there. So there's your 5-year cycle. not as conclusive. It doesn't back up the other two, is probably what I'd happily suggest. There's not an April and a December event, but in light of the work I'm going to show you, you might start to see why I've picked on those as being areas. Now, the other one we wanted to take a look at was obviously 95, because that's 15 years. And as you can see on the 95 roadmap, we've got a February low around about the 8th of February, which is kind of where we are now. Market ran up and sort of made a top around the 19th of April. There was a little interim top on the 6th of April, so if you average out those tops there, you're going to get somewhere, around about the 10th to the 12th. Pull back into June, major run up into the middle of July, run down into late October, and then what we saw was a little top here in, late November, early December, so not major stuff there. So this roadmap is also, the 5-year roadmap is not probably as conclusive. Now, if I jump out of here and just come back to you guys, I've looked at what I consider, I have married this against my view on gold, so that's probably some of the things that we won't necessarily pull together as part of this forecast, but you would go back and check some of this against gold. Keep in mind though that gold does things that, Newcrest Mining, you could probably say, will do things that gold doesn't. Remember, it's got pressure because it's a stock that sits in an equity market as opposed to a commodity that sits based upon supply and demand. So, for example, if gold was rallying but Newcrest Mining was under pressure to produce profits and those sorts of things, regardless of whether it's a gold stock or not, it will go under pressure. If all the equity markets are falling, it tends to get dragged down with that, even though it happens to be in a resource that might be heading higher. So when I put together, I might just share just a simple spreadsheet. We talked about, obviously, bits and pieces that related to, if I talk about sort of the framework, we start out by putting things like birth of the contract, all-time low, all-time high, 4th, 3rd, 6th of the month, so those dates are obviously relatively useful. I just started putting together some master time cycle work and obviously looking at 05, 2000, 95, 1990. I also looked at 03 and 96. They relate to 7-year cycles, okay? 712s are 84 months. So that was 84 months. That's 168 months. The real sort of places that I was getting some correlation, I guess, was that, we had a high in December. We also had some lows in December as well. Interestingly enough, we had some January stuff, both in 1990 and in 2000, and we've seen that come together already. So for me, the fact that January has already given us a lead, we did see the 14-year cycle, January was lining up as well. What I started to find was that a lot of these turns were around, particularly the lows in April were around the 10th, the 11th, 10th to the 12th. So there's certainly some dates to watch. But really when there's some May in there, as you can see, there's some July, there's some September, there's a lot of March in there as well. But all of those things, I guess, didn't, to me, weight up in sense of the bigger picture and the major turns. For me, the ones that jumped out were off the 1990 and the 2000 roadmap. So that's your 10-year cycle, that's your 20-year cycle. They're the ones that Gann says to watch. The 5-year stuff is probably not, Gann does talk about it, but he doesn't give it nearly as much weight. If we had 30 years, if we had 60 years, if we had 90 years worth of work on Newcrest Mining, then obviously they would be a much better barometer for us, but we don't have that. So really what I came to the conclusion here was that now that I've got these anchors in terms of April and December, what does that really mean to the discussion? So what I'm going to do now is essentially, I've agreed in my head that those are places to watch. I would go through the process with all the other tools and I would try to firm up whether or not they were smart places to be watching. Now, if they weren't smart places to be watching, then I wouldn't be talking about them, because I would never just go, well, the master time cycle says April, so it's got to be April. I'll go through and prove all of those things based upon my time frame analysis and go through and make sure that I'm comfortable that they are in the right spot. That being said, and I kind of was going to talk about this, and I talked about it earlier last night, so I'm going to bring it into the investigations now. For you guys who have access to the Master Forecasting course, there's a few in the class, so I wanted to make this I've got a date that I'm not going to talk about how it's derived and those sorts of things. I don't necessarily think it's going to be a major top or a bottom, but what I think it's going to do is actually produce potentially a very good tradable turn. And if you kind of read between the lines, you might be able to put it together. I think the 10th and the 11th of March, or even 10th to the 12th of March, just let me check to make sure I haven't got weekends mixed up, which I sometimes do. I won't give you a Sunday as a date. I'm just getting my calendar up. Yeah, 10th and the 11th, 10th, say Wednesday to the Friday, that second week in March. That's just an area that I'll be watching to give me a little bit of a road date. David often talked about road dates, just dates that he would pull out of the air and say, just watch those. I'm trying to maintain the mystery, if that makes sense. Now, if that was to give us a tradable turn somewhere around there, what I'm potentially thinking is you could get a run into the March seasonal date. Now, I don't think either of those March seasonal date or the 10th to 12th of March will be clearly sticking out as the pointy bits. I should do it that way, tops or bottoms. I don't think you'd be able to sit out and say to my 4.5, nearly 5-year-old son, pick out the top. I don't think they're going to pick the 10th or the 11th as being a top or a bottom. They'll pick a far more pointy one, if that makes sense. But I've just got a view that there could be a good trade out of those dates. For you guys who've obviously got access to that material, it's not too hard to work out how I brought that together. But considering that Rating the Market called the January top, the next little area that I'd be watching for, just following that roadmap, is around about the that 10th to the 12th of March period. So just one that I'd keep in the back of your mind. So for those who want to go and work that out, you've got that ability, and for everybody else, you can just sort of sit back and you won't necessarily know why, but at least I've given you some insights as an area that you might want to watch. No, yes, it does. Well, not specific seasonal dates, Albert. Obviously, when we talk about seasonal dates, we're talking about Gann's 8 dates per year, equinox, solstice, and the midpoints between the two. So we're looking at those, those set dates where we get the physical changes of season. But does Newcrest have its own heartbeat as far as time by degrees? Absolutely, because it's got birth of contract, it's got major highs, major lows, and seasonal dates. But as far as the March seasonal date, we're talking approximately 21st, 22nd of March. Now, the 21st is a Sunday, the 22nd is a Monday, and the Friday is the 19th. So the 20th and the 21st are weekends in March. So you'd be thinking maybe Friday the 19th or Monday the 22nd. But we can see that off our roadmap anyway, so I don't think that's particularly illuminating. All right, so I've shared that extra date with you, and that's out there now, just so you guys can have that as a bonus as well. So what I'm going to do now is just quickly pause this camera. Okay, so all right, so Wayne said this is where you got a bit stuck. Marrying master time cycle dates and got them from interim timeframes, balancing timeframes, squaring, etc. All right, well, I'm glad you said that, Wayne, because that's probably where you're going to get the best benefit now, is how we marry all of these things together. Now, what I'm actually going to do is I'm actually going to share a file with you. Now, I'm just going to also put it in two formats because it's a little Excel spreadsheet. It's hardly scientific. But I'm just going to drag it up here. Don't laugh at my Excel spreadsheets, by the way, Linda. I'll put the camera back on for a second. They're very, very basic. But there's two. Now, they're both the same file before you all go racing off and grabbing them. One is if you have Office 2007, and the second one is if you have an older version of Excel. So if you're using new versions of Excel, you go the one at the top. And if you're using older versions of Excel, you go the one at the bottom. Now, in doing that, it should bring up something that looks like this sort of little time frame discussion that I'm going to go in here and share this screen with you. Oh, before I do that, I'll just make sure that you've all got that file. All right, so I'm just going to put up there, have you got the file, yes or no? Just going to put some eye drops in while I think about that. Because this will just make it a bit easier for you guys to follow. These are the timeframes that I've gone through and I guess come up with as being really useful. Someone's clicked on no. I don't know who that might be, so type me a message privately if you want, and I'll explain how you go through that. So if you haven't got that file, just tell me what I can do to help is probably what I'm trying to achieve here, because I do want you to have this. So if that person who can't get the file can let me know who they are, you don't have to type. Just you have to type in the chat window. All right. It could be a brand new experience for somebody, but just let me know whether you do or don't have it. Because if you just say no, then I can't resolve that for you. There's actually a couple of people who are saying they don't have it. So all you got to do is click on the file, click on save to your computer. It'll open up another browser, and then you say click to download, and that should download that file for you. All right. The window of time to grab this file or tell me that you can't get it is closing. Okay, no worries, that's fine. No problem. All right, so I've got one person left saying that they're still don't have it. No, I haven't called it the master time cycle matrix, no. It's just called timeframes number 1 and timeframes number 2. I don't know where the master time cycle matrix file would come from. Don't download that one, I guess. That's probably, I don't know. Not me sending you a virus or anything silly like that. All right. 10 more seconds. You've either got to tell me who if you're having a challenge, let me know. Otherwise, I'm going to assume everybody's got it, and then we'll move on. All right, 5, 4, 3.5, 3, 2.5, 2. Just type in there if you can't get it. Let me know. Otherwise, I don't want you to miss out. Don't be afraid to tell me you don't have it. All right. Either you're clicking no when you mean yes, or you're not getting it. All right. Well, come back to me later if you need to. That's probably the best way to discuss that. All right. So drag that down, and away we go. So what I'm going to do here, Wayne, obviously, this is the huge challenge, is that, yeah, master time cycles on their own are not necessarily the world's greatest, challenge. It's really now at what point, well, how do I validate those? So let me pause this camera. I'm just going to share with you my screen, and that's the document that you guys should have just downloaded, okay? So it doesn't have all these tabs down the bottom, all right? So these are different tabs. I've just got some stuff that I'm working with. These are essentially timeframes that I went through, okay? So these list of 12 timeframes that I went through that pulled apart that just were interesting ones to validate. Now, 3978 was from the 97 low to the 2008 low. So that's a bottom-to-bottom time frame. That was the all-time low to the global financial crisis low. All-time high to all-time low. Pretty, well, not quite similar in time frame. 1898 was the 87 top to the 92 low. That's the first bear range, major one. You've also got 97 low to the 2001 low. So you've got quite a lot of low to lows here. High to high was 1400 days. Or 1401, high to low was 1399. Now, it's interesting that time frame repeated 1400, 1399. You got 94 to 97, and then it repeated 06 to 09. So all I'm saying is those two time frames are probably the same time frame, but they're just repeating. So what I've done in that case is we'll probably just use 1400 days. We'll just average out the two. 764, well, we did that in class together. You guys should remember how that came together. 637 is the 08 top to the 09 top. 405 was another time frame that we talked about. 232, 08 to the 08 top, 08 bottom, and 224. Now, these ones here, I guess this sort of numbers, they're your smaller interim timeframes. These ones, I guess, from 1400 up, they're really the ones that I guess we're most interested in validating. Now, I'll pop out of this screen. I'll come back to you guys. If I'm looking at let's call it 3978 time frame, the great challenge that's going to exist for us is are we going to get hits on that, just using 100% repeat? So what we're going to do is obviously try and break those down into percentages, etc. But if you try and do these one at a time, you'll start to come up with, I guess, a validation as to whether you're in the right spot. So I'm going to jump back into Profit Source. I'm actually going to anchor a couple of dates to watch based upon the work that we're looking at. We know that sort of mid-April, or sorry, not mid-April, say that 10th to the 12th of April, and keeping in mind as well, I've got something triggers in my mind that April date. The 12th is a Monday and the Friday is the 9th, okay? So if I said 10th to the 12th, obviously, I'm going to sort of pick on the 12th as being the date that's, but it could be the Friday. So, don't, concern yourself too much at this stage. But what I'm going to do is just put on a little vertical line. I'm actually going to make it the 12th of April. And I'm going to lock that. And I'm also going to do the same thing. I'm going to put a vertical line on the chart for early December. All right. So in this case, I'm going to make it sort of the 2nd of December. Now, you might say, well, look, we didn't get the 2nd of December as being a classic hit in terms of, on our master time cycles. One of the reasons I'm sort of looking around the 2nd of December, that anniversary of the top in 2009 was the 3rd of December. So looking at that, markets will drop hints 12 months out. David obviously tells us anniversaries are important. So we had a major top in December of last year. And obviously we might see that followed through with something again this year. Now, we're talking sort of a Thursday or a Friday. So look, I'm just going to say, all right, at this stage, it doesn't really matter whether I'm, a couple of days either side. So why don't we just say the 2nd of December, which is obviously a date that I'm a little stronger on. And what I do is I lock those dates. Okay, so what we've got is two sort of, call them goalposts, I guess, for want of a better term. Now, Wayne, you said obviously you had challenges now linking all of these things back in. What we really want to do now is get comfortable whether or not these are two places that I could expect something to occur from. Now, if I go through the first of my list there, I've got 3978 is my first major time frame. So what I tend to do at this stage, now I'm only going to do this really from a calendar day perspective. You guys could do the work using trading days as well. But if I go back 3978 calendar days, I'm going to go in and obviously get in my time cycle analysis tool. I'm actually going to get my two lines here. Really, what I've got is a ruler that's working within the realm of those days. Now, in such a big time frame, you can probably afford to work off a weekly chart. All right. Now, if I go sort of off my April type event, all right, which is sort of around call it the end of the week's the 11th of April. If I go back to the 11th of April, the question that we're asking here is, did we get a little bit of a hit Okay, now, there's the 7th of May. If we go back and we're talking about sort of turns in the month, the 7th to where we are down here, we're within a tolerance here that I'm comfortable with, because if we've got a 1% error of a 30 or a 4,000 day time frame, we've got about a 40-day window. So for me, we're kind of sitting between a major top, a top and a bottom. Now, they're not your major tops and bottoms, but they're certainly interesting enough to keep me, at this stage thinking that there's a little bit of a trigger there, but nothing particularly, exciting at this stage. I could also run it back off my early December date. And as you can see here, early December, we're very close to, the top back here in 2000. It's interesting that this time frame happens to bring us right back to the start of the run, which is January, December of 99, 2000, and then a sell-off into April. So it's interesting that they correlate to where we are right now in the market. Now, what I've done as well with this time frame, instead of just anchoring it to, these two dates, obviously what I've also gone through and I've played around with, from that bottom to that top, has seen a repeating of that time frame. If I go back and sort of anchor it off a lot of the major turns, you can see that you're getting some resonance there. If I go back and sort of pull apart from the 1987 top, we get a low there, and we get a little bit of a, no, we don't get a change in trend there. So really what I'm just doing is I'm sort of washing this over the market, and I'm saying, well, from top to top, ended up giving us a pretty big top in the market. So where you might be saying that, I'll pop back out for a second, you might say, and here's a common issue where people find a 3978 day time frame, and they say, well, it's from bottom here to bottom here, but they don't go and wash it back over the market. This time frame has actually been in operation in this market for some time. Now, it doesn't always give you the standout tops and bottoms, but it will give you changes in trend. That's all we're trying to establish at this stage, is do we get a change in trend around about these dates? So 3978 is, for me, is a fair time frame that's given me some harmony, that's backed up that information. What would be another way that I could use that same time frame? So 3978, what would I be doing with that time frame now, to see whether there's any other greater relevance to the discussion? Halve it? Absolutely. So that's going to be our next little part to the puzzle. So I think it actually gives us 1989 days. I'm just going to check my maths. Okay, I've been working with the numbers pretty regularly. So yeah, 1989. I want to do one other quick thing with the numbers while I'm thinking about it. Interesting. What am I doing here? Time frame divided by that. Interesting as well. Okay. But what I'm doing there is just playing around with the numbers in terms of what I'm actually looking at is how many weeks and how many months 3,978 days end up being. So just if they're a number that we're familiar with. All right, so we want to take a look at half intervals. Now, once we know that 1,989 days is the 50% point, we're in a situation now where we can go back and start to play around with our dates. Now, we know that if I run off the April date, back, half that time frame, we're very close to that top there. Once again, we're still within a tolerance. It's not the crystal clear hits that I would ultimately love. But at this stage, with this sort of time frame, it's one of those ones. Oh, sorry, guys. Would be helpful if I turn profit source back on. There we go. Thanks, Darren. Look good where I was looking at it from, so it all made sense. So what I've done is I went in here and I changed my my interval from 3978 to 1989. So I've basically halved that time frame to give me a 50% point going backwards. So all I'm doing is anchoring it once again to my orange lines as far as my dates are concerned. So 50% of that time frame is very close to the top. 100% we argued was sort of in the ballpark, but not fantastic. 150% of that time frame, well, you're between tops and bottoms there. And if we go back to 200% of that time frame, there wasn't a huge amount there either. So you'd argue maybe we need to go down even lower at this point. So if I drag it, I'll just pull that back from the December date. One of the things that I liked about this time frame was that it probably gave more support to the December scenario than it did for the April scenario. So if I look at 3978 days, it probably backed me up more for the December information. Now, if you're wondering why I picked December over the likes of July and August, if you use the same time frame, you don't get this same sort of harmony. So we're very close. I'm probably not right on. We're very close back in, and I'm also using a weekly chart, so it also approximates some of these calculations. But when I did that on the daily chart, I found that it pretty much lined up with our low there. We could go back, 100% of our time frame. 100% of that time frame. So there's 50%. 100% is very close on that top. 150%. very close to that low, and 200% goes back to that point there as well. So it really sort of firmed up for me the December event a little bit further. Now I'm just jumping back into my spreadsheet, so if you lose the screen, that's the reason. All right, so I'm going to do one final calculation, which is just to quarter that. So 995 days would be the 25% of that time frame. So what I'm doing is I'm just halving that number again, so 995 days. So I'm getting some more information to watch, of course. If I go back to, the April date, running back through, we can start to see, all right, well, did we get, 25% hits? Well, as I said, probably not as clean and nice as we'd like, but when you run it off the December event, you actually see that 25% of that time frame falls the all-time high. So as you can imagine, I was relatively excited when I looked at that time frame rolling in around early December. 100%, there's 25% of the time frame. No, it's not. There we go. 25%, 50%, 75%, 100%, 125, 150, 175%, 200%, and we don't get a 225 because we can't go back. So I was quite obviously encouraged by the fact that a quarter of that time frame is pretty much lining up with the all-time high. When we're basing it around using the December date. So for me, that was part of the reason why I did look at a December event as opposed to a July or an August event. All right. Now, this obviously takes some time, and we're going to go through and talk about all of these sorts of things. So this is going to be a challenge for us to be able to do this. The next time frame that we talked about was 3746, and I know some of you guys did some work with that. Now, just to remind yourselves, that's the time frame from the all-time low to the all-time high, and you'd be mad not to watch those time frames when it comes to any market you're traveling or you're trading on. If we look at sort of, I'm going to make this a daily chart just because I know there's more information to look at, but I just like getting a cleaner hit. So let's call that. I'm going to stretch this out, just drag it. That's why having the little orange lines as anchors can sometimes be useful, because you can remember where your starting point is. You can run back from. So if I go back 100% of that time frame, we're very close to what is that major turn in December. So I was really quite comfortable with that time frame. It's interesting that if you run that first time frame off the December date, you get getting into some interesting areas here. You might note that that first time frame when we ran it off the December date was very close to that top, and then we run this time frame off the April turn and we get this top as well. So obviously this to me is a very integral top within the market. Now when you look at that, that's 10 years ago, and that little run down there. So that gives me a great deal of confidence that we are looking into this year as being, something to, we could be on the right little roadmap there, is probably the best way to describe it. Now, going back probably 200% of that time frame or whatever we've got there, I must have moved it. All right, so there's our April scenario. That'll do, it's close enough. 10 days, no, it's not. Let me zoom in again. I should lock it, but there we go. So line that up. So 100% of that time frame, 200% of that time frame, they all look pretty good as far as firming up the April situation. Now, if I drag that out to my December scenario in later parts of this year, the 100% didn't give me too much. The 200% was a little bit better. But as you can see, the first time frame helped the December turn. This second time frame was probably a little bit kinder to the April event. Now, we could go through here. We could halve 3646. Now, in doing that, 3746 divided by 2 is going to give me 1873. So I'm going to halve that time frame, 1873. And if I go back from December, pretty much, works into that little turn there. If I go back to my April event, I'm looking around about that 1st of March into that 10th of March area. So here we've got a lots of different sort of little turns all working for us. We could go down even to some smaller time frames, but the time that we have tonight, would be wasted if we just sat here watching turns. But as you can see, the December top gets, December turn, we fall right into that turn there. So some very, very large time frames to watch. Always worthwhile breaking them down. But I was comfortable with the sort of hits that we got, that we were looking in the right spot. So is everyone comfortable if at this stage, if I said to you, all right, well, based upon, here's the time frames, you guys are going to have to go away and back some of these works up. I always like it when I can get some loose garment theory going with master time cycles and these big sort of time counts. If I can get them locking in together that are at least approximate, I know the smaller time frames are going to be able to tune me up, and I'm going to expect a greater deal of precision the further I get down the ladder. Okay, so we're talking about some pretty high-end tools here. We're talking 20-year cycles, 10-year cycles. We're talking 4,000-day time frames. We've got to expect some level of wobble or error is probably another way to describe it. At this stage, I'm not trying to pin the forecast together only on that, but yep, absolutely. 252 and 240 days, Wayne, I'm happy with those. But to me, that's jumping a little bit into the detail. We should be able to say, all right, we know where we're looking. And what I'm trying to do at this point is just get comfortable with where I'm looking. And then I'm going to use time counts like the ones you've mentioned to really tune it up. And if I'm going to get into 240 days, 252 days, well, for me, that's really starting to get into your time by degrees theory. Like 240 degrees would make me happier, those sorts of things. But I do take your point. No problem. I'm happy with working with those timeframes. But you've got to start big to make sure we're in the right area. So if we kept going through and we pulled apart these timeframes, you'll see going down the list, your next one there was 1898, which is obviously very similar to 1989, but it does get you confused. So you've got 1898. So pulling those timeframes around, coming back from April, we end up with that top in February, another little top there, another little turn there, close to the bottom there. I won't keep zooming in on all of these, otherwise it will take some time. I'll get that tuned up a little bit better though. All right, so we've got a little turn, little turn, little turn. Coming back off the December date, once again, we've got some relatively, it's interesting, some relatively interesting turns to keep us sort of engaged. So all I'm trying to do is make sure that I've got some harmony here to work with, and I'm just prepared to work, a number of days either side. So we're between a major top and a bottom here. You could probably pull that back into being a more of a top. All right, keep working through some of these time frames. 1898, 1828, 1427. The 1400 day time frame was obviously one that was keeping me pretty happy. So remember, we've sort of averaged out the two time frames where we actually identified 1401 and 1400, or 1399. So at this stage, what I've done, I'm just going to anchor that back in. Well, 1400 days back to that low, obviously, working pretty well. That's probably even the reference time frame, I should argue. You've got a little bit of a top there. In the middle of nowhere there, you're right on a major, rocketing low there. So if you're getting close into that market there, if you can get on that sort of run, you'd agree that that's a pretty strong move. Now, obviously, I've gone through and zoomed in on all of these and made sure and recorded plus or minus variances and all of those sorts of things. But I can tell you, to my satisfaction, these are certainly close enough to, at these stages with these big time frames, to keep me working. 1400 days from the December date, comes back, gives me a bit of a low there. Very close to a major movement there, another low there, very close to a top there, moving forward. So we continue to do that, and backwards and forwards, keep validating our areas to watch. And as you move down in the numbers, you'll find that obviously it does give you some areas to watch. Now 700 would be another one, obviously just using a major 50% of that. And I'm trying to think, 700 days from early April gave us not what was a major top, but obviously, very close to the turn there was the 22nd, it's the 15th. And it gave us smack bang on that low there, which is the reference low, smack bang on that top. All right, so all pretty good turns. And now we're going to start to, I guess, pull around and play around with some of the time frames that are a little bit closer to what we know. But you guys are going to have to spend some time validating whether you believe these time frames are worthwhile. Like these weren't, some of these time frames you guys didn't apply in some of your work. I like the fact that 700 days back from my December date gave me, that area to watch at the end of 2008. So it's interesting that, we've got a December scenario, and that gave me right on that top there. So, which would end up being the 2nd of January. Another 700 days, we see that little low there. Another 700 days, very close to that top. 700 days, not as close, pretty close. Right on, right on, right on. And it does sort of pay to have a good eye where you can start to sort of see how close you are. Now, you guys would pay to obviously go in and check how close you are, but I can just get a bit of a feel as to whether I'm in the game or not. All right, so that time frame, 1400 days. The one that we obviously started to break down, and here's the ones where I'm going to start to expect, I guess, some greater precision from. We've seen how well the 764-day time frame operates. Okay, we saw that early in the piece. If I run out to that early April date, or sorry, mid. It's hard to call it mid because it's not quite early. Let's call it our April date. 764 days back gives us the all-time high, so that's obviously very, very encouraging for what we're looking at. Then back to the next top here, you've got 700. So you've got top to top to top to bottom in there. There's another little bottom in there, another little top in there. This, as a time frame, repeating has been quite red hot, and obviously the half of that time frame as well. And the other nice thing about my little December date is that it runs off that major bottom there. So if I pick on these this is probably where I really got keen on Newcrest Mining as a stock, if that makes sense, through this little run here, because you had a little repeating 55-day cycle from bottom to top. Isn't it interesting that if we use that as our reference top, that is our reference bottom, and we use our strong 764-day time frame, we actually come from top. If we get a turn in April, I'm very confident that we'll then follow that up with a turn in early December. Okay, so that's late November, early December that we're watching. All right, so I'll be happy to push and pull that accordingly. All right, if you actually take it exactly off the reference date, you're going to get late November. I will happily call in February of 2010, if we're calling early December for a turn and it turns on the 28th of November, I'm going to happily call that a hit as far as a success rate. Okay, so remembering I'm going to give it a number of days either side for any of our calls. Isn't it interesting that when we use that 764-day time frame, it's also lining up with our master time cycle. So the master time cycles gave us these two orange lines to work with, and then our time frames in our market started to really give us a lot more to work with. So I'm quite comfortable that 764-day time frame is one to keep a very strong eye on. Now, we know that half of that time frame is 382, and so from that perspective, you definitely want to see what's happening in that sort of 382-day time frame. We did get a little top there. The 50% time frame didn't seem to give you as strong a hits as you did with the 100%, but you are getting into a smaller time frame. 764 days, it's not insignificant, but it's also, it's not a massive time frame either. Interestingly, out of the April date, we actually get about the 26th of March. So if I pull that back a few days, that's very much going to give me the seasonal date to be watching. Hence, a 10th or 11th of March turn into a seasonal date, followed by a sell-off into April, would line up, according to to the map that I'm seeing anyway. All right, and if I run that off my December date, the 50% point is not giving me as much to watch initially through here. It'd be great if it lined up with the the yearly high, but once again, that sort of half time frame supported a little bit more for the April date rather than the December situation. All right, so moving down our list, 637 was a top-to-top time frame. So we can check off all of these and just be comfortable that we're looking in the right spot. So 637, well, if I'm sort of mid-November, that gives me the top there. 637, not a huge, magnificent hit. A little low there, which I'm quite happy with. A little low there, but they're pretty much giving me interim lows. They're not giving me major lows. It's interesting that time frame's giving me a lot of lows to watch rather than highs. We could watch half of that time frame again. That's off December, I should say, and off the April date. We've got that little top in there again, 637. Not getting too much on that one, so it was more lining up with the December event. So we're sort of evaluating all of these things in line with each of our dates. Some time frames are going to work better with a particular, our April date or our December date, according to which part of the cycle the market's in. The 405-day time frame was one that I found was also quite a positive one in this market. It repeats on quite a regular basis if you go back and sort of have a little bit of a play around with it. But they're not your obvious tops and bottoms. They're not sort of just standout, major tops or bottoms. But in doing so, going back and sort of pushing and pulling around with 405 days, I was kind of happy that there was a little top in there. But it's just a time frame that's been working quite well in this market. I've got to remember where the reference time frame was. Yeah, it was actually that low to the January high. Okay, so the 08 low to the 2009 high. But if I went back and sort of washed that over the market, I found that there was some confirmation there that it was working relatively well. We can go and obviously pull that apart, do half that time frame, and then we're really getting down into sort of 232s and 224s, which are at this stage they're kind of perhaps 405 comes from the gold market as well. Well done, Debbie. Thank you. So what we've got now is we've now sort of got a scenario where we've got lots of time frames. As we start getting into 230 days and 224 days and all of those sorts of things, they're for me going to be the ones that I'm going to push and pull when we're getting very, very close. So your 252 is half of 405, the day count. Fantastic. 50%. No, it wouldn't be, Wayne. 252, double that's going to give you 504, not 405. So half of 405 would be 202 and a half. So, no, that's all right. I do that. You can't believe how many times I've done that where I've gone, yes, there's the answer. It's half of that, or it's 3/4 of that, or it's 2/3 of that, and it's just fat thumbs on the calculator. All right. So at this stage, what I want to, I guess, feel comfortable about is it handing back to you guys. The only way you're ever going to know what I've just shown you is worthwhile is to actually do it. Now, you guys can't spend the time to do it while I'm doing it, but just as a Cook's tour and the overview that I've given you so far, would you be comfortable with a lot of the timeframes that we're watching? Could we be happy to say that the April and December events at least have some relevance to our discussion and they're worthwhile watching based upon our timeframes and all of those sorts of things? So, all right, cool. Because that's like the major problem we're going to have is if we depart from here and you guys are like, that's just absolute fluff. You know, there's no way I see any correlation between the two. Everybody's agreeing, which is great. And you know, I'm happy for someone to say no. It's not a case of railroading you into agreeing with me. But what we've got to be comfortable here is that there's no point if at this stage of your progression in constructing a forecast you don't have enough recognizable harmony. There's really no point going forward from here. Yeah, you can tell me in April. Thanks, Gray. Believe me, it's you know, if it doesn't come, you'd be like April. I'll be like April. Never heard of April. Didn't talk about it. Don't you worry. I'll claim if it works, I'll claim it, and if it doesn't work, you know, I'll be the first to stick up my hand and say, you know what, it didn't come together. But all right, you looked at it from a different perspective, Linda, but the way you do it makes a lot more sense. But yeah, he'll need to wait till December, exactly. Oh, so Debbie says it's your dad's birthday, so it's got to be right. But really what this is this is the stepping point now. If this has kind of got to be in your flow chart of how you put together a forecast, you know, and it's simple flow diagram. Is there enough recognizable harmony? Yes, continue forecast. No, go back to the drawing board, reassess your time cycles, reassess your time frames and say, all right, well, I've now got to start again because I don't have enough to base my forecasts on. This is where I think the fundamental flaw occurs with people in their early stages of forecasting, is that they get to here, they don't have it, but what they do is they continue to build bricks on a very poorly constructed foundation, and then it just topples. Now, the reason why they build bricks on a poorly constructed forecast or foundation is because they're not hard enough on themselves at this point. They sort of think, oh yeah, it's close enough, or it's kind of got some harmony, or it's kind of looking okay, I'll just see how it goes from here. If you haven't got it here, my experience is that it isn't there, okay? So what you don't want to do is come up with some dates at this point. Now, that to be said is there can be other dates and they can certainly be working, but I'm sort of talking about the two major things I'm watching. If you don't have it here, going to the drawing board to try and say, you know, how do I stick things onto you know, let's say we had, you know, 18th of July as a date, all right? And we did all of that work and nothing sticks to the 18th of July. You can't just keep hammering that 18th of July is the date to be working, all right? Because it's madness. And what happens is you then lose confidence because it doesn't come in. You might try and trade it and you lose dough, which is also confidence destroying. So really this needs to sort of be your line in the sand. Do I have enough here to continue, or do I need to go back to the drawing board? And I think we do have enough to continue. I'm glad you guys and girls are of an agreement that there's enough working there for us. It's certainly not a guarantee of success at this stage. We want to go and do some more information. So Wayne said, what if the major year-to-year top and bottom timeframes find no synergy? Doesn't matter, because you've made an interesting point there, which is major tops and major bottoms on a yearly chart may not necessarily be cyclical highs and cyclical lows. People say to me, it's like when they publish the 52-week high and the 52-week low. The 52-week high and the 52-week low in the newspaper, they're irrelevant because sure, they might be the highest point in the last year or the lowest point, but they may not actually be the bull or the bear market top or bottom. It may not be the cyclical high or the cyclical low. So what I'm suggesting is that the yearly top and bottom are obviously relevant, but I'm more interested in the cyclical bottom and the cyclical top. So let me sort of explain that to you. From my perspective, let's get up a new chart on Newcrest. What's a more important top? Well, the 3rd of December or the 12th of January? Well, I can tell you by rating the market, it actually gave you the 12th, the early part of January as the area to watch. But you could argue that that is actually the cyclical, the high at the moment, and you could argue that that's the yearly top. Oops, pushed the wrong button. Just got to load the symbol tree. But go back into the cycle. If I look at 2009, the low for the year in 2009 was April. But really, where was the cyclical low? Now, if I ran a time frame off the April low to the December top, that would be less relevant to me than what it would be running from the October low to the February top to the December top. Okay, so for me, the pointy bits that stick out, whether they're yearly tops or bottoms, it's more the cyclical ones that I'm interested in. So hopefully that makes a bit of sense. All right, so let's go back to our Newcrest chart. So we've got some master time cycles that have given us some stepping stones. We've backed those up with some larger time frames. And away we go. So in the puzzle of what we've got, what could we start to pull together next? You guys probably have studied a little bit of that funnel diagram that I gave you, or we talked about last week. What would be my next sort of launching pad? So I've done, large timeframes, interim timeframes, those sorts of things. What could I start to bring together now? Some balancing time, yeah. Okay, so that would be potentially another area that we could take a look at. Wayne, I'm just going to also go and I just want to have a look at that 252-day time frame that you mentioned. Obviously, you said that it had some. I just want to make sure that I cover that in my own brain. All right, so if we run 252 back from our tops and bottoms. All right, so 252 is not really giving us a huge amount off the April, I guess a couple of 100% or 100 to 300%. All right, that's some harmony, but not a huge amount. If I take it off the December, 300% is very close to that top. All right, you got to remember 252 is pretty much trading days in a year. All right, so Des and Annie have said, yeah, squaring highs, lows, ranges, tops and bottoms. Okay, so here's where I want to come back to camera. What I found was that it's really only one major squaring tops and bottoms exercise that I went through, and I went through a heap, and I could sort of show you if I wanted to. I'll show you Linda's fine work. If you go and take a look at all of the, if you don't mind, Linda, I'll just share everybody. I'll just show very quickly one of the spreadsheets. I had this up just to be able to show off all your good work. So just let me share the right screen. There we go. So this was the spreadsheet that Linda had done. So here she'd gone in and squared Newcrest Mining, squared highs and lows. Okay, they were off major turning points, they were off quarterly turning points, they were off monthly turning points, and they were off weekly turning points. Okay, so now I looked at your formulas and I couldn't even begin to work out how you did all of that. All right, hopefully you didn't do them all manually, but it's pretty clever, isn't it, Annie? I was very impressed, all right? So as I said, I'm coming to Linda's place for an Excel lesson. But self-taught Excel, yeah, I probably should do that class. But what I'll say is that, you can go through here and you can start to firm up where are there some dates. Obviously, this is where Linda had put together a fair amount of information that related to 2010. Isn't it interesting, sort of 7th of January, 7th of January, late January, 5th of January. So there's certainly some squaring time and price stuff that related to that January turn. I sort of regarded the 2010 stuff. I did take a look at all of these, and I kind of did them a little bit more practically or manually rather than what you did, Linda. Obviously, the March dates, there's some stuff going on there in March, but I will point out that there's not a huge amount that related to April or to December. Well, there's the 3rd of April, so I tell you a lie. So there is well, 3rd of April is not really where I'm looking. So that would be the early part of the month. I'm kind of looking here to see whether or not there's any sort of April stuff that was around about our date. I'm sort of looking through there, and I couldn't find any, and I'm just trying to see whether I've mucked up. That's okay. Your highlights didn't go as far as December. I was also looking at the December turn, and really I didn't get much for 2010 in those areas. So really, what I wanted to point out, 28th of December. What have you got there for me, Darren? 28th of December. Oh, okay. You're giving me cell numbers. Geez, now you're stretching my Excel capacity. Don't talk to me in cell numbers. I think you're swearing at me. J441. Jeez. You computer people. All right, 28th of December. But that's still sort of the best part of a month away from where we're looking. So yeah, thank you, Darren. I did get the cell reference. It's good. All right, so I wanted to sort of suggest to you that that it's not a case of that this technique is not, I'll just stop sharing that it wasn't not worthwhile. All I found in this particular market was that my squaring time and price in terms of highs, lows and ranges did not give me too much support with regards to either an April or a December date. Now, you can take this two ways. You can either go, well, that bothers me and that's a how do I move forward? Or you could say to yourself, all right, well, I'll continue the process and see what comes up. Now, I was happy to continue the process because I've worked in markets where squaring time and price isn't always the panacea that people seek. And when you look at that much work, there's a huge amount of work in there to come up with not a lot that backs up my particular dates. I can't remember the dates you were watching, Linda, but probably I'm sure that you've got some backup there with regards to squaring time and price. Now, I was happy to move forward from that. I did also try a number of different things. I changed point sizes. I changed point sizes on the squaring time and price, so I would change it to 10 cents to 5 cents. I do a lot of different things to see if I could line things up, and I found that it was really trying to push square pegs through round holes. And it reached a point where I was just like, you know what? That being said, I'm just going to be comfortable to move on from that point and say, all right, well, maybe this is not the specific tool set that I need on this individual market. There was, as I said, there's some stuff for the January top that's in, so it does sort of show that it can give you some good guidelines, but just not in particularly for the couple of dates that I'm interested in. Now, that doesn't phase me at this stage, is really what I'm suggesting. Now, how do you get that experience? Well, you just have to go through it enough to see that you can put together a forecast without this. But I need to be upfront with you to say, if you've gone and done all that work and you said, I can't find anything that backs up those dates, I didn't then want to turn around and go, oh, you're not looking hard enough, and they are there, you just have to go and find them because they're not there. I've looked. It's like that Saturday Night Live skit. You've got to read our product disclosure statement. I have. It's in there. No, it's not. I've read it. Oh, I just thought you hadn't read it. And Graham's made a good point. Is squaring time and price not working in 2010? Darren said he found the same with the August date. I found similar issues from Wayne. I was looking at different pressure dates. So all that being said, I think what we can establish is that squaring time and price in Newcrest mining is not as reliable an indicator as potentially some of our other information. All right, and I'm comfortable with that. I think we can make that assumption and move on. We don't have to have every tool in the toolbox working in the way that in a textbook manner. And of all of the tools in the years that I've been involved with this, that doesn't work like the textbooks show you, because obviously I can tell you the ones that we put in the textbooks do work. Is squaring time and price. I told you when we did the lesson, I've seen David talk about squaring this top and that bottom, and he's the best at it that I've ever seen, all right? And it works really well on the SPY, I will add that, but he's the best at it that I've ever seen. He could make that sing, and I've never got as good as that. As much as I've tried to push-pull, and I understand the theory, it just doesn't seem to work as well for me as it does for him. So maybe that was Gann's tool, reserved specifically for him. All right, so we've had the discussion. So we've talked about squaring time and price, highs, lows, and ranges. We know that that's a bit of a thanks for playing, but we've at least investigated it as part of our forecasting process. Where would we next sit in terms of an element to play with? If I throw it back to you guys. Graham's suggestion there is fantastic. Squares in time. I like what Linda and Darren are saying about time by degrees, and that's probably going to be the next two layers. Des has hit a good one there with boxes, and can I tell you, without going through the process, boxes didn't really give me all that much. There's a couple that I'm watching, but can I tell you, they actually take me into next year. So the boxes that I'm, I could actually give you a couple of, one specific date that, that I'm watching for 2011. But to be honest, it's kind of on a list here. It's really not a relevant one. If April comes together and December comes together, then the 2011 date will be a much more relevant discussion to have at that stage, but it's no point getting ahead of ourselves. But I like the idea of looking at squares in time. Linda said time by degrees and Darren said time by degrees, which we'll definitely take a look at. Des has said boxes. You're absolutely right. I'd probably try and move some boxes in here, but I found that there wasn't a huge amount of relevance there. And then, as Annie said, some Gann angles. Speed angles I probably tend to leave right to the end, and that's when I'm starting to think about position volatility and pattern, but definitely some resistance cards. So we're all on the right track. So as you can see, we're sort of drilling down a little bit further into the process. So what I'm going to do is jump into profit source, and I actually am going to look at squares and timeframes that relate to squares. Now, there's two ways you can do this. Now, you could, for example, say, all right, I want to go and run a square of, or count 144 days back from my starting point here, and say, all right, well, 144, 144, 144, 144, and I could go back and say, am I getting turns? Now, I actually probably prefer to do it the next way, only because what it's actually going to do is help me understand where the market is, whether I'm at 50% of those timeframes and all of those sorts of things. So if we said, all right, let's start from the all-time low. Now, we know the all-time low lives all the way back here in 1997. And is anybody interested to note where that all-time low date is? So if I just put my, it's December. What date in December? It's the 3rd of December, and we're looking at early December. So straight away we can say that we have a relationship in December of this year that relates to the all-time low. And it's interesting that that was in 97, so that was 13 years ago. And it's also 180 degrees from the birth of the contract. Well done, Graham. Touche. That was going to be my next point. All right. So the fact is that we know that the birth of the contract is June. All right. So 180 degrees from 4th of June, I think it is. Let me start again. Yeah, 4th of June is the birth of the contract. 180 degrees would give you early December. Okay. That's another reason why I'm looking at that as a term. But anyway, just wanted to remind you that sometimes simple things can be powerful as well. All right. So if I look at, and the square 144 works really well on gold. So obviously it's one of those things that we're going to play around with as well. Now, really in this discussion, I'm only interested in the border. Okay. So what I could be looking at here is okay. Well, if I start at on our date, make sure I'm on there. Yep. And I run out, I can see, well, 144 days into the future, is it giving me an alignment on any of my orange lines? Okay. So I've got orange lines there. And interestingly enough, if I run out X amount of multiples of 144, the blue line gives me the 6th, then we're looking sort of at the 2nd or the 3rd. So I'd say that we do have a multiple, of particularly for the December date, that lines up with 144. Now, the other thing that I've often done at this stage, just to line these things up, is to also put in the 50%, 25% and those sorts of things. So it's just a quick way to be able to get a ready reference. So I'm going to put on the vertical lines here. So what I'm getting is 25, 50, 75, and 100. So I'm going to try and see if that April date had lined up with the 25% point of the square of 144. Now, in this particular case, it hasn't. All right, but we do know that if we go out to our December date, we're getting a 144 multiple. Now, you're also starting to add layers here as well that relate to price targets. Okay, so one thing you could do at this stage, that some people have been, I guess, interested to note is I'm trying to really build. I'm going to turn off those vertical lines. I might put the diagonals in. All right, I'm going to take off the. I'm going to tune that line down a little bit. It's a little bit thick. All right, so what I'm really looking at here is, okay, based upon my December date, because that one's got the better harmony, where would be a potentially smart place to look? So what I could do, if I was looking at this in terms of price, okay, you could say, all right, well, if I put a little circle here, let's be adventurous, let's say potentially somewhere around here, even lower, you could start sort of dropping in little circles here, okay, along that line. So what you're getting is little price targets along that way that say, all right, and I've only put in a couple there, okay? Now, you could obviously put in all of them at a junction of 144. Now, I can then take off my square, and now I've got these little dots sitting on that line. Now, the most logical place, and we'll do this in full, the most logical place to obviously put a price target would be maybe to watch for a 50% retracement. Isn't it interesting that that 50% retracement happens to line up right in that little circle there, okay? So that could be one little thing that you might start to do, and you can put a little arrow there and say, all right, well, based upon that, that could be a price target for me to watch, okay? What I'm going to start to do is start to put, like we talked about, little X's, or in the case of the software, little circles down these vertical lines, and all I would wait to do, let's say December, I'm going to, just draw some lines on. All right, so we get a run up here, sell off into April, so we get some sort of, movement in the market. Let's say it goes really sideways, has a final run up, and then let's say a week out from my date, that's where we are. All I'm really watching this to do is just trade right into my orange line where I've got a circle on it. And that's really how I sort of tune price up. I don't find I need to do much more than that. The market will sort of, if that's the right price on the right time, the market will just tend to, support from the 09 bottoms. Absolutely, Robert. I agree with you there. But what it is it's really the market. It kind of acts like a magnet. The amount of times I've seen a market when I put a vertical line on there and a little circle, and all it does is just find a way to track right into that. All right, but we're getting ahead of ourselves. So we could run the same sort of time counts. Now, of course, when we're using squares, we've got a choice of where we use our starting point from. So in this case, I'm just picking on the all-time low. Okay, I'm adding squares of 52, 168, and those sorts of things going forward. I need probably 50 and 100. And what I'm going to try and do is say, all right, well, where are my, oops, wrong button. Where's my forecast dates? Well, as you can see, the square of 168 doesn't line up middle of May or early in May. And I'm going to run forward and say, all right, well, does my December date line up? Well, no, it doesn't. But I can just look at that square and you can see that it's about, if that's 50% of that, so that's going to be about 84 days, that's going to be very close to a 25% multiple. Now, how I can tune that up is, of course, to go back and put the vertical lines on. So if I put the vertical lines on, I'll make it that color. Unfortunately, everything slows down a bit when you start to put a few squares on your chart. You probably find the same thing. All right, so isn't it interesting that we've got our December date lines up with a 25% multiple of the square of 168. So what is a quarter of 168? 42. So 42 days, very similar to, double 21, double 22 days, very close to 45 days, 45 degrees, all of those sorts of things, are comfortable in my mind as far as things that are important to me. So, oops, if I get the right maths, that'll help. Yeah, 42 days. I thought I got that wrong for a sec. I thought I'd had one of those maths moments. All right, so as you can see, all we're trying to do is line these things up. Now, at this stage, it's hard to engage this extra information, but let's say we had that as a bit of a price point to look at. Let's just say I could shift that down. Let's say on my date, I've got two alignments of dates there, and let's say that's my price. Let's say I saw a market make a low at this point. All right, so let's say it lows in this area here, and let's say if I draw the bar, let's say it sort of started, let's say it gapped down here. Let's say it spent all day trading up. I'm not drawing it specifically on the date so we can see it, because otherwise we might lose it, and then it sort of closed in there. So what I'm trying to show you is now we're starting to bring together, well, it's gone into the weak, strong part of that square, and that would be the place that would be a smart place to watch for a low. So if you've got a day like that on your date, and you're now looking at your diagonals in there as well, you could argue that you've got square support as based upon price and as well as time going for you in that regard. And I've just deleted my date, of course. All right, I'll get that set up again. All right, so we've got our date, 2nd, 3rd of December to be watching for. All right, so we've got some support from 168. We had some support from 144. We could also do a square of 52. We could also do a square of 113, which is a square from the all-time low. Turning a price into a time. So I'm going to delete that one. Just going to make a preset Gann square. Forwards and up. 113, 113, 50 and 100. All right, so what I've now put on is essentially a lows resistance card. So I put a lows resistance card on the chart, and what I'm looking for is to see whether I get the time frames line up now. I'm going to change that color of that vertical line. So you can see that they don't align. And if I go down to my December date, well, as you can see, we're getting something that's a little bit closer again as far as that 113-day time frame. So change the color of that one as well. Not to that won't stand out. That one will. There we go. All right. So all I'm doing is using time frames that relate to squares. I could also be dealing with the same thing with regards to off the tops. I could run a 144 square and a 4050 square off the top and those sorts of things. What I'll probably do, to make it a little bit simpler, we'll take 144 days off that top, and we'll run it across here. As you can see, we don't get a lot once again for our April date, but interestingly enough, December seems to just keep popping up all the time as being of interest. We can do the same thing with 168. We could do the same with 4050. Now we're not really going to do that because that's going to put us into the into the future, so to speak, and way too far ahead. And if we start taking quarters of that, well, we could be anywhere. What was I going to do next? So that's just running squares off there. Could I also run squares off the birth of the contract? Absolutely. So that would be a third place that we would do. So let me jump back out of here. Let me tune this up a little bit because I want to sort of clarify this, but we're also, time is always against us. So is everybody clear what we did? We talked about, so Graham, you said quarter of 4050 picks the 13th of December. Really? So 4,050 days. What's a quarter of 4,050? 405, that'd be 1,000 and... Too late, time for a calculator. 1,013. Oh, there you go. Oh, we're done. You know, we can just, I think December, forget April, there's another one. December's red hot. Yeah, you know, everyone's wondering why I picked December now. I'm starting to feel a whole lot better about it. I don't feel like I'm on my own anymore. Thanks for that, Graham. That's not one that I'd picked up because I thought it was going to push us too far into the future. So hats off to you, Graham. So that'll be another one I'll jot down in relationship to supporting of our little sort of construction here. So I don't try and do too much with the time frames from squares at this stage because in the sense of I'm not going to run them off every major top or bottom because that's madness. So I've picked all-time high, all-time low, and I've used squares of 144, 168, 113, 4050. You can also do it from the birth of the contract. I'm not going to. That mean it would be on a 1x4 angle. Potentially, but not necessarily. All right, we've divided the time by a quarter, but we don't know what's happening with price. But we'll have a look at that. All right. So I just want to firm up what we've done is we've got master time cycles, big time frames. We've looked at squaring time to price. That didn't roll in. We thought about boxes. Didn't give us much based upon my work. We've now started to say, all right, what are time frames that relate to squares off major anchors? We've got some harmony pointing for us to particularly December again. So now is probably a point where we could start to think about time by degrees and calendar day counts and trading day counts running backwards from our 0 dates and just see what we've got lining up. And then really what's left to be done is just to tune up, you know, where's some angles? Are we sitting on support or resistance? Now, of course, when you're getting close to these dates, you have to be watching where the market's trading within those squares. So if we come up with a number of areas based upon lows, highs, ranges, resistance cards that are all overlapping, and I'm going to leave you guys to do the price work in the great depth. As I said, I think the times are solid. I think where they sit in terms of price, I haven't done that much work in because, as I said, I think the market sorts itself out. Really what you've got is a scenario now where you're going to watch, is it sitting in a strong part of the square? Are we sitting in a weak part? Are we expecting a top or a bottom? That really comes down to the trading of where this market sits. But if I jump into the chart again, profit source, there we go. What we're really starting to say here is, can I, you know, with using, you know, time by degrees just as an anchoring tool. So I'm just going to use these as 0 dates, just running back off those tops, off those reference dates. Right, we've got a scenario where we're really watching for the market to roll in. Now, for me, the 24th of February will end up being probably a good date. I always like to see running into my particular dates that I'm getting, you know, nice clear turns. So 24th, 25th of February, if we were to see a nice strong change in trend there, and even maybe on the 30-degree point, which is going to be that 10th to 12th of March area, which I said to watch for, they will be the two key anchors. If we see, and I don't, you know, I'm not predicting tops or bottoms here. All I'm saying is if we see a turn on that date and a turn on the March date, you know, call it the 10th or 12th or whatever, if I had those as, you know, be them top up here or bottom down here, maybe thinking more along those lines. If we saw it run into there, and then we're really red hot there. Because going back off our time by degrees, I'm going to happily call that about a 60-degree bottom to bottom, all right, or you know, you got the low there as being the 5th, okay, the seasonal date. So I'm going to call that with a bit of squinting that's a hit. 90 degrees is red hot, all right. So the 12th of January, 135 is pretty close to that top. 180 is right on. You know, 240, couple of days out. 270, couple of days out from that turn. 360 is not great. The 360 plus 90 is 450. We're sort of splitting those little double bottoms. The average of the two. 540, not great. 630, red hot. And 720, well, we're kind of close to a turn there, but we're not quite there. So the market actually turned on the 7th of April and ran down from there. So for me, there's definitely some time by degrees theory or time by degrees harmony there that lines up for that December date. But really what I want to see is those dates in March and in, February and March line up. And if they give me something to watch, well then I think we can sort of, you know, be a lot more confident what's happening on that date. Same thing can occur. Now, this is going to be a little bit harder with time by degrees because if I go back to my December date, I don't have a lot to work with, but you know, obviously 360 degrees is not a bad start. 540 degrees is probably a good hit. So you've got 360 plus 360 plus 180. Keep going back and you'll find. Now, I want to have a bit of a yarn to people here. I had some people last night sort of say, I'll go back further to 22,405 degrees. You get a top, and 1,400 and 1,440 degrees I could go back to. That's sort of 4 cycles. But if you're starting to go 15,000 degrees, you've missed the point, because obviously just do calendar day counts and those sorts of things. But from my perspective, I go back sort of 720 degrees, sometimes a little bit further, to see whether we get things to work with. And I'll show you a quick way to do that. So if I've got a profit source open with those sort of dividers on my chart, all I want to do is, if I want to go back even further from there, I can just sort of pick it up and plonk it on my December date there. 630 pretty much gives you the all-time high. I can go back further, so I could now sort of use that as a sort of reference point. Going back from there, am I getting sort of regular changes in trend? So now it's, yeah, okay, 720 back there. So all I'll tell you is that I think there's a fair amount of time by degrees harmony going on within this market. And, we know that off our April date, that's 180 degrees, so I'll go back to there. 450 gives you that top. 540 gives you that top. 630 gives you that top. So if I just sort of keep dragging back using those same anchors, we do have some things going for us there in the world of time by degrees. But if I come back and make my final point on this, which is you can see, how do you get that many degrees? Mine only goes to 360. Yeah, you have to change them. So I've turned some of them off. As I go further away, the 90 degrees is absolutely the major focus, Linda. But yeah, Lois, I've had to change the defaults that's in there. You have to change the numbers to bigger ones, and then you default it. So I guess the point I'm going to make here is that there's so many ways to skin a cat. And if Noel was doing this discussion, he would probably just start you out with time by degrees. Now, I go the other way around, which is I like to use time by degrees to lock up my master time cycles and my big time frames and all of those sorts of things. All I'll suggest to you is that you don't have to go about it this way. But what I find people tend to do is that they just throw time by degrees on a chart and they say, I've got it. I think the work that we've led into, now that we've used time by degrees, should only give you greater confidence that we are looking in the right place, because we have done some other work that pushed us in that area, as opposed to going to what I think for some people is the easy option, just chucking time by degrees on a chart and saying, Bob's your uncle. It was David's most profitable trading tool. I don't have a caution in telling you that, but I do find that I've seen plenty of people rip up dough with what they believe was great time by degrees harmony, only because they like the easy road, which is shove some degrees on, and look at that, it all tends to lock together. You've got to be a pretty special person to just put time by degrees on a market and be able to make lots of dough. Debbie's telling us that you had a lot of smaller time hits for the 10th of the third portions of fantastic. So I'm glad that March date is also lining up. 511, 632, 232. Happy with all of those. Okay, so the only thing I'm saying is that, as I said, I could have given you multiple roads. I do like the 10th to the 12th of March. I definitely like that as a date. What I'm saying, though, is that I just think in the context of this market, if I sort of can give you a picture, that's going to make sense. If there's a top and there's a bottom, we could be seeing where we are about now. April could be something, that's pretty extravagant, somewhere lower. That March date could well be a good turn, but it might be in between the two major turns. And so, therefore, some people think that that's not being able to forecast turns accurately. I think if you trade into or out of the 10th, depending on what's going on in the market in March, and particularly if you watch that 10th to 12th of March into the seasonal date, I think there's plenty of bucks to be made, but they're probably not going to stand out as being the major top or the major bottom, if that clarifies that for you. So the fact that you can lock in some harmony for the 10th of March around there, that only makes me feel even happier about the approach. And I'm glad you're finding that useful, Wayne, because it's taken a few years to get it. I wish people say to me, how did I work this out? And the joke used to be good, but no one laughs anymore. I just said I Googled it. So if you Google this, you'll actually get all the, you actually just get the forecast these days. You don't even have to do the work. All right, so let's keep moving because time is always pushing away. So we've talked about firming up those dates. We've looked at time by degrees. We know that based off the birth of the contract, so remembering that that's always going to be a focus for us as well, even just using those as reference dates. But we like to go forward. Remember, birth of the contract's the 4th of June. So let me plonk that on 4th of June. All right, so 180 degrees gave us that top. So we're essentially getting, a repeat back out the same way. All right, so that lines up with our December date. So another reason why I didn't mind that. Anniversaries, all-time low anniversary, and 180 degrees from the birth of the contract. Okay, so all good little parts to our puzzle as far as that's concerned. And if I run time by degrees off the all-time high, so all-time high, all-time low, we end up being about, not to worry, 764 days, it's 700 and something degrees, which wasn't the point I was trying to make. Okay, so we've got some vertical lines where we've got some time frames watching, and now what we've got to do is maybe start to think about where can we put some little price-based circles. Okay, so one thing that we always know to look for is we're going to do a highs resistance card, so we know the all-time high is 40.50. We know the low is 0. We could extrapolate that out, half the high. I'd definitely be watching those areas in terms of price. So they would be areas that I would obviously go in and line up, okay, on my vertical lines. I'd then also go through and do a ranges resistance card. Now, $1.13 is very similar to to 0, so there's not a huge difference when we move our line. So they would obviously be smart places to sort of tee up. The other one that obviously we can play around with is just using a lows resistance card purely as a not for a time factor, but only for a price magnifier. So preset Gann square, and what I can actually do is when you're not using it as a time scale, you can actually just that'll do. I can actually just drag it forward. It's unlocked. And I can just shove it over here, and I can just start it at $1.13. Doesn't really matter where I start it. And what I can do is sort of turn off a few of these so I don't have so many. I'll call it 5 and 2. And what I'll be watching for here is, well, is there any alignments with lows resistance cards? And surprisingly, we've got a very similar sort of line up here with the 50% points. So around about this 20.65 to call it $21. So that's really going to be the target zone that I would be watching for on either of our dates at this stage. Now, you'd obviously be watching those. If it gets into that area, it's going to be in the the strong part of the square if we're going to get lows there and all those sorts of things. So, we've got, from where we are now, the market's sort of sitting, as of current day, sort of $32. We're talking about a $12 move potentially down into either of our little targets here. So we can come up with lots of different other time-based mechanisms, price-based mechanisms. You might, for example, be thinking about a first range out. So if you're comfortable to call that the first range out, add it to there. What if we could get for example, let's say it rallied into a top at that point, and we get 200% of that down into our April date. Or it's probably got to do a lot of work to get there. I don't think it's probably going to hit there by April, but we could definitely be using first range out. But that's all the stuff that I tend to try and line up as I'm getting close into the turns. So we've got dates and prices from squares. Probably where I'm now interested as well, now that we've got some lines. Now, these wouldn't be the only lines you'd have on, but now that we've got some lines on our chart, circles I mean, now what I'm going to start to do is probably want to start to line up 4th of the 6th, 87. Now I'm going to start to put some angles on here. So 4th of the 6th, 87, I'm going to put a 0 angle on there. And now what I've got is a 0 angle off the birth of the contract, and now I've got a little pink line that it's right in there. So what I do is I pretty much turn off everything else other than the pink line. Probably a 4x1, not a 1x4. There you go. Oh, that's rude. What have I done? Oh, it's a 1x. There we go. 1x4 would have been helpful. All right, so I'd leave that on my chart, and then I'd probably plonk one on that top there, tune that up and see if I could get an alignment there. Now I might have to play around with both trading and calendar days, okay? I could then come forward and do the same thing off the birth of the contract, the all-time low, I should say. So $1.13 on the 3rd of December. Starting value, point size is 0.001, and $1.13. And I could line up, well, do I have a trading day or a calendar day count there? So I don't actually have either of my angles lining up off that low. So I might try a 0 angle. So instead of using a $1.13, I might play around and use the start value of 0. That doesn't improve my hit rate as far as that, so I'd delete that one. And I'd keep going through with all the major angles. And really what I'd be trying to achieve here is an alignment of where I could push things through there. Now, it's amazing that you said that, Graham. It's amazing that that was going to be my next point. One of our really great lady traders, Lee, who's up in the territory, she was online last night and she said exactly the same thing. If you run a 0 angle backwards from the December date, it looks very interesting. So when you've actually got some prices to aim for, now you can actually anchor your angles and run it back. Now you say, can you do stuff like that? Absolutely, and that's exceptionally well thought through. All right, that's I'm very glad that you mentioned that, because it's a really clever way of tackling it. So if we then pulled apart our little angle here and we ran it back, and as Lee noted and you did, it squares out with the all-time high. So the fact that we've got that working for us, running into that area on our, on our date, and of course you need to tune that up. That's a bit raw. It's working pretty well. So these are all ways that you've got extra ways to sort of investigate and move your prices, like I've just done. But can you see that if you can get these things working, and if you get the vertical lines working, and you can get some prices along it, then you can start to shoot angles off it. And I could be running, a speed angle. Let's say we ran a speed angle from top to bottom there. Well, I could maybe, do the same sort of thing there. And if the market did make a top on our day, oh, look at that. Similar time frames from top to top might end up being the same again. So it's interesting that we could then sort of now start using our reference angles in the market, and we might say, all right, well, based upon that, am I running short? Am I running long? Let's say we then got a rally up, did something through here. Maybe we could follow that speed angle down into our date. But they're all the fun things that I guess you get to play around with once you've got these things sorted out. So get some circles on your vertical lines now that can be, make them accurate, but they don't have to be to the cent. I think we're comfortable to say around about that $20 mark, there's definitely some things working for us. I'm trying to think what else we've got left in the shed that we haven't thrown on the market. If we take a look at all of the tools, obviously I haven't done a calendar day count going backwards. That would just be a standard thing that you'd be applying. I tend to think time by degrees covers that off anyway, 90 days back to that. Square of 9, yes, Des, I should say, Les, I'm renaming you. Yes, the square of 9 would be there, but it's not one of those things that I'm going to introduce at this stage. Obviously, you've got that as part of your toolbox, so I'd encourage you to take a look at our dates and take a look at our prices, and I think you'll find that they, there's some harmony there. I won't say it's stellar, but it's certainly got some, it's kept me interested, put it that way. So I'd encourage you to look at that. What we'll probably do remember we still got that bonus session that we're going to have to organise. As I said, I'd give a bit of a discussion on the square of 9. I'll probably do something on that then, and we can have a chat about it then. But probably not trying to blend too much in at this stage, because that's definitely a confirmation tool. So we try and add the square of 9, blend that in at this stage if we could. Looking at all of our tools that are in Profit Source, I'm looking there. We pretty much played around with them. You can obviously use the tools in different ways to get the same results. That's just how I use them. So there's no sort of secret science in how you use a tool. It's just really what you've got to do to derive the answer. Now, a lot of information, and obviously we're backing on to 3 hours, so I expect your brains and your sponges to be. I could keep going all night, and I know you guys are going to go, yeah, fantastic, but your ability to retain information has probably waned about an hour ago. So what we've done is we've gone through a lot of different techniques. We've tried to line them up according to a couple of different vertical lines. We're trying to put some dates along the way. Yeah, exactly. That's what the recording's for. And so really what it's about now is we've done some time work. Remember, we go back to David's thing, time, price, pattern, position, volatility. We've done time, we've done price. Price we could always spend a lot more time on. I will keep making the point. I used to go to a huge effort to get and have resistance cards going till the cows come home, and spreadsheets and all that sort of stuff. But I still found that the market would find the right time and the right price would just appear, and then I just try and trade it accordingly. So it's not my attempt to be lazy, but it is somewhat of an attempt to be lazy, because I'd end up getting 25 pages of prices, and I'd get so lost in the detail that and I'd be going, well, is that really the low? Well, it's an island reversal, but it's not on one of my prices. It's an island reversal on your date on a on a 50%, for example, but it's not quite the right price based upon a resistance card from an obscure low 50 years ago. So I tried to just sort of clear that out and just get the price bit away as being a distractor. And as I said, if the right pattern's there, if you've got position in the market, you've got volatility, and you've got time, and the price is even in the ballpark, you got what you need. So you can always tune that up a little bit closer to time. All right, and we've got to remember we're about 60 days out from the April date, and we're about 10 months out from 9.5 months out from December. So we've got plenty of time to do some modification if we felt necessary. What I want to do is sort of get clarification. Is everybody, you've seen the process? Are you happy with the result in the sense of what we've been able to derive? Forget the dates, but just the yeah. Well, that's what I wanted to. Lois has nailed the head. Great lesson. It shows I'm on the right track. That's the confidence that I wanted you guys to get from this. Less about the dates, more about am I doing it properly in a way that's going to get me an answer that's going to be useful. So Great, Graham, fantastic. So I'm glad that came together for you. Yeah, exactly. You've got to go and hit the Aussie dollar now. We're not done yet. I'm not kicking you out just yet. The thing to remember now is, no, my pleasure, Des. It's a pleasure to work with people like yourselves. It's it's not a chore. Let me tell you, it doesn't feel like a chore at all. I can tell if it starts to feel like a chore, then I'd have to worry about it. But it's fun. It's enjoyable. So let me point out to you that we've got price, we've got time. Really, what I'd get you to do now is reaffirm the work we've done, but not try and as I said, try and shelve it and just wait and see what the market delivers. Don't try and reconstruct it 4 different ways because you could end up missing the prize. And that's probably, as it sits at this tick of the clock, that's the best efforts I can give you within the let's say the knowledge base that's at this level. I know there's obviously some stuff from the master forecasting course I could throw at you, but that's not necessarily going to change my view all that much. But based upon the knowledge base that we're all sharing here, that's the best work I can give you at this tick of the clock. Life can change and markets can change. And certainly I'll change with that. But at this stage, they would be the ones that I would file as my dates to watch for this year. And I'm just going to wait and see what the market delivers and continue to trade what you see that's in front of you. But I'm going to be looking very heavily for pattern, position, and volatility around those dates. And if that all comes together, I think we've got the right time to be looking for something to happen. So just to firm it up really clearly. Yeah, I'll come to your questions in just a sec, everyone. I'll work on that. I saw your thing there, Neil, so you need the source of the earlier file, read the ranges, absolutely. I'll put that back up there if you guys want to pull that file down. Oh, sorry, wrong one. That's asking have you got the file. That's the source file for those timeframes if you want to grab those. I'm quite happy for you to have those. The next part to the puzzle, I forgot my point now. So yeah, I'm going to be looking for the time, price, pattern, position when the market arrives in and around those dates. We'll just have to, put our trading hat on at that time and work towards that. So, we don't know what the market will produce. We're just going to have to wait and see. But obviously, you've got to be on red alert around those dates. You can't, you can't sort of, keep your, focus elsewhere and then expect to do something with it. Obviously, you've got to trade what comes in front of you. Yeah, I did, Wayne. I actually haven't read it yet, but I'll mention that in just a second. So what we want to do in the remaining time that we have together is to repeat this same process come next week on the Aussie dollar. So we've got to throw out all this work and start with some new timeframes and all of those sorts of things to get started. And then we're going to do that bonus session that I talked about, which I've yet to organise a time. What I'm thinking of doing is having both the classes, Tuesday and Wednesday classes, all join in for that one, and we can just do a big Q&A and round off anything that we need to pull together. So that being said, that's kind of how. And next Tuesday will be Tuesday; it won't be Thursday. So I hear what you're saying, Robert. There's just time and energy in that. Great. Lois is, talking about 15th to the 17th of April with a lot going for it. Wayne's saying, yeah, I had a quick look at it, Wayne. I know what he's doing, but I want to read it in a bit more detail. So can I talk to you about that next week? And obviously, Elizabeth, you'll pick up some stuff when you can pull profit source apart. Yeah, look, I'd have to say you're probably right there, Linda. All right, the big picture gets you looking in the right spot. The small stuff just gets you tuned up. All right, and if the big picture stuff isn't there, the small stuff isn't going to get you there. That's been my experience. It's kind of like if you cut the old carpenter's tale. You measure twice, cut once. If you cut it short, in haste because you want a nice short piece, you can't then you can't stretch it across the gap to get you where you need to be. You've got to cut your big planks of wood and lay them over the distance of what you've got to travel, and then you can use the smaller ones to make the little jumps. But if you haven't got a long enough piece of wood to get you across the big stuff, you can have 10 pieces of when building a house, you can have all the short pieces of all the offcuts you need, but they're never the right size of the one you need for the job at hand. So what you've got to do is get the right size for the job that's at hand, and that comes from the big picture. All right, so that'd be my thought process for that. All right, absolutely. If you want David's comment, and it's a pearl of wisdom. If you want big results, you focus on big things. All right, if you focus on the little things, you go all right, but you do a whole lot better on the big stuff. All right, everybody. Well, over to you guys. Big night. Definitely run longer than I had anticipated, but that's not uncommon. So I'm going to call official end of play for tonight. Hopefully you found tonight beneficial and enjoyable. If you've got any questions, I'll hang around and answer those for you. Otherwise, we'll call tonight to an end, and next Tuesday we'll get to do it all again on the Aussie dollar. So gear up, as they say, and get some rest. Yeah, absolutely. You and me. Yeah, a lot of people are, Des. I've got to get cracking on some work on the Aussie dollar. Fantastic, Annie. Thank you. Thanks, Neil. Thanks, Linda. Yeah, no problem, Keith. Look, that's certainly part of this process. Thanks, Christine. Thanks, Debbie. Good to see you this or last week it was. Thanks, Jose. Good to hear from you, Wayne. Good stuff as always. Thank you, Darren and Ashley and Graham. and David. Thank you for your work. Thanks, Albert. Hope things pick up for you, Elizabeth. Hope this next week's a bit better for you, all right? So everybody take it easy, and I look forward to catching up with you in the, no longer distant, but very near future. So take care, everybody. Hopefully the markets are kind to you this week. So no problem, guys. Everybody take it easy. Thanks, Lynn. Now that we're recording officially, as I said, welcome to the final of our official sessions and the second of our forecasting components of our time together in this 12 sessions, which has been the best part of half a year. September from last year seems a long time ago, so thanks for hanging in there with me. As I said, apologies for not being able to be with you last week, and obviously apologies for tonight if I'm a little bit more sedate than usual, but that's just these teeth playing up. So I guess as per our last session that we got together, we're going to follow a very, very similar game path as far as what we're going to undertake tonight. So just let me bring up the PowerPoint for session 12. So there's only 3 or 4 slides in there. The first of which is obviously the important one, which just reminds you of our financial services license obligation. Lets you know that Safety in the Market holds the appropriate licensing through the Australian Securities and Investment Commission to conduct all of our education, including the Ultimate Gann coaching. We've not taken into consideration any of your personal financial objectives or goals, so we haven't sat down with you and looked at all of your individual needs and tailored this accordingly. Obviously, this is designed to be what we refer to as general advice only, and anything that we come up with should be balanced against your individual needs and circumstances. By all means, seek licensed professional help if that would be of assistance to you in making decisions. Obviously, we are going to focus on current markets, and getting together tonight, we're actually going to attempt to put together a forecast on the Australian dollar. So, all those things being said, this is certainly not a case of specific or direct advice. It's general advice only, and it's just obviously an outcome that we're watching for in the market as a potential, and really just talking about the process being put together in a similar way to what we did for Newcrest mining. So I saw there was a little bit of a discussion there on who's short or looking to get short Newcrest and different bits and pieces. It's certainly been, interesting times in the start of 2010. We've had volatility both to the upside and the downside of the market. So there certainly has been tradable ranges. A lot of those have required, I guess, some more advanced entries to get in. The standard ABC entries, whilst they've been working, mechanically, I guess the better moves, I guess, in this market have certainly been if you've been able to get some timing mechanisms into the market and start to recognise where important tops and bottoms would be. So our plan of attack for tonight is very similar to what we did with the session on Newcrest mining. So we'll do a quick market update. We'll take a very quick peek at the markets. I don't want to get bogged down in that as I've been able to do in the past. I just want to do a quick review on where these markets are sitting, only because I think they're sitting in interesting positions, as they always are. There's always something to talk about. So we'll take a look at the SPY. We'll take a look at the S&P 500, obviously for the index perspective. We'll probably take a look at gold as well. We might take a look at, obviously, oil if we get a chance. But those are sort of the 3 or 4 markets that we'll pick on. Obviously, we'll take a look at where our markets are sitting, so Newcrest mining and the Aussie dollar. We'll do a quick update on those, and then we'll get stuck into the Australian dollar forecast. So I guess just to set that up, I'd have to say it's been one of the more challenging sort of scenarios that I've had to bring together. Maybe because, as I said, I've got a week of sort of migraine headaches and things to go with these great teeth. But what I found with this market was that there's actually a couple of very valid roadmaps to be following this year. And that was reflected in a lot of the work that you guys sent in. We had quite a difference of opinion. In doing the very long-term forecasting stuff that David's taught me how to do, I can see that using the information and the technique that you guys have got the Master Forecasting course would be aware of, we're really not looking for a major pressure date until at least into next year. But that doesn't mean that we can't come up with something as a roadmap for this year. But really what that's suggesting is that we could be within a cycle at the moment that's not going to produce what you would consider major or massive changes in trend. They could be good tradable turns. They could be good runs within what is existing trends. They could obviously be maybe a range trading market, something along those lines. But as far as sort of coming up with, what is, you could argue all-time tops, all-time bottoms, I don't think we're going to see that in 2010, just based off the work that I've put together. So the problem is that I don't necessarily want to give you a date into 2011. And some of the guys who did submit some work have actually come up with particularly some January work for 2011. And the thing is, I can't fault that work. It's all fantastic stuff. It's all valid. It's all based upon the techniques that we've spent our time covering. But we want to come up with something that's a little bit more relative to the current environment. Now, that's all well and good as well, but then the problem lies in the fact that I see a couple of alternate roadmaps, and I guess what I'm suggesting to you is that I've come up with a date that's probably nearer into the future than what I normally would come up with. So we're going to look around the March seasonal date as being an area to watch for a change in trend, and I think that will give us a guide as to which of the roadmaps we're following. So I'm happy to sort of look at and point out some of the dates that you guys have come up with as being areas to watch. I think a lot of them have some value in them, but I guess we need to see what happens in March first to really see whether or not we're defining by, you know, the different roadmaps that are on offer. So this one's a bit of a curly one. I certainly, as I said, found it a little bit more challenging than Newcrest mining. I think that was a little bit clearer, basically around master time cycles. There was certainly some more clarity there. But really what I'd suggest to you is that in sometimes putting together a forecast, you try and attempt to do a longer term forecast. You try and come up with maybe a short-term date and a long-term date. There's nothing wrong with that approach, but what I'd say to you is that at the end of the day, it really comes down to, you know, having something shorter term in the market, maybe, you know, a few weeks or maybe a month or two out. Use that as your sort of your anchor or your ready reckoner, and then if the market sort of moves off that point, then you're in a better place to start judging where the rest of the year will unfold. But all I'm trying to achieve is by not getting too far ahead of myself, and I would be happy to get well into the future if there was a lot more clarity than what's currently presented. But I'll even say that even with the skill set I have, I'm a little uncertain as to which way this year could fold out. So now that sort of I've prefaced all of that, I guess I'll back that up when I go through the material with you and have a chat to you about it. So obviously, you know, there'll be a lot of work that we need to pour into that. I guess what I'll do is, because there's some uncertainty that exists in which of the roadmaps, you know, it could be said that until you get some clarification or some certainty in this market, it could be worthwhile sort of thinking about what you might do and how detailed your work's going to be. So, you know, you might have squared every single range or every top or bottom and those sorts of things. But if they're all giving you end of the year information, you may well just sort of need to put that into a bit of a holding pattern. So once again, I've tended to focus on the things that I tend to do well, which is obviously time cycle work, big picture and small picture analysis, and obviously trying to lock in time frames, time by degrees, squares and boxes and angles and those sorts of things. And then obviously, you know, trying to follow that mud map that we talked about many weeks ago now in, I think it was in session 10, where we talk about the process of constructing that forecast and bringing it together. So that's going to be our plan of attack for tonight. So without further ado, I'll just jump into profit source. So just let me bring that up so I can have a chat to you about it. So my plan is to obviously just pause this camera for a second and just jump into profit source, and we'll go through the major market indexes as we mentioned, like we usually have, and we'll have a quick chat about what we've seen in front of us. So we can start out with the share price index. Interesting that we're sitting right on you know, that large gap that occurred in our market. So if I just highlight that area for you, that's the first thing I guess that sort of jumps out at me as being a potential to watch, is that the market's obviously got to come back, close that gap before we could be really confident that we've you know, that all the good times have returned to the market. It's interesting that this sort of pullback here has really just been forgotten and being sort of disregarded in many ways. You know, this little sell-off here, it really has been, in percentage terms, not that great a pullback in consideration to how far this market's moved. And we sort of talked about this, you know, towards the you know, one of our sessions ago. If we're pulling the retracement in comparison to the 2009 into 2010 run, we are really only sort of talking about a 25%, let's call it even, you know, a 30% pullback. Now, that's still quite, you know, large in comparison to that move, but, you know, we're not talking about a 50% pullback. And so that might mean that maybe this market has got a little bit more into it before it came back to find some sort of balance. But the real test in the short term for this market is, will it actually get up? Will it be able to attempt to close these gaps? I know a lot of traders have been watching around the 24th of February without getting into too many details. That's been a pressure date that I know a lot of the index traders that I know who do all right in the market, they've certainly been watching that little area. And I guess you're probably starting to argue whether or not this is sort of forming a pseudo little double top. So, you know, just taking a look at that, the market has climbed back above that 50% point of the sell-off. Could you argue that that's now a double top? Well, probably. It will be if the market stops here and starts heading back down, but we haven't got close or exactly up to that price point yet. I know that this is not strictly correct in the balancing, because obviously we're not going from the top, but we've got about 18 days down and we've got about 32 days up. So we're a little bit quicker on the upside move than we are on the downside, if we're calling that a double top. So that sort of supports a little bit of strength to the upside. And you've got this little gap sitting in play here. So you have got your first little higher swing bottom. You've got a little inside day there, which was just a bit rude. I know I was sort of watching out of this area here for, you know, that as being your first little higher bottom. Gave you an inside day though, and then gave you a key reversal the next day. And then gapped out the next day. So if you were in the market as a buyer or going long this market and you're waiting for your first high swing bottom, there's your first sort of legitimate entry. And then obviously you've seen this market just basically gap away in the last couple of days. So if you're calling that your first little high bottom, you're getting in, you'd be getting in at sort of 35, 36, 37% of the range. So risk and reward is not as, I guess, as comfortable as we would like it. So that would be a more difficult entry as far as that first high swing bottom, particularly into a potential double top and into into that inability to close the gap. So I'm just going to do something quickly because I just need to bring up my other screen. I've got a couple of things operating here in the background, and what I've just worked out is that I don't actually have my other screen up, so that means I can't tell whether or not you guys are asking me any questions, and that means I'd have to wait till I came back into profits out of profit source. So I'm just going to remedy that. So I'll jump back into profit source. Be interested to see how you guys are reading the equity market. Obviously, to get your take on how you see it. Okay, so Darren's saying that the sound seems to be pausing and breaking up more than normal. Okay. Give me 2 seconds. All right, let me log out and I'll log back in, everybody. So you guys will just wait there and I'll be back. All right, everybody, well, we'll pick it up from there and we'll see whether there's any improvement there. All right, so I've just logged out and logged back in, so I'll see whether that's rectified anything your end. Is that a slight improvement from where you guys are? I'll just wait for you to let me know. That's a couple of other things I can try, but hopefully that's a bit of an improvement. Okay, thanks, Des. All right, so we'll just go with that at this stage, and okay, no worries. Well, we'll just we'll see how we progress from here. All right, so let me just jump back into profit source, and we'll just have another play around with where the markets are. So we've talked obviously about the. So let me know if you do have any questions because I'll be able to pick those up now. So what we've got is a scenario, as I mentioned, markets recovering, getting back into that gap area, and obviously got to close that gap before we see a real sort of conviction that this market's pushing higher. Volume, I do note, has been a little thinner over the last couple of days. Okay, so as this market has pushed to higher prices, it is slightly lower volume than what we've seen as an average. Now, on the SPY, that makes it a little bit harder to read because you can have days where you get higher and lower volume accordingly, but it's not always the best sentiment indicator. It's probably a little bit more workable in some of the other markets we follow. But that being said, I do note that we've seen a little bit of a drop off in the volume. So coming into that 24th, which is a pressure date that I know obviously I mentioned many have sort of done some work on. Coming into that area, a little bit of a double top into a gap. I'd certainly, if I was sitting on some long positions, I'd be really looking to lock those in, as particularly if there's good profits on the table, and if it's sort of hitting danger zones at 50%, so I'd be watching for in the next day or two, watching for potential sort of sell-offs, and certainly if we got back in and we broke underneath that swing bottom there. If I just put a little dot there, if we jump back in underneath that swing bottom, if we see the market tackle that level, I'd consider that probably an aggressive place to potentially go short. I'm not saying you couldn't go short off that double top, but I'm just saying if it broke through that swing bottom there, that could be a time to start getting aggressively short if that's your market of choice. So that's kind of how I'm seeing that little environment playing out, so to speak, and you will get a bit of a view as to what the US markets are doing. They don't have the gap that we have as far as the Australian market's concerned, only because this is a 24-hour chart. I reckon if I looked at the RSP spot V, no, there's not a gap on that one either. So unlike the Australian market, the S&P 500 tends not to gap as much, but just taking a look at where it sits, going back to our January top, we're a little bit higher above the 50% point in terms of this movement back up. If we take the top, we run down about 25 days and up, however many that is. up 17. So we've, certainly passed that 50% point in terms of a 50% time and price retracement. So it's interesting times here. Like the Australian market, not an easy place to start to try and get long through here, only because of the difficulty, I guess, in getting a higher bottom entry through there. As you can see, little inside days, you've got a number of up days. There's your first, I guess, ability to get long is that outside continuation day there in terms of going with the trend. You might have seen that close or break through that bottom intraday. You'd have to be watching that. And then obviously it's a bit of a quiet session come yesterday or Monday on the US market. But, interesting. We'll see how this market does pan out. On the broader perspectives, swing charts obviously are important to always keep a ready reckoner of. We are seeing a confirmed uptrend. You've got a higher top, higher bottom. The weekly charts are still higher tops, lower bottoms, so there's still an uncertainty there. So, potentially waiting for a confirmation of a higher weekly swing bottom. But at this stage, I think the markets are poised potentially for some higher movement. But we'll just have to wait and see, whether we can get some stronger conviction out of there and maybe get a nicer, tighter entry. But if you look at the swing ranges, there's 65 points compared to 34, 24, 19, 20. That's certainly a pretty big, it's not an overbalancing price because the swing top's not actually below the previous swing tops, but it's certainly a pretty strong rebound in terms of pricing. So I guess the point I'll make, which I'll come back to camera, is that, the work that I do on indexes, which is obviously a bit cursory these days, I'm certainly not as involved in those markets from a trading sense as I have been in the past, but commodities obviously tend to keep me a little bit busier. But what I'll point out is that the work around, the date that we've got around, the middle of this month, 24th of February, I do like that work. And so what I'm really suggesting is if we see a little bit of a turn in the next, say, 24, 48 hours, I'd be quite comfortable that could be an opportunity for us to start to think about going short. But if that sort of time pressure passes and we don't get a result in the market where we start to see the market, making some sort of reaction, I think it is probably time to think about maybe staying long and maybe moving the market back up to the top where, those January highs that we saw, just a few short weeks ago. So that's kind of just a very, very broad overview at this stage. But obviously the SPY has some added pressures as far as closing that gap is concerned, as opposed to the US market. And the US market is looking technically a little bit stronger than what our market is, purely looking at price-based indicators. So there's some food for thought on those two markets. Be interested how your thoughts are as far as your questions, your comments or queries with regards to that sort of commentary or that analysis. Just be interested if you agree, disagree, if there's something else you guys are watching, any questions you might have. Otherwise, we'll happily move on. It's just I know if you guys trade the share price index, I want to make sure that you feel that those questions are answered. Okay, nobody. All right, so I'm assuming you've all, you've all got your SPY trades all taken care of, or you're all very happy with my analysis, or you completely disagree with it, and that means that you're going to follow your own work, which is fine. Okay, so yep, no problem. Linda says she's agreed. Blake's given me a couple of comments. Luke's added his 2 cents worth, which is always nice to get from yourself, Luke. I appreciate that powerful insight that you've just given me. So, all right, well, let's take a look at a couple of other markets. And okay, so early March for you, Wayne. Fantastic. Okay, so Wayne sort of saying, waiting for the 2nd of March. It definitely could be another area to watch, maybe a double top. Waiting for the 24th low. As I said, there's SPY's up to 47.37 tonight. All right, let me. I'll just bring up a quick chart just to see where that places us. So my own benefit. So 47.37. So it's taken out that old first leg of that top, which was at 47.28, but still sort of very cursory sitting in that gap. So we'll see whether or not it's got enough momentum to push through that. But thanks for the update, Des. That sort of tells us that it's sticking its nose into that gap, and it's going to, we'll wait and see what the markets are going to do from there. So time will tell, as they say. Time is always one of those things that always, with the benefit of hindsight, tells us what we should have done. All right, well, let me jump back into profit source because I want to pick up our work on things like the gold market. When we were last together, obviously the markets had come away quite considerably. We're still probably not what you consider into a major recovery just yet, where you could argue that we're also sort of getting back around these sort of little double top levels. In terms of, that sell-off, we had sort of that second leg, and being someone who likes, to follow sections, we could argue there was sort of our first section, our second section, to balance this market out nicely, there would be, a nice third section available or potentially available to us. And that would be on the downside. The US dollar is continuing to maintain its strength, but I guess that perspective there really tells us that we haven't, we haven't really regained all that much considering, how much has been given back. So, we're talking 1,200 and, $27 down to, you know, 1,044.5. So, you know, you're talking, you know, the good, you know, $180 in that sort of area there. And we haven't sort of recovered, you know, half of that just yet. So for me, watching 50% because of how well they work on the markets I follow, it's just sort of bread and butter to watching how strong or weak a market might be. So that being said, you know, as far as time's concerned, it's certainly managed to recover to that area relatively quickly. You've got sort of 64 days down from top to bottom, and then we've really nearly recovered the 50% in, you know, the best part of, you know, 17 days. So half of that's going to be 32 days. That'd give us about the 9th of March as a date to watch if we were looking at a pure 50% retracement in time. If you're looking at 16 days, that would give you a quarter of that time frame. So we're right on that time frame at the moment. So that's purely looking at the very micro view with regard to that market. So that's, you know, as the as gold's moved higher, obviously that's had you know, an impact to the, you know, the US dollar and the commodity-based businesses out there, particularly, you know, our Newcrest minings and those sorts of things. Really though, when you look at the pullback like we did with the share price index and the S&P 500, you know, it's only about a 33% pullback. So, you know, that's a pretty smart place to watch for a low, you know, right on 1/3 of the pullback. You know, so we'll have to just wait and see whether or not it can get back above that market. If it can get sort of tackle that 50% point and get through the next few days where there seems to be sitting around that 50%. And Lois, you've made a really good point where you said so many stocks and commodities are sitting around that 50% level, and that's really what tends to happen, is that they can all tend to cluster together. And that's where, in that sort of environment, you've got to say to yourself, do you want to be brave and sort of jump in direction-wise? Are we confident that this market, all these markets can push through the 50%, or potentially if we're going to wait to see some sort of correction, you might find that it's going to, you know, affect a variety of markets because they're all sort of sitting at approximately the same level as far as the technical levels are concerned. So I think that's where we really sit, is that a lot of people are watching just to see what this market can do, or the markets can do in general, and just we're waiting for confirmation. So I'm really quite comfortable with sort of being pretty light on in the market at the moment and just waiting for a bit of confirmation to come from what this market's all about. So same sort of thing with oil. It's had quite a good recovery. It's done about 75% of that move back up. And I guess a lot of these things are, you know, interesting that we've seen a continued move higher in the US dollar. All right. So thanks, Darren. So yeah, so we've seen the US dollar moving high, and we've also seen gold and oil going with it. So it's interesting that you know, we're supposed to get a divergence in those markets, but in this particular case, we've seen them all moving together. But that doesn't tend to last forever, but it certainly can happen in a short term. So, you know, I think the US dollar, where it's heading, and obviously if it continues to get stronger, you know, I do think, you know, the normal sort of bounds of commodities have to come into play, which is generally that means some weakness for commodity pricing. But you know, as I said, time will tell in all of these things. We won't go into the US dollar, but we're here now, so we may as well take a look. You know, we're sort of sitting right on that 100% point now, though. So for me, you know, if we did see a sell-off here in the US dollar, that would probably give you good confirmation that both gold and oil were set to make a little bit of a move. But that's a bit of a level that I've been watching there, just waiting to see whether or not, you know, 1, 2 sections, you know, maybe a little pullback to the 50% again before we get another third section. So. All right, so let's take a look at Newcrest mining. So we've had a little bit of a congestion through here as far as, you know, since we saw our early February date. You know, we talked about getting long out of there, probably got stopped out if you were long. Then the market did finally, you know, give you that little bit of a, I guess that 5th of February date there was just a bit aggravating because, you know, had you not had that date and you got long and you called the 1st of February as the low, then, you know, you could argue that, you know, there was a good few dollars in there to be made, just trailing stops under swing bottoms, and you've done okay now. That tends to show that the seasonal dates come into play. We know 5th of February, early February is obviously an area to watch. But really in comparison to that sell-off, we really haven't seen that springboard effect where, you know, you would have thought if this was a really strong opportunity, then the market probably should have got back up at least through that 50% point. And knowing what we know about this market, and I'm not going to sort of recap all the work that we've done, but yeah, you're sort of looking about 30 days down. We're about 45 days now, so, you know, there's 50% in time. And we haven't touched the 50% in price. So to me, that tells me that we've run less than 50% in price, and we've done more than half the time. So that tends to suggest we're a little bit weak in that environment. And if we take a look at volumes, etc., you know, you'll probably see that there's been a little bit of a shortening in the volumes in this little bit of a sideways range. And I think, as you said, Lois, people are just waiting patiently. I think we are really sort of sitting back and waiting for a little bit of a lead. And that's why it's good to be a trader, potentially more so than, well, investors don't care because they're just going to hang on anyway. But, you know, being out through this little sideways move here, or being long in that period and making a few bob, but it's certainly not going to be the trade of the year. So I saw some of the discussions about maybe looking to go short today, and I fancy if I sort of paraphrase some of your reasons, if we put a swing overlay on there, you're probably looking at what you're looking for is a confirmation of a lower swing top. So if there's some strong reasons why you like the 17th of February as a high, you might be watching that as the first lower swing top. The fact that it's an inside day today shouldn't dissuade you. Yeah, look, Debbie, you'd be looking for a signal day as well. Like if you've got reasons, and as I said, I don't want to make this a complete lesson about going short Newcrest, but if you've got reasons why that's a top using the work that we put together, it's a 3-day ABC as well. It's also a weekly short. So if we take a look at that on a weekly chart, it's a weekly ABC short. And as we talked about some of our dates that we're looking for, as we're sort of talking about running into dates that are sort of around about this area, this could be a good opportunity to, short off a weekly chart, short off a 3-day ABC as an opportunity to go short. And, they're certainly, they weren't lost on me when I was doing the work over the weekend and seeing those trades come up. So if we were to see a little bit of a sell-off on gold and obviously strengthening dollars and all of those sorts of things, and maybe the markets get going from here, there your first little swing top. There's your 3-day ABC short. It's a weekly ABC short. It's a 47% retracement. There's pretty low volume on the way back up here. I'm looking at also, just as a little subtlety, is that that low at point B is also lower than that major low there. The previous one is also lower. So, they're little subtle signs. And I think this market does look technically a little bit weak. So there's an opportunity there to maybe just have a bit of a sweat on that. You've got a series of lower tops. You've got a series of lower bottoms. You're probably in a situation where, going back to the work we did do on Newcrest, you could probably argue on a very micro position. That's sort of one section, two sections, and potentially we're now looking into what would be a third section. And if we saw that coming in around, anywhere near our, forecast dates, we talked about the 10th, we talked about April, we talked about a variety of things in there, which you guys should be right across. That could be an opportunity to capture some of that. So just keep your eyes on the prize there. And I know that, we'll just wait and see what this market does. But, as we agreed, there's some time pressure coming up. If you go with your swing charts, it's really telling you short trades into those dates rather than long trades. All right, so final little quick, resonance in the market, or quick little checkpoint is just to, I guess, take a look at what the Australian dollar's done. Many of us were, talking about getting short out of that top there on the 14th. Really strong run back down to sort of the lows at sort of 84, 85. But there's been quite a good little recovery. So, but when you take a look at the context of this market, it certainly gives you, some interesting ranges to the south side, but then you get pretty much nearly a full recovery again. So if you take a look at that, it's about a 75% recovery. So if you were looking potentially, like I'm still thinking that there could be some weakness in the Australian dollar, it's about an 80% retracement actually. We might expect, if history is to repeat, in a slightly different pattern, we might expect, we could expect, 90 cents, 91 cents, somewhere up around there before we then get a potential for another leg down. But using your price resistance and just looking at your basic first range out work, we can argue that that there would be your first range out off that November top. The market's come down and pretty much touched right on 100%. And this will actually come into play when we talk about the potential for, what I'm expecting or what I'm looking for in the market is maybe using that first range out again. I'm going to base it that that's the current top. I'm not going to argue, maybe it could go, a few more days higher, could even go, somewhat higher. But, if we're looking at 1, 2, 3 sections out, maybe we've got another few days of some up market till we hit that sort of 90, 91 before we start to look to go short again. So that'll hopefully be fleshed out in our work when we start to have a bit of a chat about the forecast work on the Aussie dollar. Just very quickly, though, everyone, I just want to throw it over to you guys with regards to Newcrest mining. If there's any questions regarding Newcrest mining, let's get those out now. And obviously, Graham, you were mentioning 3 days short. Obviously, you're sweating on that. Is everybody keeping an eye on Newcrest, or because we've sort of finished our work a couple of weeks ago, it's kind of forgotten, or you're just waiting for the dates to come in? Remember that I talked a lot about trading into the date, as well as being able to trade out of it. So David used to call that trading into the date money for the sideboard. And remember, if you're following those trends into your potential turning points, you'll get in a situation where you'll be far more confident to trade out the other side if you put money into your trading account coming into that day. The pressure's off in so many ways to be able to then trade back out the other side, because you can essentially make it a bit of a risk-free deal that if you end up not getting the turn, or you muck up the trade, you know, all you're going to do is maybe give back some of the profit that you made on the way down in this case. So, you know, that's what I always found was confidence building, was that if you were into the right side of the trade leading into your date and you were profitable, then, you know, you tended to trade it a whole lot better back out the other way. Yeah, look, actually, I think it's, you know, I think the market, as I said, we're really positioned in an interesting phase. I really see, and as Lois pointed out, a lot of markets are sitting at key levels and critical levels. I think the next, you know, call it 48 hours, even to the end of the week, if we see something happen, then that'll make me feel a whole lot better. And I mean by that, if we see a continuation of some south movement. Otherwise, I'm happy to change hats and and get stuck in. But right now I'm sort of happy to be out, you know, thinking about how I'm going to get in rather than the other way around. Because at this stage, like, you know, we have our best laid plans, but we just need the market to confirm which way it wants to go. So I think we'll get that confirmation in the next few days. I'm hopeful anyway. So time will tell, as they say. Hopefully, I'd get a page number. Wouldn't it be good if Gann wrote about 2010? I'm waiting for that book to come out. Actually, it's going to be one of the best sellers. But unfortunately, there's not too many new texts arriving on a regular basis. So Beyond the Grave is a bit hard. Maybe Tim's been able to transcribe some, but that being said, not 100% sure as to when the next Gann book's arriving. All right, so. So actually just, changing soon is really what I'm suggesting to you guys. So, I've only got one long position in the market at the moment. And in doing that, it's something that I'm actually quite comfortable to stop and reverse if the market actually gets going in the next sort of, 24 or 48 hours. And that's in an equity. But being said, we'll take a look at the Aussie dollar. So you all seem pretty comfortable. You're either watching Newcrest Mining or you're sort of looking at those short trades. Keep an eye on that 3-day ABC short. That could get filled in the very near future, and if you miss that, maybe it's a weekly entry that you could be looking at. And there is even the chance, if you wanted to reduce the risk in the sense of getting your risk small, but you're taking a pretty scalpel approach to entries, to maybe look at the first lower top off the current little high at the moment, and maybe look at that as an entry to get in. Certainly, it's not going to be a traditional ABC, but could make you get into a situation where you could get a small position in low risk, and then add to that as the trade started to unfold. So. But they're all required on getting a signal and getting the right things coming together. So I'll assume that those questions are answered, and if not, now's a great time to type away. Alrighty, so I guess what our plan of attack now is to jump in and take a look at the Aussie dollar and commence a little bit of a breakdown of that market now. I'd be interested to find, as a discussion, as I said, I appreciate the people who put some work together, on the Aussie dollar and sent it through. I'd certainly, it's 2 sessions in a row, but I'd certainly like to, give Linda a pat on the back, who's in our Tuesday night group. She sent 51 pages of notes associated with the Aussie dollar forecast. So, that's 51 word pages and, charts to match and analysis and all of those sorts of things. So I'd certainly give you a pat on the back and say great effort. And I know, Darren, you sent some good work through. I'm just trying to see who else in the room that I can think of. Yeah, Graham, look, I probably would say the same sort of thing, is that, and Lois, I comment on your work as well that you sent in. Graham, I tend to suggest that, yeah, no worries, Des, that's fine. You just put your parents' permission slip with it, saying that your forecast is tardy, and don't worry, it'll get it'll get through to the teacher. But that's fine, mate. Not particularly worried. If you haven't submitted something, and I know you're doing the work anyway, so that's okay. But I just want to touch on what Graham said, is that we've kind of had a balance, haven't we, where we've done probably, and I'm fair to say and comfortable to say that we've done a lot more work on Newcrest than what we have on the Aussie dollar. Now, it's interesting that compared to vice versa. Just taking on Linda's comment here, I found it hard because I had done more work on it the way through. Yeah, so sitting back and tackling that market is actually, there's a couple of benefits. You may never trade the Aussie dollar. One of the guys on the Wednesday night group, Dean, in WA, he does really well out of the Aussie dollar. He's done a lot of trading in it. And I caught up with him at the TT in Perth recently, and he sent through some really good work as well. But, I would certainly comment that the work that I've had to put together on the Aussie dollar didn't seem as flawless or as easy as some of the other markets. So I guess what I'm trying to say is, if you found it a harder go than Newcrest Mining, I did as well. So we're all in the same boat there, and no one's saying that they found the Aussie dollar easier. So, rest assured that is the case. Now, remember when we were going through this market, early April, 19th April, yep. But Yeah, look, there's certainly some April stuff out there and some August stuff, and I'm going to talk about what dates that people came up with and why I not disagree, but why I've got a different view as to worrying about those dates later in the year. I want to see what happens in March first, but what I'll point out to you is that this market is probably one of those markets where when you put together a practical forecast, you're probably not going to have as high a success rate. I'm happy to say that in terms of this market. The other thing I'll point out to you is that, when you get these dates, you're probably not going to get a basket full of dates. You're probably just going to get more of a handful of dates, and it's going to be a real case of waiting for the market to confirm. And probably what it tells me is that you should really wait for maybe not so much the most aggressive entry to get in. Like, for example, on oil, I think you can, time that market with a fair amount of precision. So therefore, the entries that you would take, in my mind, are far more aggressive than what you would on, say, something like the Aussie dollar. So you'd really want to get a signal day or a higher swing bottom or an outside reversal day or along the opens or something along those lines to bring that together. But if and I guess the comments I'll make that are generalised around this discussion is that we haven't done as much work on the Aussie dollar. So therefore, I would expect you to find it a little bit more difficult. But that being said, I think it is also inherent in this market that it is a more difficult market to forecast, okay? So I think there's two strings to that bow. So, you've got the scenario where we're less familiar with that market, but also the nature of this market makes it a little bit more challenging to project, okay? I found that, for example, master time cycles gave us some more random events, I guess, is probably, less tight clustering of information. Obviously, the timeframes, I think, work quite well, but then it really, the challenge, I guess, was finding the right zero date and knowing how to work backwards from there. So that was really the... that's okay, Graham. But really what I'm saying is this market, I think, and I apologise, I'm trying to say the same thing 20 times and trying to work out a better way to say it each time. But I think the challenge in this market, if I was to give you the one standout thing for me, was it wasn't so much finding timeframes that worked, and it wasn't so much finding boxes and squares and angles and all of those sorts of things. I think where the great challenge laid within this market was finding a zero date that you could then run all of that market back from. And Lois has just said, so that's where I'm a little uncertain, because this isn't the market of my prime choice, and it's certainly new to me as well. And that was, if we go back to session one, I picked markets that I haven't done this level of detail on for that specific reason, to live the challenges that you guys have been through. So that being said, we're in a situation where we've backed up against the wall. So what I tend to do in these instances is that I tend to try and bring in my forecasting window to a greater degree of certainty. Now, how I do that is by pulling the dates closer to me rather than forcing them out. So there's no point trying to forecast 2 years out in this market. David always would say, you could always tell what a market was going to do a week before it did it. A well-trained monkey on a stick can do that. It's the hard stuff's doing it 12 months out or 18 months out, and completely agree. Like, that just takes a huge amount of skill. So if a market's becoming a little bit more challenging to get a forecast going on, try and shrink your dates in. And that's really what I've done in this instance. And you'll see that as I start to develop that. But I'm glad you made those comments about, you found this market a little bit harder. It was a little bit harder to approach, how hard it was to get... Yeah, no, look, absolutely, Graham. I haven't forgotten this. So 180 degrees from the birth of the contract was working fantastically well. But can I tell you that I'm most interested to see what happens in March, because July is one of those dates that I do believe has a lot of merit as far as watching those turns, which is 180 degrees from the birth. But that being said, I want to see what happens into March first. And if March comes together, then there's a roadmap that I think is holding. And if we get a March bottom, I think we're going to see higher prices by the end of the year. If March doesn't come in, all of those things were, more, I guess, about sorry, I'm just trying to read the comments as they're coming in. So Wayne said your zero dates were from large time frame analysis, not master time cycles. That's fine. That's another way of doing it. But, I'd be interested to see what you used as anchors, okay? Annie's saying she's come up with the 10th of July. So I haven't written, see, I guess to get it really clear in out, like July, for all the people who did some work on July, I'm not suggesting that that's not the case. I'm not suggesting that won't be a date that we can watch. And I'll do that when we take a look at master time cycles. And if you want, I'll sort of push and pull around the July date as well, just to see what we come up with. But all I'm saying is that for this market, in my mind, what I want to see is what's happening in March first. And then I'm in a better position to make a call as to what will happen later in the year. So I'm not trying to be too ambitious, calling July and finding that I'm not on the right roadmap. March will tell us a lot about what this market's attempting to do. So that's what I'm trying to say, and it's taken sort of 5 minutes. So I'll continue to push on, but please continue your feedback, because all of those things are very, very important. I'll sort of make just one other comment though, with Graham, with what you said, 180 degrees from the birth of the contract, which is July. whilst that's, going to give us a very reliable area to watch for a change in trend, you've got to start to argue how powerful were those changes in trend? How regular were they? Were they 70% accurate, 40% accurate, 90% accurate? If they're only 50% accurate, that means for every 5 years it works, there's 5 that doesn't. This might just be the year that July may not be the roadmap to follow. Okay, so all of those things become part of the puzzle. All right, but I think you've all made good comments here, and I do agree with those going forward. Okay, so we just got to don't sort of let the market prove what it wants to tell you rather than trying to prove rules on the market. Okay, so I know I said in session 3 tattoo, I got excited because I looked at it 180 degrees from the birth of the contract, gave you July, and that was a pretty regular change in trend, and it looked pretty good. That being said, though, that may not be in 2010. That might be for every other year other than 2010. So we'll take a look at that when we get close. All right. So just to do a quick reminder, what we look for when we're bringing together a view in the market is obviously we need time, price, pattern, position, and volatility. Now, we've talked about the first two, time and price, as being things that we can project. They are variables to a certain extent that we can measure and that we can control. I would argue that position, time, price, pattern, position, and volatility are generally the 3 indicators that we're going to look for when we get close into our date. So I'd sort of bring up a chart on the Aussie dollar, which I'll jump into profit source and do that. How's the sound going, by the way? Is it a little bit better than before? All right, so we're jumping into profit source. Okay, thanks, Wayne. All right. Okay, I'll just see what I can. Could be a reason. So just let me. Got a couple of things running here in the background that just could be causing a little bit of. Let me check a couple of things out here. All right, everything looks okay here, so we'll take a bit of a squeeze. So we're back into profit source. I'll just let that screen load up for you guys. All right, so the argument here is that if you could demonstrate that you had, say, time and price reasons for that top, did we then see the market produce the right position for the market? Well, yes, it's it's clearly trending. The right pattern, well, you could argue, I'm not going to sort of say that that's a clear signal day, be it an island reversal or anything like that, but let's just argue it is for a case. And did we have volatility? And the answer to that is yes. And if you go back and look at most of the major turns, be it around these areas here, you could argue that the market does, deliver what you would argue is good position, good pattern, and good volatility around major turns. So that's really what we're going to look to identify as we get close into our pressure dates. Our job is to identify the right times and potentially the right prices, remembering that time is more important though than price. The price will sort itself out if you get the right days. So the argument's going to be is that we've just got to get the right areas to look into this market. So one of the things that we talked about as being a commencement point, which everybody has done well, is to go and take a look at master time cycles. So really the simple approach would be to sort of kick back 10 years ago and sort of have a view as to what this market did. Now, I'm not going to spend the detail of going through every single item ad infinitum, only because you guys would be comfortable to deliver this information, and you should be at this stage. Occasionally you do get the problem of picking the years or picking which months are most important. I think many of you were very good at identifying that this January top scenario, and we've got a situation where we had sort of December, November, December, followed by January. So you've got a little top here in October. Market came back and tackled into January and then fell out of bed. Now, obviously, 10 years ago, the market was very bearish. Okay, so we were talking, a very large sell-off in the 10-year cycle. Now, if you're going to pick out places that sort of stick out as the bumpy bits, obviously the January top, but January doesn't give us any prizes at this stage only because it's past. But we did look at that when we did the lesson on master time cycles. I do remember saying we could expect to see quite a bearish first quarter on the Aussie dollar, and at this stage, we've certainly got one tradable range out of that January move. Okay, so we've got one range coming south. Okay. The argument will be, well, are we going to get a second one? Okay, so maybe we can call that a first section, a second section, and the potential for a third one. So maybe what we've got is another section to potentially trade out into our potential for March, which I'm going to obviously validate, hopefully in your eyes, as being a a smart area to watch. Now, November obviously stands out as being a strong low, and you've sort of got these sort of interim lows here. Now, Albert, I pick up on what your point is you're saying for 1990 and for 2000, July didn't sort of stick out as being a great change in trend, and I certainly agree with that in the case of 2000. There's nothing major there. I guess you could, there's a couple of little interim lows there. If you traded into that date short, I guess you'd be happy. But you've got a bit of a May effect, and you've also got a June effect. Now, you've sort of got the 16th of June here, not quite a seasonal date. You've got the markets making tops on the 13th of January, very close to where we've got current tops in the market, and May. But really what it was a bit of a continuation of what was a pretty bearish year. It was a case of being short, and I guess if you look at this overall sort of bigger picture, you could argue that you sort of got three sections in 2000 that ran out into 2001 and gave us the eventual low. So we're watching on a far more micro picture, but we haven't had the aggressive sell-off that we've seen here, and we've had actually quite strong recoveries. As I mentioned, if this was truly following the 2000 roadmap exactly, well, we shouldn't have had any sort of recovery through February and March. We should have just had a solid decline into May, but we haven't seen that. So the 2000 roadmap could give us some dates, but maybe the pattern is not the exact one that we should be following. So whilst that's helpful, we've got to get a bit more information. So we're going to take a look at 95. That's our 15-year roadmap. Once again, we've seen a bearish first quarter. So we saw a December top, so late December or 15th of December. We then saw, around about the seasonal date, and then we saw sort of, a low around the 13th of January, which is close to our top at the moment, a recovery into the 24th, and then a sell-off into the 20th of March. So, all right, so just making sure that we're logged in okay, and that you guys are hearing me okay. So I've just come out of profit source, so I just want to make sure. All right. Okay, so obviously I want this to be as useful to you guys as possible. So I know it's going to take me a minute or two, but I'm going to get a bit more extreme with some of my troubleshooting, and I'm actually going to I'm running on two computers, so I won't lose you guys. I can still see you and see who's logged in. That's fine on the backup computer. What I'm actually going to do is just log back out of this one and attempt to make some changes, and I'll come back to you guys very quickly, and we'll see whether that rectifies it. Now, if we can't resolve it after this second crack, we'll just have to live through it. But I guess what I'm interested in is this sort of, because I can't be on the other side of where you guys are, is tonight's transmission a little bit less? Is the quality lower than what it usually is? I guess is the question. Is this pretty much how it normally is, or are you finding that it's a little bit reduced compared to normal weeks? Because if it's reduced to normal weeks, okay, worse than normal, no problem. So that's all I need to know. I will make some changes here. All right, so, okay. All right. We'll see how that goes. I've made a couple of changes. Yeah, sure, Darren, that's fine. Quite happy to be told. It's it's important you guys let me know these sorts of things. So I've made some changes here. I've just done a bit of a reboot on a couple of things, and we'll see whether or not that actually improves things. Okay, so let me know as we're progressing along if things haven't changed. But I'm pretty much at the limits now of what I can change. Yeah, that's fantastic. I'm glad, Elizabeth, it's sounding good so far. We'll just see how good it's sounding in the next 5 minutes or so. So let me jump back into profit source and let me know in 5 or 10 minutes whether we're progressing better or worse. Okay, guys, so I do apologise for that. But if everyone can work computers perfectly all the time, you've got a career for life. All right, so what I was saying when we were talking about the Aussie dollar was I was talking about now 1995 as being a potential roadmap to follow based upon a 15-year cycle. So we've got our tops here in sort of December, and so Ashley said the May date 2649 is an excellent 2011 with lots of range hits. Okay, fantastic, Ashley. I'd be keen to, when we get to that bit, if you want to flesh that out for me, more than happy to have a look at it. So what I'm looking at here is really a scenario where, you know, I agree. Yep, I'm with you on the long range stuff. I agree that 2011 is, you know, you would be familiar with some of the techniques I'm using from the MFC that get me out to that date. But as I said, I've got to come up. You know, there's no point giving you a date in 2011 saying there you go. Like, it's good for the ego if it comes together, but I want to give you some stuff that's tradable. So that's why I haven't sort of just picked 2011 as the way to go. So getting back to 95, we're in a situation where we saw the first quarter end up being predominantly bearish, and obviously the market continued to move down into July. Now, obviously many of you might have been viewing that sort of 5th of July, which would sort of put us 180 degrees from the birth of the contract, like Graham was mentioning before, and that does have a hit. So on the 15-year cycle, we could argue that early July has got something coming together. Now, interesting enough that this market did sell off, as I said, and it pulled into what ended up being the 20th of March before we saw some upside. And really, if you were going to argue where was the best bearish trading opportunities, you'd argue it was definitely into the March seasonal date, because, you know, the market ran quite strongly, but after then it really only did 2/3 of the range in price. And I can tell you that trading that second move, if you were going to sort of say, all right, I want to be bearish in that second part of the move, that's going to be a lot harder trading than it is in the first, particularly as far as holding positions are concerned. There's a lot more volatility through here, and that's what I'm suggesting is maybe the best of our short trading could be into March, and then we could get a bit of this rubbish, and then we might find that July could be the next date. But that there's a lot of time period between March and July. Now, I'll point out to you that if you're looking at a seasonal date turn in March, and you're then running it out to early July, well, you're going to look at about 100 odd degrees, which, you know, is not exactly what we'd argue as being a great hit, but it is actually very close to 104 days. Now, for many of you, you'd realise that 104 days is actually the most recent bear cycle in terms of days. So in other words, 104 days, which is twice 52, which my colleague Tim would remind me at every instance, because square 52 is a good friend to him. And so it's a case of being able to sort of understand that maybe these two dates do have something linked into them, but that's following a 15-year roadmap. So the first quarter was quite bearish. Second quarter was challenging to trade, but certainly bearish. And then third quarter, the market ended up producing some major turns. Now, looking at seasonal dates, we did get some turns, 22nd of September worked pretty well. Early August, all right, there was a little top in there around the 10th of August. So at this stage, I'd be comfortable to say the 20th of March was a hit. Bearish first quarter. Have a look into there, and then we'll see what the rest of the year provides. July now starts to pop up as a bit of an area to keep an eye on. All right, let's take a look at a 20-year cycle. So jumping now into the 1990. That's the other 2000. Let me come back to you guys. So what we've got is, once again, top on the 27th. There's a low on the 18th. I'm happy to call that a bit of a seasonal date turn. We then saw, 3rd of January into the 22nd of January. We then saw major sort of catastrophe, major gaps, those sorts of things. And eventually the market sold off into what was a low on the 26th of March. Now, not quite a seasonal date, but over 20 years, I'd be happy to sort of spot myself 4 days. But as you're pointing out, you've got quite a strong turn there. And that's where the market did low and then started its run out from. Now, you're then sort of looking here at the 10th of July. So you've now got another July scenario as a major top in the market. And obviously the market's, sold off strongly, and before it started to push on again. But, if you traded long into that date, you'd be very happy with your long profits, and then you could pick up. So there is certainly some July activity there as well. Now, if I point out and just count the amount of days between those two again, we're up to about 102 degrees. Now, if you want to see how that sits with the time frame count, we've now got a 106-day count between the two. Now, that's a time count that we've seen before. It's the most recent bear market run. So you now might start to see that if we get a March turn, and I guess I want to stress this point as best as I can. I'm all in the camp for you guys who are in July. That might work better. Hello, there we go. I'm all in the camp for you guys who are strong on July, but can you see that if March comes in, knowing that we've got about 104-day count that's operating in this market between those 2 dates, if you get a strong turn in March, would that give you guys some greater confidence that that early July could be a place to be watching as well, based upon the birth of the contract, based upon master time cycles? But to me, it's having the experience to maybe know that the two are actually linked. They're not independent completely of each other. And I did do a lot of work on March and July, and I tried to find what was the link between the two. That's that link that I'm finding between the two. It's about 104 days, 104 degrees, whatever you want to call it. That's not on our list of, it's not on a list of known degrees to watch in your time by degrees lesson. We don't say watch 104 degrees. But what I'm suggesting to you is that I would feel much more confident about July and then saying to you, watch July if March comes in, rather than just saying watch July, okay? So there is a bit of a method in my madness. And tonight, as I said, the painkillers are kicking in, and I'm probably not explaining things as well as I generally would like to. But what I'm saying is I think those 2 dates are interlinked. Now, if March doesn't come together, I think you can basically, probably say July is not going to be a real, big move in the market, and then we might be following another alternate roadmap, okay? But thanks, Darren. So is everyone understanding that July probably, for some reasons, might have stood out as being, obvious based upon master time cycle work and timeframes like Ashley and Des, you guys are saying, got some July stuff going. But understand that sometimes to get one date, you've got to know the other, the other partner or the pair to that date. And what gives you some really good, that gives you much greater confidence that the two are potentially coming together. So I'm glad that hopefully that's making a little bit of sense, all right? Because that's a really important point. I just didn't discard July saying forget it. I've picked on March because I think March and July link together in an important way. So if we can get the March figure going or the March date working, then I think we're looking pretty good. How much weight do you put on seasonal dates compared to timeframes? That's a question that I've just had. Well, it all depends whether the two line up. If I get seasonal dates and timeframes lining up, which I'm going to show you in this example, and I guess the thing I'll point out to you is just on that, March would be, Robert's put it in better terms than I have, would be a precursor to the July date, and Annie's saying that, that's helpful, which is great. To answer Mark's question, I guess what I'm doing here, and I didn't explain this, and I probably, it's all sort of putting the cart before the horse. I haven't picked March as a seasonal date, so around the 22nd of March. I haven't picked that date because it's a seasonal date. I've picked that date because other timeframes and other information locks in with that, and it happens to be a seasonal date, okay? It's not, though, because it's a seasonal date that I've picked it, okay? So it's not a case of going, which of the seasonal dates are we coming up to, trying to find things lining up. I've got other things that go in there, master time cycles, and I'll show you with the time frame work as well, that we're looking in the right space, okay? All right, so let's keep moving because we've got a lot to cover. All right, so we're looking here at 1990. We know July could have something to offer. We're looking as well as March being a area to watch. But really what we're predominantly seeing here is that bearish first quarter. We might have if we're following the 20-year roadmap, we will definitely have a stronger second half to the year, okay? Particularly a strong third quarter. And then we could have obviously some volatility in the last quarter. But really at this stage, I think, you need to be thinking bearish rather than bullish, and then seeing what the second half of the year brings. Now, we've looked at, we can't look at 85 because we don't have 85's data. The other thing I said we should take a look at is looking at 7-year cycles. So that would mean 2003, that's 84 months. And if we look at that year, we've got a slightly different view because it's supporting the idea that we've got a bullish year rather than a bearish year. So taking a look, well, early July jumps out, once again, the 7th of July. But interestingly enough, so does the 19th of March. Now, I know I'm going to, keep stressing this tonight ad infinitum, but if we run out between those two dates, we're looking at about 109 days, okay? So we're all looking at a very similar time frame between a March bottom and a July event, okay? So at this stage, we're seeing March producing some lows, even in the bullish years. So that's 2003, that's 7 years, and then we could take a look at 1996, which is going to be 14 years, which is obviously going to be 168 months. All right, so what we've got is a bullish year predominantly. If we take a look at the first half of the year, we've seen a low in January, which is obviously supportive of what we've seen. We've seen turns in January, but here we don't get much in July. We've got, I guess you could argue a top on the 10th, but it's not not the yearly top. And March really didn't give us anything, so we've just got a movement through there. We've actually got some May stuff happening there, but May came up a little bit in some people's work, and I was happy with that, but I'd have to say it's probably more of a secondary turning point. July came up as obviously being an area to watch, and we've sort of had that discussion. March didn't come up too much from most people's work, and a lot of people sort of looked in the last quarter of this year, and that's fine. What I would say to you, though, is that I think this area in March, if you get that right, that'll hopefully give you the roadmap for the rest of the year, okay? So that's all come out of master time cycles, but I guess, pulling that together, most of our big picture years have been quite bearish, certainly volatile. If there's going to be any bull in this market, it's more likely going to be in the second half of the year, potentially. That's more on average. If it follows, if it just ignores March and July, maybe we're just going to have a bull out of, a bull market from here. January was very, very strong in all of the years that we looked at. So, as I said, no prizes for picking January, but what I'll tell you is that January was a very forecastable turn in this market, in my opinion, coming off all of those big picture cycles, okay? So all of those things coming together really gave you something to be watching in January. Now the next date, okay, thinking about is March, going forward from there. So I think most of us would be happy to say around about the middle of March, around about the seasonal date would be an area to watch, and also around the early, let's even call it, early July, even out to sort of, somewhere 1st, 2nd, 3rd of July is birth of the contract stuff, or, 7, 8, 9, probably about 10 or 11 July is really where we've seen most of those turns. So what I'm prepared to do is call those our 2-0 dates, and I guess attempt to start bringing some work backwards from there. But is everybody comfortable as to how we've derived those 0 dates? Because as I said, this was a harder market for me to pull apart. I have tested some other dates. Early August was an area that I watched as well. But interestingly enough, if we see a turn in March, we should be thinking August anyway, because obviously that's very close to our seasonal date. Once again, we've already seen a turn on the 5th of February this year. So February, March, April, May, June, July, August is going to be 180 degrees from the February low. So I think this market has the ability to run around our seasonal dates this year. And in saying that, we'll keep a very good eye on them. But the next one is March to keep an eye on. So is everyone happy how we've derived our... Yep, absolutely, Wayne. I agree with you there. Saw a clustering around. Yep. So Wayne's happy. Ashley's good. Graham's happy. That's great. It's more if you're not happy. I'm happy for you to type in that you're good, which is great because it gives you an opportunity to use your keyboard. But it's important that you because these weren't easy ones to come up with. Thanks, Graham. Yeah, and Darren, thank you. Yeah, everyone seems to be saying this. The sound's working better. So I'll tell you the magic fixes. I've just moved USB ports. There you go. That's I've moved my camera from one USB port to another. So hopefully that means the things are going to continue to work well. So if someone can tell me why they're different, I'll know better. But there you go. All right, everyone. So what's our next challenge is to say, all right, there's our 2-0 dates. You tell me what would be the next sort of thing that we could apply going forward. So you tell me what's the important information that we could be applying going forward. So where would be our next process step in the process of bringing a forecast together? Because we could jump straight to time by degrees. We could jump to where would we go now? So yeah, time frames. Everyone's screaming at me, which is great. Obviously, I've got a number of time frames that I've pulled apart in this market, and in doing so, they were have given me a guide as to what I should be watching. Now, there's some very large time frames that are working. Balancing time is another thing that we could be doing. Some of the time frames, and I'll just read a few of them out to you because I don't have a spreadsheet made up for you guys this week. But I'll read them out to you just so you've got them, and I'll come back to screen here. I'll probably even type them in actually, or I can. How did I know you were going to have an answer for me, Darren? I appreciate that. I knew there would be a reason actually. So there you go. So Darren's giving me the reason why USB ports are different. So I'm enlightened. So thank you, Darren. But I'm going to sort of rattle off some time frames here, and once again, we don't have the time to sort of show you all the individual time frames and how they're constructed. Now these time frames should really be something that sits well with you. I actually have a question for you guys as well because I've forgotten where one of the time frames comes from, and hopefully you guys can help me out because I know some of you guys used it. Now, the biggest time frame I'm watching in this market is 4,443 days. So I might just type some of these in down the side. So you've got 443, 2861, 2661, 1702, 1582, 749, 489, 385, 1052. I like that time frame because I use that one on oil. 1052, 104 is that time frame that we just talked about, which is the most recent bear market, the 08 high to the 08 low. 126 Can anyone remember where the 126 time frame comes from? Because I'm a little bit buggered as to remembering where that came from. But I know it works well, but I can't remember the reference. And some of you guys used it in your work that you sent through, but I, in my quick recovery, couldn't find where that reference time frame came from. But regardless of the fact of where it comes from, it's working quite well. So there are a lot of time frames that are available to us to be using in this operation. So let me jump back into profit source. And one of the things we didn't do for Newcrest Mining, which is actually a quicker way to do this, is that you can actually bring up a lot of this information and you can use it very quickly. Now, what I've done here is I've brought up the Aussie dollar and I've put two vertical lines on the chart for both of our 0 dates. And what I'm attempting to do here is say, all right, well, these are two vertical areas that we could be watching. The first low from the low, that's right, fantastic, 126, there we go. So I found that working obviously in the small picture, but really what we could do is go back individually and let's take that first big time frame, which is 4443. Okay, now that time frame, if you want to know where that one came from, I've got the notes here. It's from the major bear range, so from the 89 high to the 2001 low. So it's obviously a major period in the market, and obviously that 89 top, which was on the seasonal date, and then all the way to the all-time low. Now, if we take a look at that 4443 time frame, obviously we're not expecting to get you know, 2 cycles of that in the current market. If I plonk that on the current 0 date, which is in March, and I'll just make sure I've got that set up. I'm a couple of days off there. Now, if I run back from there, 4443, you could go back here and you could argue that, you know, it's kind of a turn there. Now, if a 1% error is going to give you either the top or that bottom. Now, I'm the first to argue that that's probably not a sort of hit that's going to get you real excited. So when working with these timeframes, you've got to start to think about, well, what would be the quarters, for example. So if you started to work with a quarter of that number, you're going to get 1,111. So in working with that time frame, 1,111, still on there. If you go back, well, I'd be comfortable to say that that's a hit. We could stretch it in there early, you know, well, we're 1 day out from the low. So I'm happy to, you know, I'd be happily trading out of that low. If you go back, 50% of that time frame is 2 days off that top. Okay, so I'm happy that that's working so far. A 75% use of that number. Well, it's 1 day off what is a lower top. Now, if you did get short that top, I fancy you'd be happy with that little tradable range out of there. But would I much prefer it to be, you know, that run there in the top of 2001? Absolutely, I would, but it's not. We know that the 100% gives us a little bit of nothing. 125% of that number, well, I'm happy to call that a few days off what is the, you know, the yearly high back in 94 and 95. If you look at 150% of that number, that's a little bit more in no man's land, okay? As I said, though, if you took 1% of that number, you'd be about 10 days. Maybe about right, yeah, 1%. 10 days is going to put you very close into that low or pretty close back up towards that high. So I'm not counting that as a fantastic hit, but that's certainly you know, worthwhile. 175%, well, you're 1 day out from that top. You know, that's a pretty good use of the tool for me. So that's a big time frame, and that's certainly working in the current lining up for the March. And I'll do the same thing with July. Now, this is where you can obviously piggyback your work. Once you've got one set up for your 0 dates, you can just keep piggybacking the work. Now, 25% of that time frame, not a great hit. 50% of that time frame is obviously a lot more attractive. Okay, 75% of that time frame, we're very close to a top, not a major top. And it's interesting that, you know, in that period of in that cycle of the market, and here's where my experience sort of comes in, is that, yeah, you might have called that top, but I can tell you you'd be much happier calling the August top or the April bottom or the January top. So whilst that's a top, and you could claim that, yeah, you got a tradable turn out of it, what I'm suggesting to you is that July may not be the best of the tradable turns, and that's where March might give us a better tradable turn, even though July ends up being a turning point. What are we up to? That's how many revolutions? Is that 100%? No, I can't count. 1, 2, 3, 4, 125%, 150%, 175%. So I think you'd have to agree that the harmony, well, that's not a bad turn there. The harmony for July is probably, in my mind, just not quite as sharp. It's good, but it's not quite as sharp as what I'm seeing for the March turn. So from that perspective, you know, I'm comfortable that both dates are currently validated using that time frame, but we'll have to see, I guess, you know, how we're going to line up July a little bit further down. July a little bit further down. So we've got a variety of other time frames. As I said, 2861, Now, I'm not going to do all of these one by one for you, only because it ends up being a long and tiring process for everybody. If I plump 2861 on our 0 date, I get nothing because I haven't moved it forward. All right, oops, wrong one. There we go, move that. Right, there we go, we've got a few revolutions there, or a few cycles that we can play with. All right, so I'm going to do my best to use the right 0 date here. So I don't want to I've got to get in and check to see that it is close enough. I've picked the 22nd of March because it's a Monday. Obviously, I'd be looking at the Friday as well, but it can't be the 20th or the 21st because the markets aren't obviously open. Now, 2861, we're about a week out from that top. I'm happy to call that a hit. And if I keep going backwards, well, we're a little bit in no man's land there, so I'm probably going to call that just a neutral, a nothing. Nothing that's going to support my view. Now, if I keep breaking down these numbers, well, 716 days is going to be a quarter of that time frame. So I can go in quickly here, just change it to 716 days. And in doing so, let's get it tuned up on the 22nd. All right, well, not a great use of 25%. So it's kind of, you know, a week or two out from the low. That's a bit stretching the friendship. Not a great turn there, but it is a swing bottom. A little bit of a swing top there. Once again, though, not fantastic there. A little bit of a bottom there, not fantastic. Good turn there, but still not giving me major stuff. So this time frame probably didn't present as much harmony as it did for the as the previous large time frame did. Okay, so I can sort of switch that forward just to my July date, and I picked the 10th of July just as a reference date. You know, obviously we saw a lot of 10th of Julys. If we talk purely birth of the contract stuff, you're probably going to find if I ran it off the birth of the contract, 716 days comes off the all-time high. So to me, that's good confirmation that this time frame is obviously not bad. When I run it off the July date, very close to a top there. There's another top, not so much a bottom there. Bit of no man's land there. Very close to a low there. Small top there. Close to a low there. I haven't got another one running out, so I'm going to stretch that backwards. So I need to run it the complete length of the birth of the contract, or from my coverage of the market, I should say. If I go back to this area of the market, we go very close to getting into that area, which is the 89 top, which obviously came in right on the. No, it didn't. I was about to tell you fibs. I kept thinking it was a September seasonal date, but it's not. So very close to our low in December, very close to that top there. So what we've got here is we've got a couple of, you know, one time frame that seems to be working better off July, one time frame that seems to be working better off the March, and that's sometimes how you're going to find these. Now, as I said, I'm not going to continue to go through all of those ad infinitum. One of the things you can do is use the calendar bar count tool, and what we can do is obviously set that up in such a way that we could put in all of these major time frames that we're looking for. The problem is it won't. You can set it up to do the quarters. I tend to use the time cycle analysis tool to do that. But if we wanted to run this with all of our major time frames on there, and this will get all of them on one tool so you guys can jot the numbers down. Your job will be to find where these dates come from, but they're all major cycles. They're all major bullish or bearish ranges. They shouldn't be too difficult to follow or to find their rationale. You guys should have the skill set to be able to find where these numbers came from. It's just about pulling apart a chart. I do thank the guys who found all these numbers, and they certainly helped me validate my counts that were in the market. It's nice to have someone backing up your work. It's kind of like having David's books on the share price index and Gann's books on wheat and those sorts of markets. I'm waiting for Gann to write his bestseller on oil. When that comes out, I'll really be able to work out, I guess, a whole lot more about what I should be doing. So really what I've done here is I'm just running back using the calendar bar count tool. I'm just using this as basically a ruler. So as you can see, we've got all the different time frames. The challenge here is probably thickening up some of those lines, which I won't go in and do at this stage. You could go in and obviously just make all of those. I will do it just to help us see what we're looking at, because we're going to try and approximate as much of our work here as we can. Now, I'm not saying that these are the time frames to live by. I won't default that, because then that will mean that I have those numbers forever. Trying to stretch that out, but it won't let me. Yeah. So I'm not saying these numbers are the be all and end all. I'm just saying these are numbers that the market has given us, and so it would be obvious for us to obviously use those in a confirmation sense. So Using the 22nd of March, just dragging that down. Really what I'm going to go back through and do here is just keep an eye on the fact of what's our day counts telling us. So if we go back to 104 days, we don't get much. We do get 126 days. Now, that 126 days is obviously a time frame that's been working in the recent market. I'll quickly sort of just touch on that one because I think that's an important one. Because I'm now using some of the small cycles to lock in with some of the bigger cycles that are working. So we know that we had a strong low here in March of this year. It ran out 126 days and gave us, about that July low. It ran out another 126 days approximately into our top. And if we take a look at that sort of going backwards from our July date as well, we tend to get a little bit of harmony there. But if you're running back 126 days, you'll find that, you do get a little bit to work with. No worries, Des. It's not my great idea. I pinched it off somebody else. So I think Sinan came up with that idea. I'm hardly the innovator. All right, so we know that the 385-day time frame, just checking my notes here, is the most recent bull run. So that obviously works in line with the fact that, 385 days from bottom to top. If we then add 385 from our little March low here, we get obviously the March seasonal date. So all of these things seem to be working quite well. 489, 749. So all of these, I guess, gave me a view that we had some plausible changes in trend. And I guess where the real strength in a lot of these came was that we were using, particularly with the bigger numbers, the 100% multiples weren't always the best of our multiples, but if you go in and use, for example, the 125% or 50% or 75%, you start to get some greater conviction in those numbers. But for me, we're in a situation where, 1,052, even for our July date, we get a few things rolling for us. So that's one quick way to be able to go in and bring together that ready reckoner of information and start to get us working in the right place. So coming back to you guys, I'll just have a drink. All right, so in using that information, we're now presented with a situation where it's not what I consider the best of harmonies. Okay, so I've seen better uses of a lot of timeframes all lining up, but what I'd say is that there's enough for me, based upon master time cycles, based upon the small picture, which I'm going to take you through now, and based upon the big picture, we're in a situation where I think March has definitely some merit. But the other thing I'm going to sort of drag together at the last bit will be things like time by degrees. But watching the smaller picture and watching this market lock in together, I'm definitely comfortable that March will be definitely a strong area to be watching in this market. Now, what I tend to do is I tend to work in markets, and I've noticed oil's done this for many years, is that sometimes it'll work really well based upon the heartbeat of the seasonal dates. The other thing is to say that sometimes it's not working on seasonal dates, but certainly to know what they are and to be watching them is really important. Now, if the market locks into a heartbeat where it starts to actually produce changes on seasonal dates, you'd be sort of, yep, I saw your work on the square of 126, Lois, and I'll get to that as well. But what I'd say to you is that you're sort of mad not to be using seasonal dates as a guide if the market is sort of resonating in that sort of area. So we know that when we look at the Aussie dollar and many of our markets, we saw great turns around about the seasonal dates, okay, particularly in December. So what you've got here is, if I get my crosshair tool, you've got a turn there on the 23rd of December. Happy to call that a seasonal date. Market sort of ran into, the 14th of January, which isn't a seasonal date. But the current low in the market is the 5th of February. So you've got seasonal date into seasonal date. So what you've got is you've got bottom, and now we're talking about, say, the 22nd of March as being a bottom. Now, I don't want to get into the time by degrees bit just yet, but that being said, you're starting to see bottom, potentially, seasonal date in March, which is not that one. I don't know what that is. Oh, that's my calendar bar count. There we go. We'll get rid of that. So you're starting to see, bottom, potentially now for a bottom. Now, that being said, we also got some work from people who are saying around early August. Well, once again, if you get a turn in February, and everyone's happy to say that that's at this stage is shaping up as a pretty good turn. If I throw out 180 degrees from there, well, that's going to give me my seasonal date, which is the 8th of August. Okay, so for you guys who came up with the 8th of August, you'd be far more comfortable the 8th of August has got merit if you saw turns on the 23rd of December, the 5th of March, and say the 22nd of March. You'd be far more confident about an August event if that was the case. All right, so I'm going to give you another quick little chart because obviously one of the things Des mentioned was doing a little bit of balancing time work. So this is on a bit of a smaller range. Okay, so what I've done here is I haven't used some of these true bottoms. Okay, so here's that relationship where we talk about the market really, you could argue, made its physical bottom down here, but really where the market got going from in terms of where this market started to move from, I'd argue that that rectangle probably represents a stronger reference date. So that reference date, as far as the market moving, is the 2nd of March. Now, if we start using that as an anchor point and we start balancing time, so I'm using, that as my reference point, and then I'm starting to use the top, which is obviously the, not the all-time high, but the January top. And then I'm also using this low here into that January top. What you'll find is that you've got time frames. One is 259 days. So that's one of our, a smaller time frame. So using that time frame from there to there and taking 50% of it gives me the 25th of March to watch. Okay, so that's 130 days, which is obviously half that time frame. So I'm balancing time using a 50% point. Now, then gives us a 2nd of August to watch. Okay, but we'll see what happens in March 1st. So that's one balancing time reference that I'll give you, and the other one here was to use that 126-day time frame. Now we know that that's been working pretty well in this market, so there's that 126-day time frame. If you balance that out, so if you go bottom, top, and then balance that out, you get the 22nd of March. Okay, so that's smack bang on our seasonal date. Okay, and right on the area that we're watching. So we've got some balancing time coming in, and I also pulled apart just this little range here. So the third of the reference points for the balancing time, I sort of used that low there, which was the seasonal date low. Now, in pulling that apart, it's an 81-day range. Okay, so a quarter of 81. Actually, I told you a lie. I'm using that low there. So from the 16th of the 11th down to the 5th of February, that ends up being an 81-day time frame. And if you take 50% of that time frame, it's going to give you the 17th of March. Okay, so I'm now balancing time from top to bottom and then projecting out 50%. Not quite our 22nd, but look, 17th of March is getting me in the ballpark. So as you can see, I've got 3 balancing time scenarios that are all sort of lining up in the week leading into our seasonal date. So you've got one past the seasonal date, one right on, that's a Monday, that's a Wednesday, that'd be the Wednesday of the previous week. All right, so that's kind of the little balancing time work that I think is also shaping up to give you some things to watch. You kind of get end of July if you're going to take on that 126-day time frame again, and we didn't get a 10th of July date using those other time frames. But that's not too absolutely times clustering, as Robert's pointed out. So there's some balancing time work to add on top of what we've already done. What could we take a look at now as far as some work, as far as Des is giving me some other stuff to look at. 20th of the 11th to the 3rd of the 6th, 150% of 195. Okay, let me just get that set up. You guys can have a think about what else we could be watching for or looking as far as techniques are concerned. So I'm just going to get that set up. Des is giving me all the good work, so I can just push the tool on there and just say, all right, 20th of the 11th, 08. And 3rd of the 6th, 09. And we're looking at 50%. There we go. Moved it, so 20th of the 11th, 3rd of the 6th. All right, so that there is giving us, 150% of that time frame. So from there to there, okay, I'm with you there. So from bottom to top. So from that bottom to that top, 150% of that time frame gives us the 22nd of March. So for me, that's absolutely the another added piece of confirmation that we're starting to look in the right place. So thanks for that, Des. I missed that one. So well done to you. So everyone else is time, price, highs, lows, ranges, squares of highs, lows, and ranges. Now, once again, a very time-intensive process to bring out all of this information, and certainly not one that I'm going to bother you guys with, with the absolute, calculations for every single turn. I'm just trying to find some of the work that I've done here. I'm trying to see where I've got some clusters around there. I did get some early July stuff, squaring some highs, and trying to look where my March stuff is. 13th of March, yeah. Once again, I didn't get a huge amount of dates that gave me specifically the seasonal date. That didn't bother me though. I wasn't overly fussed by that. But what I'd say to you guys is that if it's your fancy, whether or not I believe that you can put together good solid forecasts without relying on squaring highs, lows, and ranges as a guide. What I would say to you though is that it is important to have those things lining up for you if they are obvious and they're pertinent to. But particularly with point sizes, there was a lot of you done some work in adjusting point sizes and things like that. When you do that, though, you've got to know this market intimately well, and you really need to pull apart each of the individual uses of the technique. I haven't done that. I'm hand on heart. Apologies, I haven't broken all of that information down to the nth degree. I've done some cursory work, I guess, on squaring highs, lows, and ranges. I was comfortable that there was some backup, but I wasn't necessarily relying on it completely. That would be an area that I'd encourage you guys to do some work on, because it really only comes down to doing that work that makes you feel comfortable with it. But I'm just scrolling through, and there's nothing that I really want to share with you on that level that's going to make all the difference as far as whether this forecast is going to come together or not. There's nothing classic in a textbook sense that that really lines up for as being overly critical to this point in the juncture. I'm not saying you shouldn't do it. I would say that it's an area that most of us tend to skim on, and if you are going to skim in an area, I'd say that this one's probably going to be the one that hurts you the least. So I'm giving you, not permission, but I'm giving you a way out if that's the case. Let's get my eyes taken care of so I can see what I'm doing. All right, so next cab off the rank. So thank you for making sure that we got that on the list. What else could we take a look at as far as the the techniques that are available to us? What would be your guide to tackling next? Yep, squares. Okay, so squares of 144, 168, 52 from the all-time low, all-time high, those sorts of things. Fantastic. All-time low, highs and lows squares we can start to look at. This is where we get a situation where we can start to build a, let's get up another chart, a focus on where we could be come time frames. Now, I'll just put up those horizontal lines again, vertical lines, sorry, the other horizontal. I've been doing that for 10 years. I cannot get vertical lines and horizontal lines clear in my head. If you've done classes with me forever, you'll know that I always make that same mistake constantly. All right, so we'll call it the 9th, because obviously we can't do the 10th, which is a Saturday. All right, so I'll make sure that's locked. All right, so as I've discussed, we want to try and make the use of squares and boxes practical without overwhelming us. So a couple of things that we could do is start out by tackling the all-time low, which we know is 47.74. And nice and simply, we'll pick on, say, square of 52 to start out with. We know that 0.4774 is the starting point. We can call it weeks. Now, we're going to need probably quite a few columns, quite a few rows. Still don't have enough. And yes, I do. I just don't have enough columns or rows. There we go. All right, so from last week, I haven't, as you can see there, 52 ticks is pretty tight on the old movement. So in other words, we could probably argue that we'd be better mucking around with the point sizes here. It's not going to affect our time, remembering that we're just looking at this in the use of time frames at the moment. And what we've got is a square of 52. I'm doing a week square, not 52 days. I'm doing a 52-week square. So what I might do is get rid of the diagonals, and I'll put the vertical lines on, and I'll probably just knock out 1 0 here. And now what I'm looking at is purely a time tool. So isn't that interesting that the December low was I can tell you it's a multiple of 3/4. So X amount of squares and 3/4 gave you there. And if we go forward and take a look at our horizontal lines or vertical lines, we don't have a hit. We've lost a line. Or is it covered? That would be interesting if it was covered, wouldn't it? Well, I think what we've been able to do is cover our line. There you go. So we do have a multiple. There we go. We've got our blue line and our orange line there. So in other words, we've got multiples of 52 lining up with that. So that would mean that the oh, there we have it. So we do have an alignment of the square of 52 on our date. That's fantastic. So that gives us some broader basis to work from. Now, using this as a square of 52, remember this is now, 520 ticks because I'm using multiples of 10. Here's where I start to, think about, doing that work that we did the other time whereby, we sort of threw some circles on the chart, and really what we're doing now is just waiting to see if we can get some clusters. Okay, so there's, full squares of 52. So I'll delete that there now. So now what we've got is on our March line, we've got 3 little squares that we can take a look at. So what we're now looking is trying to bring some price work in at the same time that we're doing time. Let's do a 144 square. Right screen, there we go, 144 square. All right, so, okay, we probably don't have enough to cover. Oh, yeah, we do. There we go. So I got to turn off my lines again. Using this as a time tool, not as a price tool so much at this stage, vertical lines. Okay, so just really trying to see whether we get an alignment there. Now, is that another one that's lined up? To me, it looks like it. So you've got 1, 2, 3, 4. So you've got the square of 144 lines up with a 50% multiple and a 75% multiple of that time frame. So doing the mathematics, I can tell you, because I can count the heavy lines, I can say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Oh, I've buggered it up. There we go. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23 and 3/4 and 24.5 multiples of 144 from the birth of from the all-time low give us our 0 dates. Okay, so that's looking pretty good again, and obviously we could pencil in some price action if necessary. We don't want to zoom in too far because that means well, you got 144 ticks. That's pretty close. You're on that bottom edge of that circle there, and you're on that top edge of that circle there. So we could definitely start to say we've got some harmony there. We could continue to do that for the square of 168. All right, but you're starting to get the drift here, and we're definitely getting some alignments there that would make me feel, that we're looking definitely in the right spot. So 0.4774, 2nd of April. All right, so we'll take a look at, there we go, 168's covering it again. And the July date's not covered. So 144 had both dates covered, I think. 52 had our March date covered, and 168 also has our March date covered. So if I pop back out, would you be comfortable that from the all-time low that we're looking relatively sharp as far as multiples of 52, multiples of 144, multiples of 168? That's really firmed up our March date as being an area to watch. Everybody happy with that that little piece of work over the top? Yep, fantastic. Nice. Yep, everyone's happy with that, which is good. Good stuff. All right. So we could repeat the same work from the top. The other thing that I think would be worthwhile doing is just taking a look at the square of 4774, and we can do that without having to set up a square. You can do it as a square because we should do it as a square, I should say. You're going to need to use a preset Gann square though. Now we're going to do you'll need to do the all-time highs as well. All right, so I'll leave that work for you guys. But at this stage, I'm comfortable that we're in the right spot. We're backing up the work that we've done. 4774. Now, when using this particular square, we didn't end up coming up with anything that was lining up because that's obviously a pretty large time frame. So we've got 25%, 50%, 75%, and 100%. So interesting though that the low square did pretty much nail that high. So in other words, it's the market didn't get much above that, and we could then put on the diagonals, etc. And you could put on a lot of the extra lines if you are now starting to want to see some prices to be watching, and we could see whether or not we're getting any alignment on any of those circles. So I'd argue that probably that area there, which is on that green line, I'd start maybe just drag that down a little bit because that's going to give me an area to watch. Maybe we could just expand that out. So I'm starting to get a few that line up in there. Nothing sitting on the diagonals as such, so it'd be great if the market came back and, you know, the diagonal, that major blue diagonal ran through, but it's not. So we're just looking now at percentages of the, that's 25.50, that'd be 75% of the all-time low as a price target. So these are just extra ways that we can start to add some work. You know, it's worthwhile watching to see how well this has worked in the past, because, you know, it's no point saying I'll watch it if we haven't seen some action prior. It's not bad. I've certainly seen better. I'll throw something in just to keep your minds thinking at the moment. We did this a little bit earlier, but just to start tracking back. You know, that's 125% starting to get into that area there. And if we're using this maybe as a first range out, let's say the market can go a little bit higher. Let's say it goes higher for the next few days and we see a turn there. That 100% point could well come in. So that's about 83.9, somewhere around that area there. You know, but we'll have to see where this market does turn. But I'll definitely be watching this as a guide into that date if the market does give us a top in the next few days. All right, so what have we covered? We've covered all of that. So we've done squares. There's some box work that is pertinent, but I might leave that for just a moment. I'll come back and touch on that. We've done squares of highs, lows, ranges. We've done timeframes from squares. We didn't do birth of the contract. We didn't do all-time high, but what I'll tell you is the work there is a bit hit and miss, but there are some things that will support our view. But at this stage, I'm really just looking for things to continue to back up what we're doing. There's a lot of work that we can prove that isn't supporting it, but really we're just wanting to, I guess, firm up the things that are working for us. All right, so there was that square that Lois was talking about, which is the 126 square. We could apply that in the market. I'll leave you guys to have a play around with that. One thing I guess we could take a look at now is to just get a firmer view on, for example, where time by degrees has been working. Keep in mind that the birth of the contract was the 13th of January 1987. So if I just use my time by degrees tool and I use 13th of January in 2010, so I'm just going to sort of step it forward to where we are, 180 degrees from. Well, there you go. You've got birth of the contract. So you do actually have. The top was on the 14th. The birth of the contract was the 13th. Okay, so you've got birth of the contract working there. If you go 90 degrees, you're not going to, well, 60 degrees is going to give you the 30th of March. 12th of April's 90 degrees. 180 degrees is going to be about the 15th of July. So that's probably a little bit later than some of the areas, but I certainly would be watching that if it turns on the 15th of July, I'll be quite comfortable with that. So that sort of firms up our seasonal, or sorry, our July stuff. One thing that I'm watching here in particular is the seasonal dates working off that March low. So we've seen in recent times, you know, 45 degrees back gives you the February bottom, 90 degrees back gives you the December bottom, 180 degrees, stretching the friendship a little bit there. 135 wasn't much. That's not far off 120, that top, but it's not quite. 240 wasn't a hit. 270 was a low, but not a fantastic low. 360 was nothing. 450, a couple of days out from that top. 540 is a very good hit. I always like 540. That's 360 plus 180. And 720 is giving us a turn from a couple of years ago. So oil's one of these markets a couple of years prior, always watch what it's done. So we saw a turn on the 17th of March, 20th of March, and the market started moving away after that, the March seasonal date. So for me, once again, there's definitely some harmony there working as far as the seasonal dates are concerned. But the fact that we've got them working so well, you know, December bottom, February bottom, you know, that gives me confidence that we're looking in the right spot for maybe a March bottom. So if I run back off our 9th of July date, which is the Friday, you know, we do have 180 would be nice if we got a good hit. I'd be a lot firmer on July if we get a 90-degree turn, say the 6th of April. That would really firm up for me where we're going to be watching come July. But I'd want to see some harmonies lining up and rolling into that. Okay. All right. So time by degrees, we've applied that. We've taken a look at the balancing time. We've had a look at the time counts there. One of the other things that I'll quickly share with you is that I had a look at some of the big picture work. For example, you know, David says to watch, for example, you know, 45 days. I also watch for 45 weeks, 45 months, 45 years. So that's really sort of an extension of the time cycle analysis work. About 45 weeks back gives you the all-time, or sorry, a few weeks out from the all-time top. 90 weeks back actually gives you that August bottom. So that was encouraging for me. There's a few other turns in there that gets you thinking. That October turn back in 06. So there's 45 weeks. Taking a look at 45 months. That was also, oops, I should probably do that off the July as well. So 45 weeks off July. So if you go 45 weeks, you basically get the bottom, all right, and then 45, sorry, 45's there. 90 weeks gives you the bottom. 180 weeks, sorry, 90, 130, no, 180 plus 45, 225 gives you that low. And there's a few other little turning points in there to have a play around with that I get you guys to have a look at, because it does give you some further confidence that you might be looking in the right spot. 45 months. So I'm just doing, for example, 90 weeks, 90 months. 45 months back gives you a pretty strong low. 90 gave you a pretty strong low. So these are all sort of, just extra confirmation indicators on a very big picture that would get me sort of quite happy that things are looking okay. And we can keep going back further, and we get other changes in trend or other turns on a month as well that look okay. Let's have a look at July. 45 months back gives you pretty much those lows there. So for me, that March and July dates, going back all the way, there's a good strong low there back in 95, and then obviously going back and giving us that top there. So that same thing can be extended not just for the numbers that we know to look for. I actually had to play around with that 126 days and then had a look at 126 weeks. And so that kind of, gave me a few other things to keep me interested in, just having a few things to look at. 126 weeks, 126 months, and some of the other time frames as well. I'm trying to remember which one. It might have been 126 months. No. Yeah, that's not bad there, but it's not the one I'm thinking about. Twice 126 does give you a pretty strong low there off July, but just really looking to firm up. It's another one I'm thinking about. They're not the ones that I'm thinking about. Anyway, so let me check my notes. All right, so oops, we don't want profit source, knowledge base. There we go. So in a very roundabout kind of way, what we've been able to do is firm up based upon master time cycles, locking in with seasonal dates. We've done some balancing time. We've done some time frames from squares. We could now start to lay some price support over this market. We could do some work on boxes, but really you're going to find that that's just confirmation of what we're looking for in this market. So I guess to give you some stronger stuff on price, things like a highs resistance card, things like a ranges resistance card are all going to be important parts to play in this market. So taking the all-time high, running down to the low, so 97.70 is the high, and the low back here escapes me. So it's 59.75. So what I'd be looking to do is interesting that the 50% point sits right on the where our little lines have been hovering. So it could be worthwhile putting in things like the 62.5% point. Putting in the retracement levels there. 3/4, so 66.6, and you could mark in some circles there. Just we can see where they line up. I think that 50% point would be an absolute cracking target to get down to if the market was strong enough to get down to there. Wrong tool. So now what we're trying to do is potentially overlap. That's going to be about 200% of that first range out added to that top. So if I then sort of drag that down to the current environment, well, it's about 150%. Let's argue, the market does push up a little bit. We're starting to get some correlation there. You could go and, it's around about 78 to 80 cents. Is probably 79 to 80 cents, I should say, could be a good area to be watching. So this is obviously just bringing in some price stuff. That's going to, I said we do a highs resistance card, so the all-time highs resistance card, 97.70, 0. So the 87.5% point could be useful in this particular instance. If I find that one, there we go. So we could, oops. So we could see, is that lining up yet? We've also, lines up with that old bottom. That's one of our little target areas. Okay, so that's something that we can obviously continue to go. 252, sorry, Lars, just got your comment there. 252 months from the first high after the birth of the contract. 252, okay, 126, yep. Happy with that. So that's all some extra work there from just using those big time frames. Obviously, using the major bear market low to the bull market top. If we go in here as well, you'll see that 62.5% of that price also lines up directly with our little circle. So let's call it, let's average that out. Let's call it sort of 79 cents. All right, so we're seeing quite a few things lining up in that area there. One of the things that I'd show you, if you've got access to this tool, you can always go and check where it sits on the square of 9, 79 cents. So I know it's not exactly a definitive price target, but you could go and say, all right, well, 79 cents, well, 78.77 is going to sit right on the cross. Okay, so 78.77 would be a good price to watch, and even if it got out to sit in the corner there, 79.21. So any of those prices would be ones that I'd be comfortably watching, and obviously confirming those on the day. That's just using square of 9 for you guys who are familiar with that. 1 second, just as my phone rings in the background. All right, what we haven't used yet is a Lowe's resistance card. So we could put together a couple of Lowe's resistance cards. Actually, we could use the low here in 2008. So we could see where that sits. That's 59.75. So I could make a preset Gann square 59.75. Disappears. There we go. All right, so what I'm really looking for is those green lines to, penetrate through my circles, which we don't have there off that low there. Let's try the all-time low. And there we have again a little target in there. I think it's where we got that first one from. But, there's a few little areas that you could be watching. Now, you could obviously be watching things like speed angles as they run down through here. You could, take the initial run of your speed angle. To the top there. Maybe we're going to see this market run down and run into our little area there. So that would be a replication. If the market ended up making a halt on that area there around 79 cents, that would argue that the speed angle's kind of working in that regard. I'm trying to think what other price-based mechanics I need to give you at this stage. So you've done highs, lows, ranges, resistance cards. There's small little tops and bottoms you can play around with. One thing that we haven't done is we haven't used any angles. So keeping it simple with our angles, you could start to play around with those and start to see where they're going to intersect, not only on a calendar day but also on a trading day confrontation. I can't think of any that are particularly hitting my price targets except that one. So let's get that tuned up. So 88.48. On the 8th of February. That's the low. Try 88.80. All right, so let's be interested to see whether that intersects. Oh, there you go. The 8x1 off the top hits right into that circle. Wrong one. The 1x8. Sorry. There we go. So Gann fan from the all-time high. Darren's suggesting, which I'll give that a crack. That was going to be my next. Pretty happy with that angle. Oh, look at that. That's terrible. 97.70 is that top. I think it was a blue line. I'll turn off all the lines that aren't blue. Oh, and then I hit the symbol tree button. Oh, turned all the wrong ones off. I swore it was it's the blue line from there. right, so above the red. All right, so it's a 3x1 off the top, nails right into that area there as well. So there we go. So, you know, we could also play around with some more angles. We've done that low. We could certainly play around with the all-time low. Let's see whether we're getting an intersection. Well, we're pretty close to the 1x1 off that low, but not quite. All right, so we can't claim that one. And you could play around with some of the other tops and some of the other bottoms as well. But, you know, the fact that it's sort of executing through there, that gives me some greater confidence that we're, you know, certainly looking in the right spot. So, all right, so let me gather my thoughts and see where you guys are up to and make sure you're comfortable. So, a 0 from the all-time low, Des is absolutely correct. A 0 from the all-time high we could do as well. Probably won't intersect though. We could maybe play around with point sizes. 2nd of April, 97. Not 2001, try that. Not quite. I'm not seeing a hit through there, whether I go calendar or trading. No, we're not getting that, but that's fine. Good thinking. One that I had neglected to add. And we could play around with the all-time high, which is the 15th of the 7th. And we'll just knock 1 point out of that. Close, but no cigar. So, unfortunately, we've given it a crack. But we certainly have 0 off the all-time high into one of our other circles, but not the one that we've developed a little bit of a liking for. All right, so plenty for you guys to gain, I fancy. There's certainly things that we haven't used every single tool in the shed, but for my mind, sometimes less is more in this situation. I think we've done enough work that's got us pointing in a particular direction. If we're adding things to that, I'm comfortable, but considering it's a difficult market to get zeros from and those sorts of things and work backwards from, I was kind of comfortable that that was probably about enough work. For me, March, if it comes together, you know, we're in a real situation where, you know, July is obviously going to look quite sharp and, you know, we just got to wait and see come, you know, the next few weeks, even though it's only a short forecast into the future. So David said the speed angle from the 89 high to the 01 low, it's at 78.02. All right, well, I'll leave you guys to do that work. I'll definitely play around with that later, David. Thank you for sharing that. I'll take a note of that. So I've got that for later. All right, so I'll get that in there in just a second. All right, so I think we've gone through the host of the tools. Not as clean as I'd like tonight, guys. I am a little bit below par, and I sort of mentioned that when I started. These my thoughts are not as clear as they usually are with regards to my thought process, but I've sort of talked around a few things, but hopefully it's given you a little bit of insight. I just want to throw it back to you guys now as far as questions, comments. You know, are you happy with the process, so to speak? And you know, obviously happy with the you know, we'll take a look and see what these dates provide, and you know, time will tell, you know, whether we're sharp on a couple of markets. But yeah, look, Robert, I probably, you know, it's a great question with adjusting point sizes. In oil, I'm comfortable to do it only because it's a market that I'm really familiar with. But because the Aussie dollar is something that's pretty new, I'd probably try and stay true to the method and until I got a bit more experience in this market. So I wouldn't be trying to change too many point sizes too early. But you know, generally by a decimal one way or the other. But I don't try and change too many more other than that. All right, so always lots to take in, Elizabeth. If there wasn't enough to take in, you'd be worried. Yeah, we'll just have to wait and see, Lois. Absolutely. So looking forward. Yeah, absolutely. I think it could be a date to watch on a lot of markets. It's always been kind on oil, so there's no reason that there's no reason that we can't see a lot of markets turn there. That's good, Linda. It was a little bit more doing tonight rather than telling, which I think is good. It's a bit rawer tonight, so you guys get to see, I guess, the bit more of the process, which is always important. I'm glad you're happy, Wayne. That's good stuff. But I guess from that perspective, it's more a case of handing it back to you guys and taking what you need, and then I'll do a wrap up and let you know what's going to happen from here. But otherwise, looking at the clock, we've had a good couple of hours, so I'd suggest one thing I'd say is that this session's probably going to leave you with more questions rather than answers. But I think in that way, it's meant to be that way. Like it's not meant to be the 12 sessions we've spent together. Really now is about you picking up the process and applying it going forward. It's it's more of a case of now starting to hopefully open more doors for you and throw it back into your court to do the work. There's plenty of you who are doing very good work. It's just now turning that into process and getting clarity with it and getting confidence with it, being able to see the woods from the trees, as they say, and not getting lost in the process. How do you get not lost in the process? You've got to do the process lots and lots and lots and lots of times, and then it becomes clearer going forward, and then each market each time becomes a little bit easier. But yeah, and then obviously there's the being able to trade it thing as well. So that's tradecraft, which is obviously the whole other extension of what we're talking about. So all we've been able to do is come up with a few dates, which is let's face it, coming up with the dates is not hard. Anyone can pick a date in a year. Let's see whether it comes true, and then let's see whether or not we can actually get a tradable signal to get in, and then actually do something with it. So. But look, there'll definitely be 2 dates that I'll be keen to be watching this year, and I'd rather hope you've got them penciled in, and there's 2 areas for us to be watching, and by all means do something about it, and hopefully make a few bob, and if it all comes together, hopefully you're on top of it to pull it apart. But what I want to do is, I guess, hand it to any questions that you might have, and if your heads are just full, that's fine. Mine is a bit too. Must admit, I've developed a cranking headache in our 2 hours together. But my pleasure, Elizabeth. Not quite sure with that, Graham. Always the guys in the office are probably the best people to handle that. I can't tell you offhand. I don't watch the recording, so I have, but I don't always go in and watch them because obviously, not the process I'm following. So I'd have a chat to the guys in the office. I can't give you an answer is probably the easy thing. Thanks, Des. My pleasure. Thank you, Lynn. Thanks, Key. Thanks, Graham. All right, so I've had a question which makes a lot of sense. So the question's going to lie is obviously our time together hasn't necessarily, well, it's officially ended as far as our sessions are concerned. A couple of things, I guess I'll do a little bit of a wrap up for everybody so we know what's going forward. A couple of things is you'll all get probably a survey that will get sent out automated to get your views and your thoughts on how you found, on how you found the sessions together. And obviously the first comment will be it took too long. I've already got that one answered. But obviously if you guys can give some positive feedback, I guess you guys being the first group, I'll come to that question in a second, Key. You guys being the first group through, obviously your experiences and the stories you guys can tell, act as a good guide for anybody who's going to follow in your footsteps. So there could be an opportunity to, if you feel comfortable, to get some sort of testimonial out of you if you've had a positive experience. So keep that in the back of your mind. We want to do something there, and if you're comfortable, we'd love to do that. Second thing is there will be that bonus session, and what I'm going to do is we'll make it just a straight Q&A session, and I'll throw a few other bits and pieces in. I'm probably going to bring both groups together for that. So rather than doing 2 bonus sessions for each group, I'll just do 1. I haven't yet arranged the date. I know I was talking weekends, but I'm actually thinking it might be a night through the week because I know weekends are obviously pretty tough with family and those sorts of things. So keep that in the back of your mind that I'm going to go in and arrange that bonus session later this week from the office, so you'll get some guidance from there. Key asked me a question, will I continue to post on the forum? Yep, absolutely. I told you guys if you continue to use it, then you'll get the benefit of it. So what I'll do is I'll make sure that that's going to stay open and you guys can use that. I'm still yet to follow up on extending the sessions for everybody. I've asked the question, I haven't got an answer back, but as far as extending the recordings, that's still something that's in the process, okay, if that makes sense. So I've got to just get all of that cleared through the people who handle that in the office. One other plug I'll give is that you probably received confirmation or an email or a text message or something. I'm doing an online forecasting session on oil, which is on the 14th of March, okay, so it's a Sunday. We're trialing Sundays as opposed to Saturdays, just to see, because some people can't do Saturdays, etc. So, yep, so a number of you already booked in, which is great, but that'll be the opportunity to see how I pull apart my market, which is, obviously, if you've never done a Gann mastery with me or seen how I forecast oil, that might be a good session to also do, and you'll get the recordings for that and all of those sorts of things. So that could be something that I'd encourage you to get along to. So you can, 4 sessions, it'll be a whole day, and I'm pretty confident the stuff I've got working on oil is looking pretty good. So that would be something I'd encourage you to get to, just to continue to hone or to fine tune this process. But really simply, you guys, adhere to me. Obviously, the first groups that do anything new for me are always, important people. So I'll always remember your participation and always remember your faces and your names and all those sorts of things. So I appreciate your steadfastness and your commitment and your perseverance during what's probably been the most challenging 6 months of my life in terms of external factors. So you guys have hung tough. Obviously, we got momentum and then we dropped the ball, and obviously because we had breaks, etc. And I found that challenging, and I know you guys did too. But you handled it with aplomb, and you didn't complain and get all upset, which I do personally appreciate, because I know it could have been easy to go down that road. So from me to you, I just want to say thank you, and obviously I'll be here to support you guys in any way that I can. Whatever you need my support, I'll always make that available to you guys, whether it's a phone call to the office, I'll always give you a call back. May not be in 5 minutes, whether it's an email, whether it's something on the discussion boards. You guys are dear to me, and I'll do my best to take care of you. So from that perspective, it's a big thank you from me. I'd say, look, guys, it's been a great 12 sessions over 20,000 in 6 weeks. Actually, I have had a look at that article, and that was something I was out of the Your Trading Edge. I got a PDF copy sent by Darren to me, so I'm going to have a good read of it. I've had a little read of it. I know what they're doing, but I want to have a more in-depth thought about it. It actually relates to a topic that we do things at the master forecasting level, but let me have a chat or a thought process about that, and we'll do that in that bonus session, which you'll get confirmation for. Thanks, Lois. Thanks, Graham. Oh, Coach, you're too kind. Thanks, Linda. I appreciate that. Thanks, David. Debbie, thank you very much. No, we'll definitely cover trading plans, Debbie. Don't worry, that'll be in our little bonus session. I haven't forgotten about that, so that's still on my list of things to do. Thanks, Graham. Thanks, Gerald. I'm a good guy. Thank you. I'm going to go and copy that out, and I'll go and print that out for my wife, all right, and my kids, just so they know. In the bad books today. All right. Thanks, Ashley. It's been great. Thanks, Darren. And I've still got that stuff. I actually have it in a pile waiting there for me. So you and I need to catch up for a cup of coffee, and we'll exchange those bits and pieces that I need to get to. I have got them out of the storeroom though, so they're just ready to be dropped into. Thanks, Debbie. Thanks, everybody. Thanks to my colleagues who've dropped in. I also, thanks, Wayne. We'll see what comes. It's definitely going to be on. We'll see what we cover. Thanks, Des. And thanks to my colleagues that are in the room tonight. I got your emails, and I'll respond to those in just a minute. So thank you very much. All right. Just reading your question, Mark. So there are round dots between the listed angles. I've just done some maths. Just complete the angles list. Okay, Mark, no problem. No problem, that's fine. Thank you, Annie. Go and relax, yeah. That'll be something. Go and take some teeth medication. Anyway, we'll get there. All right, everybody, if there's no more questions pertaining to tonight, I'll see you all come to the bonus session, and sounds good, Darren. We'll do it then. I'll be in touch with you though. I'll drop you a mail. All right. So yeah, if there's no other questions, I will be in touch with you all regarding bonus sessions. Obviously, go back and review tonight's work, and we'll pick it up, and hopefully these dates will come in somewhere. So welcome, and thanks everybody for joining us for the a little bonus session that I agreed to sort of put together. So it's fantastic to have everybody from not only from both classes, from the Tuesday night and the Wednesday night crowd all in. So if you've seen some names that don't look familiar, that's because they were in the opposing evening that you were all in. So I guess first and foremost, welcome to the group as a whole, and obviously thanks for joining us tonight. We don't have everybody. I had a few apologies from different bits and pieces, but it's a good solid 40-odd people we have in the room tonight, so we've certainly got the bulk of our 2 nights. So I guess tonight is in many ways, it was probably about making sure that you guys felt satisfied and you had certain questions answered. So there will be an opportunity to hand it back across to you guys, and any Q&A. Now, obviously, I've had some people send some questions in privately, and there was a little bit of chatter on the board, so I picked all that up. Adrian, I know obviously I promised you a discussion on trading plans, so I put some slides together on that. But I guess probably what I wanted to do initially was to just have a bit of a chat about where both Newcrest Mining and the Aussie dollar are positioned, and obviously whether we've been able to declare victory or success in any of our forecasts, which to date obviously neither of the major dates have come in for either market. I guess we were looking for lows, generally speaking, in both markets. At the moment, I'd have to say the Aussie dollar is probably more stretching out to being a high than a low, if we're going to call it that way. But I guess I'll let the market tell the story. It could just end up being a high bottom trade. We don't know. So there's still obviously a good number of days left to go. So markets have done some crazy things in the past, and I generally don't feel the need to have to call them tops or bottoms at this stage. So just let me get a couple of things organised here. So I'm just going to pause this camera for just a second and getting a couple of things behind the scenes organised. There we go. And so I'm back to you guys now. But so simply to say that do a review on the markets, where they're up to. There was an interesting discussion. I think it was on it was either the Tuesday night or the Wednesday night board. I forget. I think it was the Tuesday night crowd. You guys had from Blake. He'd sort of posted up. He's not actually. I can't see him online tonight. So he posted a little bit of an update. So I'll go into that and just sort of hopefully some of you remember the dates that we were talking about, because there was obviously some merit in what we were talking about. So we'll have a review of that. We'll go through any questions that I've received to date, and then I guess I'll throw it across to you guys for any discussion points you'd like to have or to add. I guess before we get started, I do want to thank the people who took the time to fill in the survey that was sent out, obviously, from the office. So it was an online survey where you could click the buttons and tell us what your thoughts were. Look, obviously, there was a bit of a consistent theme. If I guess there was the problem of the time that we spent together. Most people thought having breaks was good, which was a nice thing. Actually, the next Ultimate Gann coaching program actually kicked off this week. So 2 new markets and about 20 odd new students. So I'm sort of rolling back to back into it. But obviously, we didn't plan to have it run for 6 months. But obviously, with children and teeth and operations and different bits and pieces, we end up having a fairly elongated time. But a lot of people actually found that beneficial. Some people obviously commented regarding the Adobe platform, and obviously that feedback was all taken on board. I guess like all things technology, reliability is always going to be the thing that lets you down or makes or breaks you. People did rate their experience from top of the tree as being excellent all the way down to to less than what they were expecting. And look, I'd have to say probably where my input would come is obviously we've done a lot of investigations in these areas. We're pretty good now at this online training stuff, particularly with this platform. And I'd have to say that most of those conditions generally relate to connections. And I'd have to say, unfortunately, around the country, one man's broadband is not another man's broadband, and speeds vary depending on the where you're located and all of those things. So I'd have to say that I've actually been watching some of the recordings recently. I've been going through some of the some of Matt's work with his online class as far as his FX forecasting workshop, the one that Noel did late last year. With regards to his one day, because I've got one on Sunday this week, and I've had no problem watching back recordings and those sorts of things. Now, I'm not suggesting that's anybody's fault. That's just my experience. But I'd have to say, broadly speaking, if the technology is not perfect, far from it, but it's relatively robust. And so what I'd suggest is that we take on board your feedback, and we'll do our best to resolve that. But as I said, my sort of experience has generally been around the people's connections, etc., which can be a little bit can bring in a variable that I guess we can't control, and in many cases you can't either as well. So certainly no issues there. So I guess I also wanted to comment, between the Tuesday and the Wednesday night group, everybody rated it as being a good to an excellent experience. To the point where you'd recommend it to other people, which I found obviously is one of the great encouraging things. If you'd recommend it to somebody else, you obviously had some benefit from the program. The final thing I guess I'll talk about that survey is the varying degrees, I guess, of people's returns. Some people didn't make any money off the discussions that we had, and that's fair enough. Obviously, in most of those cases, it's because they didn't trade. And some people went on to obviously had an experience that's at the other side of the end. So probably without naming names, to cherry pick a few of the best, we're talking people who were able to return tens of thousands of dollars over Newcrest Mining and the Aussie dollar in that period in time. So that to me was very encouraging, because that was really my whole aim. There was a very large percentage of people who were able to at least recoup their costs, which for me was I guess ultimately what I'd like to be is the minimum standard. But obviously if we don't trade, we can't recoup costs. But for those who did get in and have a few trades, there was generally positive experiences. Whilst some people didn't trade Newcrest Mining or the Aussie dollar, they found that the techniques that we applied, when applied to some of the markets they were watching, there was an example, someone mentioned Rio Tinto. They've been able to apply the techniques from what we talked about to Rio Tinto and been able to see good, considerable returns. I was also very happy with one person who mentioned that they did particularly well out of oil, which was fantastic. So I found the second and only other person who trades oil, so I was really excited to hear from them. And so, you know, overall, you know, I just wanted to say thank you, good positive feedback. You know, also happy for the negatives as well. It's not a case of being on the opinion that we're perfect. We're far from that. If you haven't yet filled in that survey, please take the time to do so, good, bad, or indifferent. You know, and just tell me about your experience, because you know, it's really hard for me in many ways to understand what's actually being understood or derived, etc. in a medium like this. I can't see your face. I can't see your you know, the light bulbs go on, and I certainly, you know, not watching over your shoulder as you're taking the trade. So for those people that I've met face to face who've commented on it, thank you for your positive feedback. And for those people who I haven't had a chance to have a chat to face to face, next time we do catch up face to face, please by all means come and let me know, you know, your experiences and how you found and you know, the whole program. So from that, I guess from a broad-based perspective, I'd call the program a success. You know, and considering it was sort of a bit of an innovation and a bit of a brainchild from the back of my you know, empty space up here, I kind of consider that, you know, I'm happy with the outcomes, and so therefore it's you know, sort of been a success in my mind. Hence we're continuing with that program. But as I mentioned to you at the last of our times together a couple of weeks ago, I said you guys will always be the pioneers. You guys obviously took on board the program when it had never been conducted before, so I thank you for that leap of faith. You know, over the years we've tried to release things that meet the needs of I'll get to that in just a second, Adrian. So, so the yeah, obviously the pioneers of the program. I always like to you know, remember you guys, and certainly will do going forward. So, thanks for being part of the inaugural group, and as I said, you know, thanks for the, you know, being such a great group to work with. So, as Adrian said, will the discussion boards be merged? There's a lot of progress behind the scenes going on with you know, new websites, and yeah, that's exactly what a strategist does, Graham. I heard that. I've now finally worked out what my job here is. So there you go. But yeah, look, the discussion boards, Adrian, there's actually a lot of technology changes going to hit safety in the market over the coming months as far as websites, and we're actually looking at new forum software and things like that. So at this stage, there's a little bit of a hold on making too many wholesale changes on the boards, and you know, a lot of it requires a little bit of IT support as well. So I've sort of got things listed to happen, but they've got a bit of a backlog of things that they're working on. So I'm actually in the office tomorrow, so I might follow up on that for you. I must admit, I don't have an easy answer that says yes, no, or maybe. It's probably just on a list of things to do. That being said, you know, as I said, we're moving into other areas as well. So what might come of all of that is to, you know, rather than trying to make too many changes here, we might just merge things if we move to a new platform or something. But all of those things are in the future. But I'll definitely keep that in the memory bank for later. All right. Well, for the final time, I will remind you of our financial services obligations, or license obligations. So Safety in the Market does hold what's called a financial services license, and in doing so and putting this presentation together, which should not read, I've managed to make the mistake I made in the very first couple of weeks. For some reason that says Advanced Trader Coaching. This is not the Advanced Trader Coaching. This is the Ultimate Gann Coaching. So I'll just put my arrow over there, and hopefully that'll block that out. So it wouldn't be the last session if I didn't make a few mistakes. So, you know, obviously we've discussed at length current market. We'll do so again tonight. We'll talk about our forecasts and where they sit. So obviously if you're going to make any trading decisions that are associated with, will I touch on the spike tonight? If you'd like me to, Neil, why not? So what we'll do is we'll have a chat about, you know, those sort of couple of markets. And so therefore it's not meant to be direct advice. It's obviously general advice, and you need to work out, I guess, how that impacts and influences you. So obviously you've all seen that. I'm sure you've accepted it by now. Oh, and oil. All right, Louise, that's fine. Can't give too much away because Sunday's, you know, Sunday's going to be the big day for oil. But I'll give you a bit of an update on that. I guess that being said, you know, just finishing up my little discussion on the disclaimer. If you've got any questions, please let me know. But that being said, I think you're all pretty comfortable by now. Oh, and gold, and you know, we got, you know, the Aussie dollar, the Canadian dollar, the euro, the yen, the Hang Seng, the Nikkei, the FTSE, the Nifty. You know, Rio Tinto, BHP, Commonwealth Bank. We'll just keep going. Well, why don't we just start today, and we'll just go through the whole of tonight. We should be finished by next week, and we should be ready to trade. Look, obviously Newcrest and gold go together, so I think we should have a bit of a chat about those, and I'll do the usual bits and pieces. So why don't we do a normal market review, and then we'll get into our bits and pieces, okay? So I guess I would make a mention is that I know, just looking down the list, a number of you are going to be joining me on Sunday, which I'm looking forward to. In case you're thinking maybe yes or no, or you haven't heard about it, I'll give myself a plug. I'm doing a one-day online class for oil, like Noel's done for the SPY and Matt did for currencies, or for the yen and the euro. All I'll say regarding that is, you know, without sort of trying to, you know, puff things up, there's literally only about 2 or 3 seats left. So it'll be another sold out event. Obviously, we can't fit any more people in other than the room size holds. And I don't mind telling you, it's 100 people in the Adobe platform. So so if you haven't yet got on to that and you're thinking about doing it, I'd just say, you better get organised, all right? So I'd hate you to miss out, particularly if you guys are, my special guys. But once it's gone in the sense of I can't slot you in, all right? You can actually get the recordings afterwards, but it's nice to be there live. So I was doing some work for that today, and I'll tell you that I reckon I have, yeah, I got your email, Stuart, so I was going to get in touch with you, but yeah, I don't know quite what to say to your email. I do feel for you. If I could change things, I definitely would. But that magic wand's broken this week. But you certainly you're in my thoughts. So, but yeah, as you say, it's only money. But yeah, look. So if you're thinking about doing that, I'm really confident about what I've got going for that market this year. So there might be a couple of dollars in it if we get it right. So if you're thinking about it, get stuck in. Otherwise, don't. If we get it, if I call the top or the bottom, you'll hear all about it, and you'll feel like you got missed out badly. So there you go. All right, so tonight we're going to do our review of our markets. We're going to do our trading plans discussion. I'm going to do a Q&A discussion with regards to, I've got 3 or 4 questions from people that, that have sent them in, etc. So I've got those to play on, and then I'm going to throw it back to you guys and have a little bit of open slather. Trying to keep it within I guess a broad, a pretty broad parameter. I don't want to cut anything out, but it's certainly a case of, I don't necessarily, what I don't want to do is say, okay, well, can you take a look at, every market under the sun? I guess I'd probably be interested in talking about if there's techniques that you haven't grasped, or if there's questions or philosophies we want to discuss, they're probably better. But probably what I don't want to list is, can you take a look at this market, this market, this market, this market? Because as we know, it does take a bit of time, and we'll be here all night. So, all right, so I'll get out of here. I'll get into Profit Source. I'll pause this camera, and what I'll do is I'll jump into Profit Source. We'll take a look at, we'll go around the world, I guess. So we'll start with our index markets. We'll just do what we usually do, and we'll get stuck in. So let's take a quick look at the share price index and see what we can tell with that. Look, it's certainly been stronger than I had anticipated with regards to, the movement of the market. I've got to turn off these clocks, which look like, there we go. That'll get rid of those hashes down the bottom. They were my clocks that tell me the world time. So yeah, look, this run up, Louise, and if we go back to, where we were a few weeks ago, I was desperately looking at this gap to be, failed to fill. I've been watching that going, yep, no problem. Oh, if I get a rectangle. Got Thursday night-itis. I'm not used to doing hard work on a Thursday night. I was expecting, yep, that gap would fail to be filled, or if it would, we'd come back and test that gap. I was expecting, you've got this sort of 50% retracement in place. So while ever the market hung down there, I was thinking, yep, that's looking pretty good. 50% retracement in time and price. There really had been, a relatively strong push out, but volume had been, certainly in this little run up through here, volume had been a little bit weaker than usual. Obviously, we got some stronger volume here on the sell-off, and that was what I was calling, that was the 23rd or 24th, which was Francis's top, which he called in the platinum assignment number 4. So I think that was the last week we were together, and obviously that gap down the next day, big outside continuation day, inside day. I thought we were all odds on for some more to the downside there. So look, if you'd only got a little bit of that run, there's still a best part of 100 plus points there. But obviously the market gapped up the next day and continued to rally into the gap, and I kept waiting for it to fail there, and it kept going more. Now I did note obviously the volume had dropped away through here, and obviously then that big gap up, and then traded back into the gap, but it has closed that gap, and really we're a little bit sideways here. Now volume's sort of around about average, but it's a little bit light on. Yeah, look, it depends where you had your stops, Louise. Absolutely. There's obviously 10 ways to skin a cat and 10 ways to give back profit. One thing I did note, if I look very quickly on the cash market, this was something that was very noticeable to me, which was, volume was pretty light through here, and that's on the top 200 shares. I guess the most notable, if you look at BHP, it's probably your number one stock. Like this is what I was watching here, looking at that sort of run on that week, and I was at an ITW that week, I think, and teaching some classes, and I was sort of thinking that was definitely a pretty weak recovery. Okay, so that's all right, Francis. Then that's called trading. So whatever you as long as you made some dough, I'm happy. So look, if you take a look at it in these last few days here, really light volume on BHP, kicked up a little bit. It's been a bit weak on these days down. So that's starting to think maybe this has some strength. On the pullbacks we've got some weak volume. I know looking at the banks as well, we also, the banks just literally fell away in volume that week. That was really surprising to see that sort of volume pulling back. So, there's been a short trade on CBA, and I've been stalking that. So if I put a short, filter on there, that's been one of those to see what's going on. But as you can see, very big divergence there. A to B, strong volume, and then from B to C, we've really seen the volume fall away. Now, just catching these questions. So Darren said, I still have a small gap from last Friday to Monday, from the 22nd. Which market's that, Darren? Sorry, is that BHP or the SPY? Or I know I've just moved around a few, so just remind me of that. And Louise has asked, is that because all the main players are waiting and the punters are sending the market higher? Well, that would be my perception, Louise, but I have been wrong. I sort of made the comment, yeah, there's a little gap there. Darren, happy with that. But yeah, the reality is that I don't necessarily, my interpretation is I don't see a huge amount of institutional buying here. Just let me come back to camera here. So the question is look, is this really the start of a real move, or is this really just the who's really driving this move? And I'd have to say it's retail. I really don't get a sniff of this being a massive opportunity where the market's really being driven high. Now the US market's a little bit different. It's actually it doesn't have the weakness in the volume and those sorts of things. So yeah, so look, Darren, agree with you there. It would be an island over 2 months, so we'll just have to wait and see how that develops. But I'm happy with that thinking. So I guess the way I'm seeing it is that I just don't see the conviction and the real buying power of a market that really wants to go higher. And so therefore, in not being in it over the last week or so, there's been other things to keep me entertained. But in not being in it, it's really been a situation where I'm not really upset I've missed out. I'm really waiting for confirmation now. If confirmation says we're going higher, I've got no problem with that. I really don't care. It's not about ego and saying I think the market's going to go down and all that sort of stuff. That being said, I do sort of see a few things coming in that are just sort of maybe we're waiting for this market to catch up in a little bit of time, and then we'll see what happens from there. But at the moment, I'm pretty neutral in the sense of, I've got an opinion, but really what I'm waiting for now is confirmation on these markets. I'm really not prepared to just dive in just yet, because I think there's a good opportunity to be wrong either way. So I'm just sort of pleasantly sort of patient at this stage. But to say, look, am I confident that it's the main players in the market trading? I'd have to say no. They're not selling yet either, which is fine. But I certainly think there's a few fingers on the buttons potentially. We know March has obviously produced some pretty major changes in trend over the last few years. So we're coming close. The next couple of days will be the 13th of March, which is the anniversary of the bull market run. And we've got a lot of around March dates. Particularly 6th, 7th, 8th of March, and that's part of the reason we were watching that area as well. But that being said, we're certainly in the context of the bigger picture. We haven't yet broken 50% on the share price index. We have in some of the other markets around the world. So is our market lagging those? Is our market waiting to catch up, or is our market just better, is priced better, and waiting for the other markets to turn around and catch up with it? So time will tell. So jumping back into profit source, we can always. Of course, look, David, you're right. It will stimulate volume, but it won't necessarily stimulate opinion. So just because things are rolling over doesn't necessarily, in my mind, suggest that trading ideas are born from that. But certainly there'll be volume. And if people want to read that in, well, that's probably a novice mistake to think that an increase in volume means anything other than a rollover in contract. But, stranger things have happened. But I personally don't see a contract rollover as necessarily an idea in of trading an opportunity. So we're sort of seeing, this pattern here. We're still underneath that 50% on the bigger picture. Now, someone would be bound to tell me out there in the world of trading that looks like a heads and shoulders pattern. Probably not the cleanest, and we're sort of talking maybe that's the shoulders, and and we're talking about a head in here. Generally, not the most clean head and shoulders pattern. I'm sure it's got some other name, but look, it's strong the fact that it's closed that gap. So that's got to be respected. But if we got a falling away here and we did get something serious going on, you could argue that is a good hindsight heads and shoulders pattern. So that's the only reason I've mentioned it. But it's not like I'm hanging my hat on it as the greatest and latest thing. I'd certainly want that gap filled before I was real confident that anything had sort of changed. But we're starting to get this hovering around this level. So I guess sort of 10th, 11th of March, we're getting into those anniversaries of kind of a year ago as well. So if we take a look, we're sort of about the 11th of March a year ago is when this market kind of really 10th of March I should say really got itself going. So we are right on a 360-degree anniversary of that, and March has been a pretty interesting time. So of course we want to see whether this market's strong or weak. One of the easiest ways that you should be able to remind me of doing this would be to run some angles off the top. So if I was running angles off the 68.80 high. And throw those down, if it would help if I got the right start date. We'll call that the 1st of November. All right, so technically we've seen the markets move through the angles, come back and act as support, break through, false break, then come back and sort of find support again. The next angle up is obviously going to be interesting. That's on a calendar day chart. On a trading day chart, we've also got the market sort of moving between two angles. So what was resistance is now in many ways becoming support, going straight between that gap on a trading day angle. So, you know, those things tell me that the market is relatively strong in comparison to this angle, weak in comparison to that. Maybe we've got to see it come up and take a hit on that angle before we got too excited. One of the things that we can also do as well is run angles off the all-time low. So we know that that's obviously another area that would play to be set on. And I haven't actually done this for a little while, so it's worthwhile me checking my figures. So first to third, we know the lows on the SPY is 458, and it'd be interesting to see where, well, there's no real great intersection. So yeah, obviously market came and sat on that angle there, pushed away. So that was part of the reason, you know, just doing an angles discussion. You know, that I certainly remember Noel calling the market up in July, and I can guarantee you that he would have been watching that angle off the all-time low and just pulling up above the 50%. It's a little bit of a double bottom, and away she went. So, you know, that's all good hindsight trading. So, not because we didn't really pick on the SPY. So there's a calendar day angle. There's our trading day angle. So not a huge amount of work there. You know, we're sitting between the two. We start a zero angle. All right. So the zero angle off the low. Remember, we did some work on that. So zero angle off the low is definitely giving us some resistance. So the market has failed. Well, it's gone from one to the other. So in other words, you know, Gann's laws are working pretty well in that regard. You know, maybe we're going to come back and test this in the next few days, and if it fell away from there, well, so be it. We could argue it's a little double, triple top, and away we go. So that's a zero angle off the all-time low as a calendar count, and look at that, off a trading day count, you know, we've got that low there, and the top sort of, you know, false broke through there. So there are a couple of areas that we could be watching for. I could also run a zero angle off the all-time high. So, and probably need to adjust some point sizes there. So it's going to be 2007. It's going to be November the 1st. Start that at zero. And obviously we're not getting a huge intersection with the market there. We're just underneath the 8x1. So of course that looks pretty strong. A trading day angle, if we do that as well, we're sitting on the, so yeah, we're sitting, you know, comfortably above that. So Ron's asking me, saying try 7 periods, 1 point. Yeah, so therefore, yeah, you'd be looking at, you know, a weekly angle. Same thing can be achieved by doing a weekly chart, which I'll do in just a second. So we might even muck around and say, let's play with, say, 5 points. And if we do so on a calendar day chart where we're not near the market, and a trading day chart where we've got some resistance there. So look, you guys can play around with the angles there. You know, it's not going to be a lesson on the SPY because I'm looking at the time already. I was thinking tonight would be a quick run through, but I'm already working out that that may not be the case. But anyway, so that's kind of how I'm seeing the SPY at the moment. You know, the simplest thing you'd also be wanting to do is just doing some balancing time. So, you know, you'd take a look at the all-time high. You'd be running down to the low in the market. And we'll make that November 1st. The 10th of March is the low. So we're looking at 495 days. If we were understanding where this market might be going, 50% might give us something to watch, and 50% kind of gave us a little top. So you'd really sort of, the next period you'll be watching is around the 18th of July. If I put the quarter intervals in, so the 25% intervals tells us that we're watching the 16th of March. So the 25% target kind of, you know, was only a couple of days off the low there, and 75% is going to give me about the 16th of March. So for those who know the SPY, the 16th of March has certainly been a date that, you know, has been welcomed in on a number of occasions. So, you know, let's argue double top on the 16th of July. There you go. There's a forecast for you. All right. So, you know, you heard it. Sorry, it's not 16th of July, 16th of March. Don't mind me. And if we were going to see that sort of event, you know, you could now say, all right, well, I could be balancing time on a small scale. We run down from there to there. Well, 30 days down. We're currently right on 30 days up. So anywhere between here and the 16th of July, I'd be, you know, pretty comfortable with doing a time trend analysis chart. You should be doing those sorts of things to see how many days up and how many days down. I reckon you'd also want to be balancing time off these two tops. That's you know, 88 days top to top. 88's an interesting number. There you go, 9th of April. You could also be thinking, all right, well, I could be balancing time from this top down to this bottom, and then what I'm thinking is there are 50. So there you've got sort of a June date, 117, close enough to 120 days. If I bang in a 50% point, we're looking at about the 8th of April. So there's a few dates to be working with, just, you know, trying to combine some smaller pictures with the bigger picture. But, you know, that's certainly some food for thought. As I said, the S&P 500, though, is a slightly different scenario. It's in a situation where it's actually punched through its 50%, and it's holding just above that. So it's 1586.50. Yeah, wrong button. There we go. And 665.7. So we're above our 1126 level. So that means that you know, you could argue that we're very bullish. But also if you argue that we're kind of right on a double top there and, you know, always looking for symmetry. Oops, wrong picture, wrong button, I should say. We're always looking for symmetry. Let's assume, what's the highest of those two tops? High is 1147. Yep, there's the highest of our two tops. So that's 25 days down, and we're about 30 days up now. So if I kind of pick on where the market actually fell over from, you know, there's 17 days down up, and there's 17 days to that top, and we're about to get a 200% repeat of that initial rundown. So what we're saying is it's run down 17 days, because that's actually where the run really commenced from, and it's basically run up 100% in price, but it's take 200% in time. So it's 17 days down and 34 days, or sorry, yeah, 34 days up. You know, to me, that looks like a not a bad place to watch for some. You know, it's got not bad harmony from a double tops perspective. And you could maybe say, all right, well, let's bang some time by degrees on that and see whether we've got anything coming back. So we're not really getting much on sort of 45, 60, 90, not a huge amount. 135, 180, not great. 240 is probably the closest of our hits. 270 is quite nice. 360 we know is obviously you know, pretty close to the mark. So we're looking at around about that date. About a year ago, you know, we know that we got some interest in the market. So I don't know about you, if the market kind of fell away here and, you know, decided tonight that it was going to head down, that would be very happy for me. I'd have absolutely no problems accepting that. And then if we said, all right, well, we're going to look for a target to the downside, you know, 935. And I reckon if we pulled that apart, we're going to get about a 50% retracement. No, just under. All right, so I don't know about you. If we get anywhere back around there, I reckon 50% could be a good number to be watching. So, you know, 200% off that double top, if it is a double top. You know, these are all things I'm just throwing out there. None of this is gospel, as they're not really the markets that I've chosen to follow on. We're getting very close to our 100% repeat in price. You know, one section, two sections, a failed third section, you could argue, that double tops or reaches about 50%. And I guess I'd be looking at the first range out here. So, you know, trying to throw a number of different things at you here. You know, it's all just the things that come into my head. It's probably the first major range out there, and we're on about a third of that. And if I sort of ignored that as the first range out and said, well, look, really, the first major range out was there to there before we got a sideways move. That's where a little bit of subjectivity comes in with picking that range. You know, maybe, you know, I was sort of hoping maybe 50% would sit right there, but it's not. So we'll forget we even mentioned that. I reckon we could play around with some of the ranges in here. If I talked about this being a major range, threw it on there, that's about 75%. So really what I'm trying to do is I'm trying to find a range that runs into that top where we are right now that would be 50% of something. But looking at it, there's really not that, you know, I'm trying to see previous ranges that would be half of. You know, it's a bit hard to, you know, now we're starting to get a little bit generous if we're starting to play with some of those ranges. The only other one that might be of relevance, you know, could be that one there, but I don't think that's going to be 50% either. Yeah, which it's not. They're all about a third, which is fine. So, all right, well, let's come back to you guys. I've just sort of thrown rapid fire, shotgun approach to, you know, the SPY and the S&P 500. How's that sit as far as questions, comments, queries, you know? Or are we we're just sitting back and hope, you know, hopefully that's all the work that you guys are starting to be able to do? Oh, look, Louise, I said this last week. I said patience. I was in a Canberra TT this week. So hello, Elizabeth, and some of the other people who were there. I can tell you patience was something I talked about a lot. And I said, look, the market, if you don't want to learn it, the market will have absolutely fantastic times teaching you. And that's why I'm just really cool to be sitting out. I'm really not particularly perturbed about not missing the last week or so of what sort of run. Yeah, when is the next course on that exactly? Look, Trevor, that's okay. It comes with time. You know, as long as you understand the concepts. If it takes you 2 hours to do it, that's fine. Yeah, well, look at... Look, Louise, you know, you're the dunce of the class, and therefore, you know, it's taken you to... How long does everyone reckon this took me? You know, we're talking, you know, 10 years and still going. So, you know, don't ever think that, you know, there hasn't been lessons to be learnt multiple times. So all I'm saying is patience right now could well be, you know, I think the setups are coming. You know, I don't want to say I've got gut feel and those sorts of things. I think it's probably the experienceometer is just tweaking up, saying it's just hang back. It's okay to be patient right now. Now, obviously, some people are in there and trading and doing it. That's fine. But I'm really sort of waiting for confirmation, and then I want to be happy to wait a little while to be right. But that's kind of how I see those two markets going anyway. So, got a trading plan now, and you understand patience when you follow. It makes heaps easier. Absolutely. So. Sure. No, that's fine. Look, Wayne, I wouldn't be at all perturbed if this ran up into the seasonal date, call it the 18th or whatever. We might get something a little bit earlier that might run down into a seasonal bottom. You know, I probably, if you'd said to me 6 weeks ago, I would have probably said that the March seasonal date would more likely be a low than a high. But right now, it could well shape up to be a high. I think the lack of volume is kind of caused me to sit back and just ponder. I don't want to be caught on the wrong side with limited volume. So, that's why I probably just sat on my hands a little bit when it comes to the equity market. But I think the short setups are coming. I mean, that's what the market's telling me, but it's a case of patience and waiting for the setup and not forcing the entry. But as Louise has mentioned, that's something that we all have problems with, is forcing an entry. So, let's just sit back and wait and see what these markets deliver. All right, well, next couple of things we should take a look at. I'll move through things like gold and oil pretty quickly, just because obviously there are a couple of markets. I'll do oil first. So if we take a look at the oil market, we know that we're also getting a similar pattern to say what we're seeing on the S&P 500, where maybe we're arguing that's a head and shoulders pattern too. All I know is that this level through the market here, around this $82, $83 level, is definitely an area to watch. It's very, very strong support, resistance through here. Obviously, the market's had another crack at it. If you look at what's happened here, though, it's sort of taken, interestingly, more time and to get to a reduced price. So we're talking about that run there, very steep run. We're getting close to that 100% point, but what we've got, like on the S&P 500, is we're seeing, if we are going to get a double top, that was 28 days. And if I sort of run here, we're now running up to, we're up to 33 days. So we've actually run a greater distance, a shorter distance in price, and it's taken us longer to get there. If we're going to, simply do a very simple rating the market tool or a position in the market tool, we'd say, all right, well, where are we sitting in terms of this speed angle? And if you take a look at that speed angle, we're well and truly below that. Now, I won't tell fibs. I actually thought that would be the top there on the 8th of March, and on that day there, I actually called 82.33, and I'd sent an email to my colleagues, and they were all happily, patiently watching it. The market topped on the 8th of March at 82.41, so I was 8 cents out. Feeling good on that day there. I didn't take an entry because I didn't feel that there was one there. But then, even though it double topped intraday on that price, and then today or last session, it actually pushed through there, and where it's trading at the moment, because obviously it's keeping my attention. So it's actually trading at 81.82. So of course the rude thing has got back down to So therefore, look, 10th of March might end up being the top. Who knows? But all I'm saying is that anywhere around here for a little bit of a short trade would keep me encouraged. Lots of things going on in this particular market, and as I said, I've got the whole of Sunday to have a chat about it, but I can tell you I'm going to share some stuff on Sunday that I've never actually discussed at a seminar before, not because it's particularly rocket science, it's just never having the time, but there's some research that I've been doing that I now feel comfortable that I'm in a position to probably want to share that, only because it's taken a little while to cook, so I'll be doing that on the weekend. Linda's asked a really good question, which is, would I be waiting for a lower top, or would I look for the market to give me something as far as a lower swing top? It will all depend on how violent a reaction would be off that top. Like, if I said we're going to get oil doesn't gap for one, but let's just say for 2 seconds, we saw a really strong reversal day like that. Maybe a short to close, maybe an intraday entry would be pertinent, but look, at this stage, it may well be a first lower top entry. Could be the best and most certain. I will get you to, if you do have a look at around tops and bottoms, you do often get some pretty decent signal days. So all I'd say is go and do some research. That one there was obviously a good one, nice outside reversal day, but they don't always come in. So, it could just be a little bit of patience as well. So, obviously looking at the position of this market, look, this one's a lot easier to tell, I guess, compared to, the equity markets, is that, we've had a really strong fall and obviously big strong run down of 161 days, and then at the moment we've run considerably longer than that on the way up. So if we pull on the 19th of December low out to the current date, we've got 447 days. That's interesting, isn't it? Would anybody, without saying, and this is just purely for, I'd love to, I won't because I'm not allowed. That's a number that you should be interested in, is probably the best way to describe that. Anybody who was with us in September on the Gold Coast with David, I'm looking down the list, and I think Ashley, you were there, and I know Darren was there, and Louise, you were there. Dennis was there. How's the US, Dennis? I hope you're well. Just looking down, Kendall was there. Mark was there from memory. I think both Marks were there. Paul, you were there. Robert was there. I think Ron was there. So anyway, there's a fair few of you in the class. You should all very comfortably know where that number comes from. Yes, Stuart wasn't there. That's okay, Stuart. I kind of guessed you weren't there. Ashley's sort of giving me a comment on the side. Yeah, Dean's also got it right. So you win a prize, Dean, even though you weren't at the class. But you've obviously done some work in that area as well. So it's certainly been a good number for things like the SPY and other different bits and pieces. So all I'll say is that it's certainly been something I've been watching, that particular number, and you know, I commend you to your studies. And if you're desperately keen to know where it comes from, the Master Forecasting course will tell you. But if you're desperate for a challenge, go and work it out. But just watch it is probably the easiest thing. Sometimes you don't need to know why the number's important. You just got to know which numbers are important. But anyway, good times ahead. So you might see why I'm keen for maybe a little top in the current environment. All right. So all I'd say for you guys who were up with us in the Gold Coast there, just remember Matt's lesson, which was on day 3, I think. And you know, I was actually only going through that a little while ago, and it was a good lesson. Anyway, so we're above the 50% point. You know, if we did the same sort of work. It's like Sunday's come early. I got so many cool things I want to talk about. It's kind of like I'm already getting stuck into it. So we're getting very close to that 1 by 1 off the top. We've had some support and resistance with these angles as well. There's some other stuff for you guys who do actually have the MFC. I know for you guys who don't, you probably think I'm being cruel, but if you take a look at the 4th dimension lessons that David's done and apply them to those major ranges there, you'll get some pretty interesting results. So that's good stuff as well. All right, so you know, certainly I am bearish on this market while ever it remains sort of above or below these levels here. I can put a crosshair on there rather. So while ever we're sort of around about these levels or below, I'm sort of bearish. And Graham's absolutely right. So that's right, David does talk about it in the Annie's lost me, so I better come back. All right, I'll make sure Annie's you're still there, Annie. Let us know. Graham, you remind me of something very good. David does tell you in the number 1 trading plan that it is one of God's numbers, and he tells you it's a good number. He just doesn't tell you how he worked it out or what it's really, what's really going on. So, or how, I guess, the calculation. So, the fact he's told you means you guys have that information, and it's just whether or not, you know, how you derive it. So just watch it. It's a good number. How you going there, Albert? Am I back coming? Okay, loud and clear. All right, we'll just assume that we've had a little blip in the matrix. All right, so, you know, bearish on the oil market in the short term, and we'll just, you know, as long as it can hold below these sorts of levels. All right, so final market I wanted to take a look at was gold, and there was some posts on the discussion board on the. I'll just check which night it was. I think it was the Wednesday night, guys had posted up some stuff there, or maybe it was the. Could it actually be the Tuesday night crowd? So anyway, apologies, I won't waste your time trying to work that out. Obviously, the market in recent times has been making you know, lower tops along the way. So I guess if you were going to circle your major influences in this market, you'd argue, you know, major top, next major top, next sort of, you know, top that's, you know, really hard to confirm as being absolutely in at the moment. That being said, though, you know, we are making lower bottoms. We did make higher bottoms through here, but we kind of caught ourselves in a bit of a sideways. You know, to me, this is really starting to maybe shape up as not a bad short-term top. Somebody had done some work on one of the forums. I'll show you in just a little while. What they'd done is they'd actually gone back with some time by degrees off the top, which was on the 3rd of March, and they'd sort of come up with the fact they're about 90 degrees off that top. Looks like a little third section. Yeah, I'd be happy with that. I think it's about 30 degrees to that bottom. Yeah, 26, that's 30 if you squint a little bit. So 90 degrees off that top, and you know, 240, 270, 360 is not a hit. But there's a couple of others that seem to be working okay. So all we're saying is that potentially that's not a bad little short-term top. You know, we haven't got, you know, there was something on the forum saying, you know, it was going to go down to, you know, $400 and something or $900 and something, and I guess it's all possible. But geez, I'd want to get under 1,000 first before you started worrying about getting down to here. But anyway, time will tell. So, you know, that's how that's come into play. I guess is probably. To get us thinking about how Newcrest Mining's coming undone. So there you've got a little 50% retracement as well. So 50% retracement, not what seems to be not a bad 90 degrees off that top. And I reckon if you place an angle off the all-time high, which eludes me for the moment, it's 1227.50. And let's go 0.5. You know, you'll get an angle squaring out on that top. And, you know, you've got 64 days down and 90 days, so that's not going to be what I'm after exactly. But all right, what have I done there? Not what I wanted. There we go. Oh, have another go. You got 26 days down, which is half of 52, which is obviously something we've been keen to watch in the past. So 26 up, and we had 64 down. So 64, half of 128. 64 sits on the square 144, I think. Maybe it does. Hang on. 144. No, maybe I'm making it up. So 64, 26 is a percentage of 64. So let me grab my calculator. Doing this all on the fly, so apologies I hadn't got this all prepared. It's about 40%, so it's not a number that we're overly comfortable with, but you know, I was just looking to see if there's any sort of symmetry there. So that's that. Interestingly, though, is 25 days down and 26 days up. So you could argue that maybe that is essentially balancing out on a 50%. So I think there's some reasons here to be short. So if we then extend out that discussion to Newcrest mining, we've seen that in the last few days, the 8th of March is currently holding as the top. Now, if I pop out of here, who remembers one of the? Remember we came up with some forecast dates. So let's just do a recap. You guys remind me, what were the forecast dates we were watching for on Newcrest mining in 2010? Yep, around you know, early April, absolutely, 10th of April, yep. But we were also talking about the 10th of March, weren't we? And that was a little bit of my rogue date, 10th to 12th of March, yeah. So I sort of said that could be an area where this move could get starting from. So yeah, so we also had end of the year as well. So we'll worry about December when we get there. So what I'm going to do is, so I'm glad, thank you for reminding me. I'm just making sure you wrote it down. Believe me, some people in the past don't, and they always get upset, particularly when they work. So if I jump into the forums, okay, so there was a discussion here. I've been able to get logged out. There we go. So if I go and take a look at the posts, if I go and look at the Tuesday night discussion board, you'll see I was asking a little question there. There was some stuff in here from the looking at Newcrest on the 11th or 12th, which I kind of thought it was more 8th to the 10th. But anyway, so Blake was saying here, you know, I said it related to the square of 9. I'm sure I probably said something like that. It's not actually from this. Well, there's a little bit from the square of 9. There's some other stuff there too. And so this is where Clifford said, I was having a look at gold a couple of days ago and came up with the 3rd of the 3rd as being a pretty good top due to time and price as well, and might support my call on Newcrest. And so he's talking about the 90, 180 and 270 degrees. It's turned off the 50% retracement. So all looking like good stuff. So, you know, obviously there's some discussion going on there, which is fantastic. Is there anybody, I guess I'd be keen to know, is anyone sort of, was anybody watching that, you know, and wondering whether there was a short signal there and all of those sorts of things? Hopefully you were watching it, because for me it's been, you know, certainly something to keep an eye on. A couple of things to keep watching, I guess, is Ashley saying yeah, which is great. One of the things I was watching on this is that 50% retracement. So we got sort of back up around about that 50% retracement, and away we go. Little double bottom, all right? So you might say, all right, from the double bottom, how far have we run? And so are we sitting on a decent pressure point? So we're just over the 100%, if we're calling that a double bottom. The other one that I guess I found was interesting was if we go even off the bigger picture here. So if we sort of talk about that as being the bigger picture, we've sort of pulled up underneath that 50%. Now remember, where's our gap sitting? So this was obviously a gap that was formed when we were still obviously meeting every Tuesday and Wednesday night. So we're sort of pulled up just short of that gap. And in doing so, I guess one of the things that's got me relatively keen about the position of this market, remembering we did this a number of weeks ago when I gave you that date, that's 64 days down. So 64 days down from bottom to top, or sorry, top to bottom. And if we run up to there, we're about 31, 32 days. So what we've got at the moment is essentially a 50% retracement in time to that level, sitting on that gap, about 100% of that previous move, all of those sorts of things. So if I throw it over to you guys, what would be one of the things that we could check now as far as seeing whether this sits strong or weak in price? Would maybe to go and do a lows resistance card, maybe a highs resistance card. So getting stuck into these and saying, all right, well, where do we sit in terms of these? So, you know, going back and saying, all right, well, we know our all-time low is about $1.13. And we know it was on the 3rd of December. Just remember, make it. All right, I haven't lost it. All right, so $1.13. And nowhere near where I need to be. So let me expand that out. So let's go 50 of those and 100 of those. All right, so at the moment where, you know, that's acting as a little bit of support, you know, the top right now doesn't sort of exhibit a huge amount of you know, resistance. We're talking about 100 and, you know, a 50% point between those two orange lines. I guess for me, what would make a whole lot more sense is if I can get a bigger square, okay? So in other words, instead of using $1.13, because we know $1.13 is about as much, you know, not a huge use to us as the market's moving greater than that. So what I'm going to do is I'll make my box size 10 points bigger, and I'm going to sort of maybe make those, you know, make it 20, make it 75. That doesn't affect the time, but hopefully I'll pull it in. All right, so the fact is we're sitting right on that top, is right in the middle of that gap. So the fact that we pulled up a little bit short is certainly, you know, one to watch. Right on that gap though, right on the time frame I was watching, 64.32. All those things for me make a bit of sense now. Graham said it's sitting on 75% of the bear market range. So let me just check that. So if we take a look at that bear market range, so once again, range is resistance card work. We're sitting right on 75%, so fantastic, Graham. Thanks for letting us know about that one. So certainly one to be watching. So we're right on 75% there. And yeah, look, you know, we could run some angles off the top. And we're right on a 40.55 was the top, wasn't it? So we're above the 1 by 1 there. We're below the traders 1 by 1. We might be able to run a 0 angle. And that's not hitting anything particular in the market. And we could go back to the 3rd of December. 93, wasn't it? No, made that up. The wrong year. There we go, 92. There we go. All right, so not much there, unless we play a trading angle. No. All right, so not a huge amount of support there from some of the major angles. Mark said it's 100%. Oops, wrong button. 100% of the previous up move. So if we play on that one there, so, or maybe that's not the one you were thinking of, Mark. Maybe this one here. I reckon I'm seeing it now, the one that you're thinking of. Yeah, so it's 100% repeat of the previous up move. So, you know, against the trend. Now, I'd be interested how many days that also took. So that went up in 20 days. And at the moment, this move out has gone up in less than that. So interesting. So it could be a little bit overdone to the upside. If we're talking about 100% move in the in half the time, you know, maybe that's a little bit overbought. Now that could also be said it's very strong as well. So I think the fact that it's around our date, sitting on that gap, 100% repeats, you know, I think it's got some potential to maybe think about where we could be taking an entry. Maybe we're going to wait for the first lower swing top, which would have been filled on the gap down this morning. Not to suggest that, you know, that was the easiest of entries, but let's just take a look at what volume's doing. And as you can see, you know, didn't really kick up today, so I would have hoped for a bigger down day today with a lot more volume. But there's certainly, you know, if we get a big move to the downside, a big increase in volume, that could be a little bit of a lead in that things are happening. So time will tell what the plan is there. So interesting though that the market, I just find it's quite random that, you know, that was a date that we talked about, you know, a number of weeks ago, and we were able to get, you know, 64 days down and 32 days up of what the market was giving us. So interesting times. All right, back to you guys. How does that, as far as, you know, sort of being able to see maybe the commencement of something, you know, in line with the SPY, in line with the S&P 500. Gold looks a little bit weak. You know, maybe we're just waiting for this market to make its movement from here. So look, I certainly will call that victory if. Thanks, Annie. I was fishing for a compliment. I'm glad someone gave me one. But no, just joking. Please don't all start typing now, because I'll take the chat box away so you can't. But look, it's a case of if you've never seen it working in hindsight, thanks, Louise. I knew Louise had come up with something great. So all I'm saying is if you've never sort of seen it before it's happened, that should be a good example. Now, I'm not claiming it as a, yeah, why not, Trevor? Wait for April, because guess what? We're no victories won yet. You know, we haven't really made any dough off the top if you were short. You know, April's still a fair way away. We know we've got seasonal dates in between and all that sort of stuff. But all I'm thinking is, given the work we've done, this was really like the stepping point for me, is if the rest of the year was going to fold out the way we had anticipated, this was probably going to be the starting point. So the fact that I've got something around the, you know, the, oh, fantastic, Ashley's just given me something else, and I'll talk about it in just a sec. But the fact that it's given us something to at least consider around this point just gives me reaffirmation that our tools are what they should be, and certainly working in the right way. So Ashley's just said to me, if I bring back up this chart, that the market's at 33.10, which is kind of where we are. No, we're well above that. So 33.10 is going to be twice our low. So if I put in the bear market low from down here, remember we had a low of 16.55. We probably should bang a lows resistance card on that. All right, so at the moment we're just above that, you know, double the low, and so that will probably come into play. Now, if you look at that top there, that's perfect. That double top there. Now that is a head and shoulders pattern. You know, good hindsight victory there as well. So, you know, if we're talking head and shoulders patterns, that's probably what you're going to see as being one of the better of those. That's a classic head and shoulders pattern. So definitely opportunity to be short off that January top, which we talked about in class anyway. So market fell away. I'm sure we discussed it as a head and shoulders probably at the time. Market's fallen away, retesting. Maybe it's prime for another go. Where would we be getting potentially aggressively short is maybe when it busts underneath that 33.10 level that Ashley's pointed out to us, which is twice the low. Certainly an area to watch, and that's what he's put in his little comment to me. So definitely agree with that. All right, so I guess what's the plan of attack in the you know, the incoming ensuing days, weeks, or into our forecast is certainly to keep an eye on it. At this stage, if you made me force my hand as to what direction, I'd say I'm neutral to bearish. And if we get ABC shorts and we get lower tops, we get some gaps on the way down, particularly if gold breaks down, particularly if you get a movement in the equity markets. I think we're positioned and set up in exactly the way we need to be. So once again, a little bit of patience would be involved. And I guess if I'm looking at those moves, I won't bring up the chart, but if I'm looking at those moves, obviously we've discussed this, that they can be quite short and sharp and quite aggressive, but you know, trailing stops behind gaps and swing tops or swing bottoms if the market moves long. But yeah, trailing stops in that sort of manner will probably get you the best result. Maybe even, as I'm thinking, this setup here would be a perfect potential 3 contract system. So if we are expecting a low in, say, April, let's assume that this does get going. If you could get set on a 3 contract system or trailing off 2-day swing charts and just trail 2-day swing tops, managing half your position maybe with a milestone, half your position with a bottom draw contract, a trailing stop swing contract or trailing swing stops contract. I think that could produce some, you know, that would be ideas that I'd be looking for in these markets over the coming weeks if the things that we've discussed start to break down and start to become into the fore. So that hopefully gives you a little bit of a trading plan as to how you might handle that. But look, I'll certainly be watching for gaps and volume and lower tops and all of those things to confirm that we're looking in the right way. Now, if it goes the other way, well then so be it. You know, we've got to start thinking seriously about whether this market can make a high. But at the moment, looking at that, it seems a little bit stalled and really at a decision point. And we'll know hopefully by the end of the week. In the sense of which way it's planning on heading, not the whole shebang. But if prices are lower at the end of this week, I'd consider that a good sign. So, all right, let me throw it back to you because obviously that's the important thing. So that's our little discussion on Newcrest mining. You tell me, how does that satisfy as far as we've seen it come in before it's happened. We talked about that date. We've seen something, start to boil up around about that point. Now we've got to wait for the patience to trade it and unfold it. So any questions or comments or queries, how to trade it, how you might see it breaking down, anything that we could apply. Like obviously we could go back through the whole suite of tools and chuck it on the market, but I think that little synopsis, gives you some direction to go back and start pulling it apart. It's 64 days down, 32 days up, sitting in a gap, 100% repeat of previous ranges. All looks all right to me. It doesn't get a huge amount better than that. But I'm interested to get your comments. I'm just going to throw I'm just going to put a highs resistance card on this. You guys just think about any questions you might have. But I'm just seeing if there's anything out there that cements what we're looking at. No, there isn't really. So it's not sitting close to anything of importance. So, all right. So fantastic, Paul. So that could be one way in is short today, and to start adding to your position as it goes down. So. Trevor's picked up on a very nice point. I was going to see whether or not, there was of some merit or some view to be had. So let me jump back into profit source, and I'll bring up. No, the wrong one, not the forum. Try the software. All right, profit source. There we go. All right, so what we've got at the moment is we've the concept of essentially balancing time. So if everything came together in terms of balancing time, we would be 64 days down, 32 days up, 32 days down. So what I'm so that gives us our 10th of April. But it's all random, just everybody remember that. So that's really what we could be seeing as our 3 pivots, and then we're seeing, I won't put a circle, I'll put a rectangle. 64 days from bottom to bottom, 128 days back to that top. Remember that 128 days is not the number I'm thinking about when I'm doing that calculation. Could be this one though, hang on. Sorry, these just numbers start going through my head and I've got to calculate what I think they could be. So about 128 days is about 3/4 of 168. So there's some numbers that we should look for. And if I keep doing some calculations as I'm thinking, that's not 128 divided by, I've just got to go to my folder of timeframes. So your screen's just going to go blank for a second. And yeah, all right. Nothing jumps out at me which I was hoping for, but that's okay. So in other words, you know, maybe we're half at 256. There you go. So I knew it was sticking out for you somewhere. I was checking 144s and 168. So as Ron said, 128 is half of 256. Now 256 is another one of those little interesting numbers. There's a good discussion going on in the master forecasting forum regarding 252 and 256, and that's certainly a number that that David gives us as being certainly one to keep an eye on, particularly for the share price index market. It's been one that's been a pretty good proven servant. So there you go. All right, thanks, Ron. I thank you for helping me out with my mental block. All right, well, let me jump out of here and back to you guys. Any other comments regarding Newcrest? Anything else you want to discuss? Good to do these little updates. It's good because we've all done the work, so it's just easy to have a quick discussion about it. All right. Yes, no, and maybe. Okay, I'll take that as you're contemplating. So let me just take a quick squiz at the Aussie dollar. It's kind of it's been a, you know, I think Newcrest is definitely aligned better to our view of what we thought was about to happen. But that being said, you know, there's been a lot of comments about how the you know, the market on the Aussie dollar, you know, we're talking about the seasonal date as being our reference date, whether or not there would be, you know, the opportunity for a top or a bottom. So if I go and take a look, I think we're saying about the 19th of March. You know, look, at this stage, it would shape up to me to being more likely to be potentially a double top rather than a low. But if you take a look at, you know, even over how many days are we out? We're talking only about 8 or 9 days. Let's say it's 10 days or 12 days, because let's say it ends up being the Monday rather than the Friday. If you take a look at what these markets can do, particularly currencies, you know, we're talking that move occurred there in, you know, 20 days. So that's probably going to be about half, you know, the time frame we're looking at is going to be about half of that. So if we sort of pull about that time frame, that's kind of more the move there. You know, if I sort of said that, you know, where you get a 100% move, you know, that could see, you know, good 5 cents come off this. So, you know, if we're talking about what this market's capable of doing on a short period in time, as you can see, when it does get going on the short side, you know, we could end up getting some sort of low, you know, probably not where we were considering, you know, back here, which might have been down around these lows, but or those bottoms at 77. But all I'll say is that, you know, at this stage, you know, it's probably shaping up more likely to be a top rather than a bottom, if it's going to be anything whatsoever. So we could just get an idea of, you know, as far as measuring ranges like we've done previously, you know, we're sitting right on 100% of that previous upswing. You know, you can tell just by looking at it that the time frame up is certainly longer this time around. That's 22 days. And that one there is 33 days. So, you know, taking longer to do the same distance. So certainly, you could argue maybe running out of a little bit of steam. If we pull apart these, you know, these pressure points here, you know, it's about 75% of that one. If we call that the top, if I call the outside day the top, you know, 75% of that as well. So maybe, you know, maybe we could get a run down from here into a seasonal bottom low before the market heads higher. All I'm saying here is that, you know, the swing chart is up, I agree, but I have seen markets do silly things. Okay, it's up on a 3-day chart. It's probably up on a 1-day chart, which it is, but I have seen markets fall away quite steeply into your date and then head away. So there's nothing wrong with trying to trade this move if you were trading it into what you consider to be a seasonal date top. All I'd say is that it could be worthwhile if you were long or you're looking to get long. I would have a stop and reverse strategy in place. Okay, so if the market does fall short of our date and then looks like it's going to duck down rather than duck up, maybe going short into that date and then out the other side could give you an opportunity. But I think the way this is positioned, you could argue that it may be worthwhile just waiting to trade out of this date rather than trying to trade into it, where I do think with the Newcrest date, I think we're in a situation where we could probably trade into that with a whole lot more level of confidence rather than what we're seeing here on the Aussie dollar, considering we're about 10 days out. Sticking with your swing chart tells it would be a top. On a weekly chart as well, I think we're still probably pointing to higher prices. So let me just take a look at the swing chart. We should see a shrinking of the range, which 157, 137 we kind of have, but not by a huge amount. So 288, 194, 157, 137. I'd really want to get going now. What's the weekly chart telling us? So it's getting a slight contraction as well on a weekly chart. So, you know, that's that 75% level that we're talking about. So that one there, I'm a little less committed to if that can be possible. You know, I'm in the sense of not having to trade into this date. I'd be comfortable just to sit back and wait and see what happens. But if we did get a sudden breakout to the downside, I would definitely then get interested and as maybe a rundown into that date and then bounce away again. But you know, we're at about 92, 91, 92 cents at the moment. You know, as we've seen, we can sort of drop about 5 cents in a couple of weeks, and I reckon we could find some more savage moves. You know, if you take a look at that move, you know, off the all-time top, you know, that's only about it's probably a 20-day move, but you know, you're talking about a 15-cent move from 99 down to, you know, 87. So that's 12 cents. Even if you got a 6-cent move in the next few days into that seasonal date, 6 cents is going to put you at 88. No, it's not going to put you at 86. It could bring you back in double bottom. All right, so I guess the thing I'm suggesting to, you know, and I'd probably defer to even blokes like Dean and those guys who are trading this market on a pretty regular basis. You know, you guys have probably had a tighter grip on this market than I would because, you know, as I said, I've had my focus elsewhere. But what I would argue with you is that don't ever discount the fact that this can be a low. Okay, so all of our work suggested that we were probably looking for a low. Now that's not to say that, you know, if it's a top on the 19th or the 22nd, we won't claim it. But what I'll tell you is that, you know, there's still a little bit of time for those things to come together. It could come back in double bottom. And if it did that, you shouldn't be shocked or surprised, okay? Because most of our stuff said we're looking for a low. At this stage, it's probably thinking it might be a top, but you just got to be a little bit relaxed and not hang into the idea that it has to be a top. So, you know, I'm getting some comments here that's saying it's looking like a top currently. And look, I'm happy for that. That works. Our date is really what is our interest. So, but all I'm giving you is a strategy. If you were going to trade long into it, I'd have a stop and reverse strategy just in case here did something that was a bit unexpected. Okay, remember currencies, when they move, they can move pretty rapidly. All right, let me, you know, how's that sit with everybody as far as that's concerned? Not as, we don't have quite the neat symmetry that we had with Newcrest Mining all lining up and locking in, but at least in a week or so we'll know whether we were, you know, half right or half wrong, half smart, half not when it comes to the Aussie dollar. So, you know, that'll be our, you know, our first official way to seem to just keep an eye on it. So, yeah, look, hopefully you are keeping an eye on it. Yeah, you know, please be watching it. Please don't lose the benefit of the message and the mission that you've undertaken. So just keep a good eye on that, and I'm glad it's making sense. So, all right, we shall wait and see, as Debbie says. Absolutely. All righty. Well, what I want to probably do now is just bring back up my PowerPoint presentation because it has some stuff in there that I do want to talk about. All right, so I guess probably where we were going to sort of pick up our discussion now was to sort of talking about a trading plan. So this was this discussion was prompted by Adrian, and I guess probably from my perspective, there's a lot of stuff that David gives you about sort of setting up mindsets and business plans and trading plans, and I guess a lot of people fail to do them. I'd sort of, first one that I think about is that transitioning from amateur to professional discussion that David has in the #1 trading plan. Most people don't take that sort of stuff seriously, and then they kind of wonder why they don't have a trading plan per se or a business plan per se. Some people stumble across it and don't need to spend too much time on it because they've got the mindset already, particularly small business people who come into trading. They find it easy to transition it because they're managing a business on a day-to-day basis. But if you're working sort of in a role that's kind of more corporate and you're kind of a small part of a very, very big industry, then, you know, you tend not to have too much of a business plan in mind. You're just kind of sitting in your little area making sure things get done. So it sometimes stretches your imagination as to how you should think about a trading plan. But I guess probably where I start the discussion is by having an idea of your business plan, and this is probably where you would say, this is a sort of percentage return, this is the sort of capital outlay, this is the time I want to take, these are my strengths and weaknesses, these are the opportunities and threats, this is how long I'm going to take to get there, in 6 months I'm going to transition out of this, or 12 months I'm going to be doing this, and that's kind of more your business plan. A lot of people try and get that into a trading plan, but that doesn't always sit well with some people. So what I mean by that is that, you know, I see a trading plan as the second step is really an individual market plan. So what could we write down for Newcrest Mining and the Aussie dollar that would give us individual market plans? Now, I know we talked about sort of putting that together, and I probably still will sit down and do something along those lines and get it out to people. But I must admit I have not completed something along those lines, and it's not been something that, as I said, it was going to be a bit of a two-way street. Probably just with how we wrap things up, though, it probably will need to be something that sits with you for a little while. It probably was a bit unfair to sit back and say, oh, I think we could write a trading plan for those markets without at least sort of seeing these dates come in and getting a bit more experience and exposure, because it is hard to write these sorts of things. So I did put a few slides in here just to give us a bit of a guide on sort of what Gann said. Now, Gann said, have a well-defined plan before you start trading, then follow that plan, and as an architect does in building a house or the engineering, constructing a bridge or driving a tunnel. So really it's about having a plan, and it can be very detailed if that's your orientation. It can be less detailed, but it's really about having something to begin with and accepting that the one you first put together will not be the one you'll have in 6 months or 12 months or even 2 years. They'll change pretty regularly, and that is not only on the business plan side but also on the trading plan side. So I guess your knowledge base to date should have already allowed for some profits with any luck, and so that means that you've got things working for you, but it's just about getting consistency. So if you're not in keeping with your expectations, then the missing part is likely a written trading plan. So a lot of people have very, very big expectations of what they want to achieve out of trading, but they don't ever qualify them or quantify them. And then obviously for many people I've found is it's not their lack of technique or lack of understanding of how tools work. It's the fact that they just don't have a direction for this to be an outlet for them, and so they tend to fall over. So no trader is above the need for a detailed trading plan. So don't ever think you'll ever get to the point where you know so much that you won't need a trading plan. I can tell you that obviously mine is a far more abbreviated format than it was many, many years ago, but it's always something that has to be reviewed. I know Tim has one, I know Matt has one, I know Noel has one. So therefore it's a case of, it's a consistent approach that we're all applying in our day-to-day business. Now, David's issued you with many individual plans to get here. So obviously he's given you a lot of plans from the Ultimate Gann course, many of which a lot of people have never filled in one from scratch. I haven't thought about going back and sort of doing all that trading plan stuff, but I've decided to leave that for you guys to be able to go back and take all the trading plans from the starter pack, #1 trading plan, Ultimate Gann course, and at least fill a few in by hand, particularly the Ultimate Gann course stuff, and that will mean you've got a strong understanding of how that works. So I guess a trading plan in many ways, it's about the philosophy of why you trade when compared to the technique. So in other words, it should say, all right, well, for example, my oil trading plan relates a lot to 50% time and price retracements, and that's not saying I will place the Gann retracement tool on the low and the high and measure 50% between the two, and if I see a market make support or resistance, I will then do X, Y, and Z. That's very verbose, but I have a philosophy about time and price retracements. I know historically that oil does 50% time and price retracements regularly. If I see one of those, I then have a set of implementations. Will I then look for if I see those, I guess my first and obvious thing to look for is a gap. And if I get a gap, can I apply the openers rule? If I can't apply the openers rule after the gap, can I apply the closers rule? What I'm trying to do in a 50% time and price situation is to get a low risk entry away. So that relates to the philosophy, not so much the technique. All right. So when I look at that, I go, I know when I'm getting that 50% time and price retracement, I'm going to look for a low risk entry. And then I have all of these tools sitting here that would be enabling me to make that happen. But I don't try and necessarily tie a tool to the philosophy, because they don't always, every single opportunity to use that philosophy might require a modification or a slight, technique change. Now, for example, you might get a 50% time and price retracement, market doesn't gap away from where you're looking, and now you might say, well, I'm now going to revert to looking for the first high bottom to trade. Okay, those sorts of things could be points of interest. Obviously, the ABC trading plan from the starter pack is your foundation. I would be expecting that you guys could all fill those in cold. If you didn't fill one in for every time you took an ABC trade these days, I'm probably not going to send you to the sin bin. You know whether you've got enough work in that area done, and you know whether or not you're handling that in the right way, so that's up to you. David talks about his method of selection in the Ultimate Gann course, so that would be something to definitely go through and review. And you've got to create your trading plan away from the market. So I know, for example, Louise and I have had some good chats about this over some time now, about how we put a trading plan together. And you shared a great comment earlier, which is obviously that you found that being patient in the market is a lot easier when having a trading plan. I find that trading plans help people in two ways when they actually sit down and do it. Is that A, it forces them to trade because their plan says so. So if you're somebody who is hesitant to trade, by formulating a plan, you'll find that your plan kind of kicks you in the bum to make you actually take the trade. Well, it should do anyway, because my rules say I should trade here, and my philosophy says I should trade here, and my business plan says I should be trading. So therefore, the only way I'm going to meet all those criteria is to trade. Conversely, probably where it helps more people, it stops you when you shouldn't be trading. And I guess that was going to be my point, is that this is probably the more important need for people, is that Look, it's a hard one. I don't know what's worse, the inability to trade or the over trading. And I probably would think that the inability to trade is equally a bad problem, but I guess it's not measured in loss of capital. It's just measured in loss of confidence and increased procrastination. And that can be a big problem because it means that, 10 years after you first read the starter pack, you're still sitting there going, I'm nearly ready. I'll be ready soon. So that's a problem, but it's probably less of a financial problem. It's just more of a, something sitting on your shoulder, telling you that you need to get it done. The more challenging problem is people like Louise says, is keeping you out of the market when you shouldn't be. And this was David's problem. He said, look, Stuart's given me something, some food for thought there. And, Darren's also said, I've got a good quote here from one of the people that the inability to trade is their problem, but because I used to be a procrastinator, but these days they're just not sure. I like it. But look, what I'll say is that, being able to keeping out of the market when you shouldn't be. And look, Stuart, your situation is probably certainly one of those. There's certainly times where you shouldn't be trading. Next week, we are booked in for some more hospital time with Oliver. So the good news for you guys is your program's over, so you don't have to worry about having to miss a week. Whereby some of the other guys are going to get to learn about the interesting schedule we keep at the Ultimate Gann course coaching. But that being said, look, next week's probably not going to be a huge thing for me, where sort of towards the end of next week we'll get into the other stuff which I've got to contend with. So, for me it's just about switching off, and I'm a bit bitter about that because I think there could be some good stuff going on there, but I'll do my best to juggle all of those things. But I know, generally speaking, if I try and juggle too many things, something gets dropped. And generally speaking, it's the trading. So, you don't want to make it costly as well as, a bit painful. So thanks. Oh, look, thanks, Dean. I know everybody would send their thoughts. And I must admit, I'm blown away by the support we've had in our family. And I'll keep saying it, from Tracy and myself and our boys, we thank everybody for their good wishes. And, we take good wishes, we take thoughts, we take prayers, we take all of that stuff. We'll bank that because I'm a firm believer that all of that stuff makes a big difference. So, any way you contemplate, thought or higher power or mind power or whatever you want to call it, I'll happily take any of it and all of it. So thank you for that. But yeah, all I'm saying is that probably the great benefit if I said to you what a trading plan does is it enables you to not be in the market when you shouldn't be, and that's a pretty good thing. And how you get that ability is you've got to create your trading plan away from the market. So if you've ever tried to sit down and do it while you're trading, you can't look at it with non-biased opinion. If you've just taken a winning trade, you're going to write, what you consider to be the best trading plan in the world based upon your experience of the last week. And if you've just taken a losing trade, you're probably going to write the most conservative, negative trading plan. So the best way to do it, like David did, was take 6 months out of the market, completely focused, and threw 18 hours a day into it. But that's pretty extreme. So, most people aren't going to do that. So it's finding a balance and how you're going to create that trading plan. And I guess it's being honest as well. You're only going to shortchange yourself. So if you turn around and say, my trading plan says that I'm going to, watch a 5-minute bar chart to enter the market, but full well that you're not going to be able to be near the market to be able to time your entries and all that sort of stuff. You can't write a trading plan that you can't deliver on. If you can't be watching the open of the market, don't include the openers rule in your trading plan because it's just going to ping you off when you see great entries and you can't take them. So my trading plan said to trade, but I'm stuck down a mine or I'm upside down or I'm out of communication. I can't trade. And it just aggravates you when you go, my trading plan says I should have been in here, but your life stops you from doing that. And boil it down to its briefest possible form. And in doing so, that means that you've got something that's concise. You should be able to explain it to me very clearly and concisely, and I should be able to pick it up and be able to read it. Now, David says you should be able to explain it to someone, who's next door. Your goals have to be achievable. There's no point saying I'm going to be Warren Buffett next week. It's okay if you are Warren Buffett, but for the rest of us, it's probably a bit of a leap too big. But you've also got to have goals that challenge you. But what I was going to say was, David says you should be able to explain it to someone who's a non-trader. I think that's a stretch. But somebody else in this class should be able to sit down and read your trading plan and know how you would tackle your markets of choice because they understand where you're coming from. So David's obviously given us, a couple of decent trading plans. Obviously there, the ABC trading plan number 2, which is the method of selection. So I would always encourage you to go back and have a read of that. And I guess there's 3 steps which I'm going to leave you with now. Obviously, the 3 steps talking about having a trading philosophy. So what's your style? I'm an intraday trader. I'm an end-of-day trader. I trade 2-day, 3-day, weekly, 1 month, 5-year swing charts. I'm a Gann-based trader. I use time and price. They're all philosophy statements. Trading aims. What do you want to achieve out of this? I want to generate an income. I want a passive income. I want an active income. I want to replace my income. I want to be able to get 50% of the major with the trend swings, like David said, or 30% or 90% or whatever that is. And then what your trading strategies are. So, I will, outline all the strategies to be able to say, this is how I'm going to trade what I believe. I'm a trader that seeks strong time and price alignments. When I see those time and price alignments, i.e. Newcrest mining the last couple of days, I will attempt to trade those by going short the openers, watching for gaps, waiting for volume for confirmation, and listing that. Like Paul said, around these dates, I might start with a small position and look to add to my position if the market does go my way. Like the Aussie dollar, I will wait for confirmation of my turn before I commit any capital. I will attempt to trade into, my dates rather and out of them, or I'm just attempting to trade into them, out of them until I get more experience. So all of those things are, I guess, are the things that I would encourage you to start working on. Okay. So look, there's a lot more I could talk about on this, but the thing is that ultimately, I could share my trading plan with you, but it really wouldn't be that helpful because it's mine, and it really wouldn't make a lot of sense. They're things that make sense to me. Like little lines like "Don't tell the market what to do." If you've ever told the market what to do, you'll know why that line's in there. All of those sorts of things. So, when to take a break, when you got to push the button, when you need to pyramid, when you need to add, when you need to halve your position, when you need to go slow. What to do if you're over trading, what to do if you're under trading. These are all things that you could incorporate into a philosophy, aim, and strategy to do with your trading. Alrighty. Well, that was rapid fire, but obviously you've got the recording, so you can go back and kind of digest that. Particularly to Adrian, who raised the topic, and I think it was a very good one. Hopefully that satisfies. Let me know if there's questions about that. Look, I'd be surprised if there wasn't questions about what I've just given you. So, look, try and digest a little bit of that, and think about if there's anything I can answer for you now. As I said, the discussion boards are going to stay open, so I'll always happily pick things up from there. But throwing it back to you, guys and girls, at this stage, how does that all sit as far as just the starting point? That's not meant to be. No problem, Adrian. Thank you. Yeah, look, just that's a starting point. That's far from completion. Okay, and look, it's one of those subtleties, and it's one of those nuances. You really get this stuff going on when the trading matches the trading plan. So it's about mindset, and I know that's kind of, you don't really want to hear that in the sense of, oh, look, is it meant to all be this hard? But if you approach it in the right way, you'll find it takes care of itself. Excuse me. All right, so just answering Lois's question, can you have different plans for different stocks or futures? Absolutely. Yeah, absolutely. Am I able to go through trading plans 3 and 4? I have a copy in front of me. I probably can. Thanks, Louise. Oh, and Stuart in stereo. Hang on a sec. Alrighty. I'm not going to be in here. I actually don't have a copy that I can easily put my hand on, and I would need that to be able to have a chat to you about it, because I actually don't remember them off the top of my head. So yeah, it's part of the psychology of trading. I was about to have that guess. Why don't I do something on the discussion boards on that, on all the trading plans? I think that's probably going to work better, so then I can put some detail into it and all that, because I'm a little bit, yeah, look, it's about structure. We all need a little bit more of that. Yeah, I guess, I was hoping that maybe what I've just given you would be enough to get you thinking, but leave that with me. That'll be a little project for me. But yeah, rather than trying to cuff it tonight and not giving what it needs, I'll do a bit of work. Thanks, Neil. Good trading to all, absolutely. So would I recommend Van Tharp's psych books? Look, I actually did a class in Canberra with a guy who, just the last couple of days at the start of this week, was he'd actually done a number of other trading education company stuff. So he's already actively trading and doing pretty well. But he's looking obviously at getting tuned up a little bit. He was finding that his risk and reward ratio, or his probability of success, was really good. He's trading options, but he's making really, like, he's getting it right 80% of the time, but he was sort of making about a 1 to 2 reward to risk ratio. So in other words, he was making very small amounts but getting it right most of the time. And he actually said that he'd done some classes with Van Tharp in the United States, and he said that they were very, very valuable. Now, that being said, oh, thanks, Debbie. I'll have a look at that in a sec. But yeah, he was very praising of the work of a guy called Van Tharp, Dr. Van Tharp, and he's a trading psychologist and a trader from all accounts. So look, I certainly don't, I certainly wouldn't suggest it would be a bad thing. I haven't done a lot of his stuff. I've read a little bit of it, but a lot of people rate him very, very highly. So people I respect think he's pretty good. So why not? If you've got access to his material, then knock it out. Yeah, look, Stuart, that's a book that I'm familiar with, the Psycho-Cybernetics, and that's certainly another area that you can take it down. look, there's a huge amount of stuff you can take your psychology. You can go in a lot of different places with it. And that's the individual journey, I think, is that it's unfortunately not for everybody, certain things. And going forward from there, I don't know why I was thinking that it wasn't in here. It's only because I couldn't find the page. There you go. All right, so trading plan number 3 is trend analysis. That's really just a time trend analysis chart. We do that actually at Gann Jumpstart. So that's an easy one. And trading plan number 4 is just a 0 date. We do that at Gann Mastery. So all right, well look, I'll fill some of those in and put up there. So yeah, no, they're easy done. So all right, I'll do that anyway, just as a little project, because I'm sure people get a benefit out of that. Yeah, look, obviously mixed reviews. Amazon's always going to say, you know, there's going to be good and bad, but look, you know, I've always said that, you know, Mark Douglas and Jake Bernstein, their books were always pretty good as far as some psychology stuff was concerned. But, you know, if they're not enough and they're kind of not, you know, probing enough for you, then, you know, Van Tharp stuff can be pretty good, and maybe that's the next step. But, you know, some people need to read one book on psychology. Some people need to read, some people need to, you know, to do a lot of different things. Okay, so, yeah, so, you know, we'll go from there. So, yeah, no, I'm with you there, Darren. It's a big job, but I might be able to do that. So I've just had another suggestion regarding discussion boards, so leave that with me. All right, so yeah, look, simple thing, yeah. If you've got access to Van Tharp stuff, do it. I get emails from him. You know, obviously I'm on his mailing list, and I get stuff from time to time. So you know, I haven't done too much work with it. So probably, Darren, probably. All right, well. So there's some food for thought in that area. So I guess probably what I really wanted to do now is, there was a couple of questions which I'm just going to read from an email here, which come from some of the guys in the room tonight. So I said I'd sort of tackle the questions that have been raised that I've had in emails. I've sort of got 3 or 4 here. So one of the questions was, do I see any value in watching markets intraday and seeing patterns unfold? The question to that is absolutely. I like seeing things like oil, where all the rules that I trade on end of day are also present on an intraday chart. The thing to keep in mind with watching markets intraday is it becomes seductive, okay? And it becomes like you can't see the bigger picture because you're so focused on the small picture. Like David said, if you want to use intraday data, you use it to get set, get tight, low-risk entries, and then as soon as you're in, you zoom back out and you don't continue to sweat on the intraday chart. So that's probably the best way that I could encourage you to do that, but there's no problem in watching an intraday chart. Yeah, but good fun, exactly. But remember, trading's not about fun. How do you use an intraday chart to obtain low-risk entries? So in other words, what I'm trying to do is make the ranges smaller. So in other words, if I'm expecting a pressure date, let's say on the 8th of March or 10th of March on one of our markets, Newcrest Mining, you could watch the intraday chart. You could maybe watch for a double top intraday. You could maybe watch for it to give you a lower top intraday. Look, when I'm talking timeframes, I'm probably maybe talking 30 or 60-minute charts for some markets. If you start going down to 5 and 10-minute stuff, you'll place stops with a very low-risk entry, but you might get knocked out as well. So that's probably about as small as I go, sort of 30 minutes, 60 minutes from setting positions. Happily watch smaller stuff if it's necessary. Can you position use of vibration? Okay, yeah, I'll come to that in the second way. One of the other questions was, can you give an overview of the process you follow to determine your outlook in the market, bullish, bearish, or neutral? You know, from what I've said, I'd gather that, you know, master time cycles are a big one, swing charts 1, 2, and 3 day and weekly, absolutely, and position of the market, absolutely. So for me, it's always just about, you know, it really falls under that category of position of the market, as David talks about in chapter 2. So knowing from a time trend analysis perspective where our markets sit, knowing from a you know, swing chart perspective where our market sits, knowing from a resistance cards perspective. So it's all of those things, but it's just a combination, and just trying to keep those short, sharp, little bit of analysis pieces that we're doing, and like we've done at the start of every week where we've been together, just to make sure that we're on top of what we're seeing in the market. I mentioned in week 10 near the end that the forecasting process would not always be the same. It would change, and how would we know when it should change? So what I was kind of suggesting there was that you get a routine of tools, but what you might find is that a certain tool is no longer giving you the outcome that you're after, or it's become less reliable, so it might change position in your use of tools or techniques on a market. So really what it's about is keeping the tools and techniques that you know are very regularly working in a market nice in front of mind, and then being able to slot some of the other tools down the list as required. So generally speaking, it's when forecasts stop coming in, as you've mentioned here in your question, when they stop coming in and you're really starting to get a little bit lost in the market, the bank balance going backwards, that could also be an opportunity to reassess what order you're in. So that would be absolutely you know, worthwhile taking a look at. Obviously, you put here attending a Gann Mastery. Well, you know, of course, that's always going to be of a benefit to retune your brain. I've often found, particularly some of our very successful traders, they come back and do a Gann mastery once a year, and in doing so, they get a bit of a recharge. So Albert's asked the question: has anybody been doing hand charts on these markets? Well, there you go. It's time to give yourselves up. If it's a yes or a no. I've done a little bit of stuff, but I must admit I'm not keeping a hand-drawn chart on these for going back for decades. But I've done a little bit of stuff. Yeah, Louise is doing the SPY. Graham's doing NCM. Linda's doing the dollar. Francis is on the SPY. Debbie said, I've got a friend that has a hand chart on the mini Dow. So yeah, look, Albert, I think a lot of people are doing the SPY. Yeah, look, Darren, you know, these things happen. I understand that. So, all right, yeah, they weren't on NCM and Aussie dollar. Okay, no problem. But yeah, look, obviously, keeping a hand-drawn chart, you know, I can always, you know, espouse my views. You know, you guys have reached a level now where if you haven't heard what we're going to say on that, you know, you just got to keep, you know, you got to go back and have a think about what you're going to do. So Wayne's asked, can I talk about the wall vibration charts? Okay, so really what they are is like a vertical. Yeah, well, you're absolved at the moment, Stuart. So I fancy that could be the case. But all right, so what I'm going to say is, with regards to the wall vibration charts, they're all related to time by degrees. And so what that means is, like we have, where we have a tool where we can sort of get a chart up and plot time by degrees, what David did was he just had dates running across the top. So when he had a top or a bottom come in, he generally put a red dot or a green dot based upon either a 90-degree sort of shift, 45-degree, and obviously the smaller turns would go on the 30 or the 45-degree charts. The major turns would go on the 90-degree chart. Now, if you start plotting those out over the years, what you're really looking to do is see if you get a line running down the chart around about the same point, and then you would say that that's the vibration that the market's operating in. But you know, I know Noel has a big penchant for them. I'll be talking. I don't know if you're joining me on Sunday, Wayne, but I'll be doing a bit of work on them then. I guess it's probably one of those things. It's a bit hard. I don't have a lot of my charts aren't in this room, so I can't actually even go and grab one unless I go downstairs and do a few things, which I probably won't do. So what I'm suggesting is that, yeah, I could sort of hold up and you'll be there on Sunday, Wayne. Fantastic. Well, I'll be talking about them then. So it's certainly that opportunity. I actually do have what one looks like. There we go. So let me stop sharing there. I actually have the PDFs on my desktop. So why don't I find those? No, I don't. They're not in my desktop. They're in my email, which is open, which is good. And I'll just find it from the person that sent them to me this morning. All right, let's open this up. Taking a second or two. There we go. I will jump in here, go to my computer screen. Maybe that's it. Hopefully it is. No, it's not. Email. Screen's being broadcast, that one. All right, PDF I want. There we go. See if that comes up where we want it to be. All right, that's exactly what we want. All right, so imagine, now David says 87. Now, obviously the years don't really matter. You can, you know, start on any year. This could be 2010. So let's assume I don't have because it's a PDF, I can't actually put circles on here. I've got to open it up in another package. All right, but let's imagine we started out here. I'll just zoom in here a little bit. Let's say we had a top on February the 12th on the, you know, major top of the year, and then we found that, you know, 16th of August was a major low, and then we found November 14 was a major top. And let's just say we could head down the page where we were being able to stick stickers or tops and bottoms. Now, in the case here, David's actually shown you what happened in 87. The 11th of November was obviously a major turn. The 10th of February was a major turn. The 12th of May was a major turn, and the 11th of August was a major turn. And so I'm putting those little dots on. What he was able to do was isolate that you had a lot of lows coming in between the, you know, 11th and the 12th of the month. So 90 degrees, 90 degrees, 90 degrees. So the 11th of August was a low. That would get you probably looking to, you know, 14th or 15th, 12th, somewhere between, you know, that area in November. Now, in September, the 18th was a top in 87. The 24th of December was a top. The 24th of March was a top. 23rd of June was a top. Now, obviously, they're all seasonal dates, but what you're seeing here is you've got top, top, top all lining in. So really what you're being able to do is put a vertical line down here and discuss that, you know, there's tops here. Now, through this area here as well, you had major turns and you being able to identify a little bit of a vibration. So Linda's made a good point. I remember when Linda was sending in her work for the forecast that, yeah, she had obviously the vibration wall charts. I think you sent me those. Yeah, using them in a spreadsheet and highlighting the relevant cells. So that's probably what I'll be sharing on Sunday. I'll do it in a spreadsheet and just sort of mark the ones because it's easier than working with those PDFs. They're really designed to stick on the wall. If you want one that's portable, doing it in a spreadsheet is obviously probably the easiest and the cleanest way. I think Ron, you even I think it was Ron who put up your degree vibration wall charts. Which I actually grabbed a copy of. All right, so I've opened up here one on the Aussie dollar. I think it was maybe, let me find out. I better not miss the wrong person or credit the right person. This was some stuff that was done by one of the people on the forum. Let me find out exactly who it was. I'm pretty sure it was. I better not say I'm pretty sure. Whenever I say I'm pretty sure, I'm always wrong. So let me just go and see who that was. Yeah, it was Ron. I thought it was. Jump in and claim victory, Ron. Yeah, degree vibration wall chart. So Ron, who's with us tonight, who's probably sitting there being very patient. So the Wednesday night group, Ron was kind enough to put up some stuff and put some degree vibration wall charts on there. So I'll show you, if Ron doesn't mind me showing what it looks like. This was what Ron was able to do, and obviously he's a lot cleverer in Excel than I am. And there we have a spreadsheet going back to 1987, and in doing so, going through and marking, turns, be them red and green, and going through and marking out. I would if I remember to type on the right keyboard. All right, Ron. But yeah, hats off to you, Ron. It was a great job, great amount of work you shared with the guys here. So as you can see, there's a huge amount of work that goes in here. Down the bottom here, you've got 30 degree, 45 degree, 90 degree. People who can do this stuff in Excel just do my head in. It's fantastic stuff, but I just have no concept how you do it. I'm just one of these manual people, unfortunately, who has to do it all. Yeah, you're an absolute whiz, Ron. And he's even got. I'd be happy if you could give me the dates for 2011, Ron. Not the ones that you expect to turn, just the ones that are going to be the turns. That would make my life a whole lot easier. But yeah, you're truly a pretty clever bloke when it comes to this stuff. So hats off to you, all right? And huge amount of work there. So just really what we're trying to do there, Wayne, is just line up based upon what we've seen. So yeah, all right. I'll get all the propeller heads onto it. But yeah, hats off to you for being able to do that, Ron. So thank you. But yeah, 2012. Look, look, just get Ron rolling out to just 10 years of the next 10 years of market turns, and we should all be. We'll buy you a beer or whatever your tipple is. I promise. I'll buy you a nice bottle of wine. If you get the dates right, you can have as many as you like. But there we have it. All right, so we'll have a bit more of a chat about that on Sunday, Wayne. So hopefully that'll give you some running now. Also, the Ultimate Gann course multimedia CD ROM also has a lot of work on the vibration wall chart. So maybe have a chat and have a squeeze of that as well before Sunday. All right, so that's probably most of the questions that I had for people to sort of have a chat about that was sent through. So now's an opportunity to, I guess, throw it across to you, everybody here. Just checking the forums, make sure I haven't missed something. Obviously, there was a sort of talking about between forecast, trading dates. How will we handle that? I think we've kind of covered that. We're just talking about stalking markets where appropriate. But now's the time to throw it across to everybody here and see what we come up with. And if not, we'll part company. Graham said you had one on the forum. All right. All right, Graham. Just let me check that. I think I might have missed it, but maybe I didn't. Ah, there we go, Graham. Sorry, I forgot about that one. So let me answer that one. The burning question you had at the moment, can you give your explanation of what happens when a stock goes ex-dividend? You looked on Newcrest Mining, the ASX website, and saw Newcrest ex-dividend date is the 22nd of the 3rd at 5 cents. This is pretty close to our seasonal date. Is this good or bad, and should we trade around this date when this stuff is happening? Now, the fact that it's a 5 cent dividend means very, very little to, planned dividend anyway, means very, very little to this stock's price, because if it was a $5 dividend, that could mean a big impact. But generally when a stock pays a dividend, it will fall by the value of the dividend. So if we were already short on Newcrest Mining, then the value of our position would increase when the stock goes ex-dividend because the stock will fall. The thing is, if you're the holder of the CFD, you actually pay the dividend. So what will happen is it will net the effect out. In this particular instance, because it is such a small potential dividend payment, I really wouldn't necessarily factor too much in with our discussion. But if if it was a 50 cent dividend, like we're looking at a stock that's currently priced at $34, I think a 5-cent dividend is really not going to push this stock around too much. Okay, does that kind of give you some food for thought, Graham? Hopefully that answers that. I'll go on to Robert's. Sweet. Okay, cool. Robert's asked, when trading into a date, when would you start looking at that trade, and what would you be looking at taking the trade? Well, obviously, trading into a date, we're looking for the market to be moving in the general direction of what we're expecting to be, either a top or a bottom, and just being cautious to, try and trade into that date, but maybe have stop and reverse strategies. Maybe at the first sign of the market moving in the opposite direction, doesn't mean you have to automatically reverse your position, because the market can hover around those dates, but maybe lock in the position or the profit one way or the other, and then wait for a signal to go back out the other side. But probably a week or so either side, I'd probably definitely start looking into my dates. The fact that we have about the 8th of March, as a 10th of March on Newcrest, definitely that would be something I've been watching, mainly to go out the other side from. But as far as the Aussie dollar is concerned, we talked about that. We've got about a week to go or so before, so I'd definitely be thinking about, seeing what I could do into that date. But as I said, I'm probably thinking more out the other side when I know more if it's going to be a top or a bottom. So hopefully that's a little bit of food for thought. All right, no problem. Thanks, Robert. I'm glad that helps. All right, any other burning questions? So much for my 1 hour. I was dead set thinking an hour tonight. 1 hour, that'll be plenty of time. And hear my wife outside stamping around because she's cooked a nice dinner. Yeah, I know, Louise. Optimistic. All right, but anyway. But look, if we've all right, so thanks, Louise. Thanks, Trevor. Thanks, Paul. I'll see you on Sunday. Fantastic. Stephen's asked me a question. Will there be a similar MFC online in the foreseeable future? Oh, geez, interesting question. Depends if you ask my boss or me. If you ask my boss, yes. If you ask me, maybe. So stand by on that. Of course, you'll find out if that's the case. You never die not knowing from us. So not at this stage, in the sense of there's nothing formalised, but you never know your luck in a big city. I know everyone would like an MFC one. I'm getting everyone's pinging me going, MFC. We'll see. How's that sound? So thanks, Ashley. Thanks, Francis. Thanks, Dean. What's for dinner? Don't know. I'll find out when I get out there. Thanks, Annie. No problem, guys. Thanks, Key and Ron. Yeah, all right. I'll do it. I'll see if I can get Tim to do it. How's that sound? Thanks, Lois. No problem. Jose, thank you. Yeah, Paul, it's all been taken care of. 90-day recordings are all taken care of. Thanks, Wayne. Thanks, Mark. Thank you, David. No worries, Steve. I'll come back to you probably in a week or so, Louise, if I can. Thanks, Neil. Thank you, Debbie. Yeah, all right. Ready to run 100 metres. Good stuff, Epi. And thank you, Graham. No problem, Linda. Thanks. See you on Sunday. Ron, see you Sunday. See you Sunday, Darren. Yeah, good luck in Melbourne, Annie. Look after them. You'll have Noel and Tim there. I'm not in Melbourne. Thanks, Elizabeth. See you Sunday. Thanks, Adrian. Thanks, Kendall. See you Sunday. From whenever the last session finished. So not from tonight, probably from session 12, Ashley. Thanks, David. I'll catch you on Sunday as well. But all right, everybody, be well, and yeah, take it easy, and I'll see you on the discussion boards, etc. See many of you on Sunday. If you need to get locked into that, call the office tomorrow, because otherwise it's going to all sell out and book out. But we'll, yeah, no, Albert, I organised to make sure we got that 90 days taken care of. So make the most of it, everybody. So. All right, I'll be in touch. I'll do some of that other work. Stick to the boards. I'll put some stuff on there, and particularly around our turns, I'll definitely have some comments up there at that stage. So everybody be well, take it easy, and it's been a blast. Thanks very much.